Okay. Okay, good morning all. Welcome to the exam oriented batch for September 25 exam. Actually, I did not have you know like strength etc. to take this batch. I thought I will not be able to take batch this time. So because I underwent a knee surgery, so because of that reason, I thought, okay, fine, I will not be able to do etc. and all. But thereafter, many students have messaged me, sir, please take, sir, we are expecting face to face etc. and all. So therefore, I prayed God that it should happen, and at last it happened. I'm so happy that I'm able to take. And next thing, how many of you are listening to this GST for the first time? For the first time, I mean, like, you have not attended any prior classes, but you are attending only now. No one, right? So which means you all have some knowledge about the GST, correct? Yes. But some of you might have written May 25 exam, and thereafter you might not have got the marks as expected. So therefore you might be listening to it, but I never saw or I never heard any student sharing with me that, sir, in taxation I failed in GST. Because invariably May 25 exam, lot of students have been successful in GST mainly because they got the evaluated answer sheets now. So they said that we got 30, 35 like that and all, they got the marks. But the problem is with respect to income tax. In income tax they got only 10 marks or 15 marks etc. So they could not score the exemption. Their marks will be somewhere like 50, 55 etc. And maybe some other subject they would have failed, because of which again you need to write. All these things are fine. But some students said we did not get the marks as expected. So that is because of the presentation part. So because I have seen the evaluated answer sheets etc. and all of many students, what they shared is that, they see, as a student, what you will be thinking, whatever I am writing is correct only, like that you will think. Because you will be biased to yourself, correct? Even if I am a student, what I will do, if I write something, I will think whatever I wrote is correct only. And therefore they should give the marks. Now, see, ICI does the mistakes in evaluation, but doesn't mean that every answer sheet what you have written and if you have failed, it is because of ICI only. Let's stop blaming ICI first. Okay. So first we will blame ourselves and make an effort to improve, and then we will blame ICI. Agreed or not? Okay. So because what will happen is that when you start blaming ICI, which means that you will console yourself, okay fine, it's not my mistake, it is ICI mistake, CA Institute mistake, it is not my mistake. Therefore you will never get the opportunity to rectify yourself. Are you getting this? So first let's blame ourselves and we will try to improve. There is always a room for improvement. Agreed or not? There is always a room for improvement. Say I have achieved something, still there is a room for improvement. Yes. And even if I have got a rank also, still there is a room for improvement. You may get rank, first rank, and even if you got first rank, again, so in final level you should be getting first rank. Are you getting this? There is always a scope of improvement, and that is what our aim should be. And we will try to improve ourselves so that we will get the maximum marks that we can. Okay. So that's where now last time this hall was full. Some 800 students were there. And when the number of students have come down, I asked my team why like that. Because last time around 800 students who attended, 500 students literally cleared. Literally cleared, they cleared. So we should appreciate. And 300 students did not, because we sent SMS, WhatsApp etc. to them. They said, sir, we completed, sir. So happy I felt. And then some more students. So therefore, here what happens is that somewhere we would have made a mistake. Let's analyze that mistake and we should try to rectify it. Okay. Now what you need to do is that you get the, suppose related to GST I am talking about, if you get the evaluated answer sheet from ICI, so in the break time or evenings after class etc., you give me your evaluated answer sheet. I will go through that and next day I will let you know what is my observations, so that you will have a scope for improvement. Is that clear, pa? I am talking about those who appeared for May 25 exam. Get me the evaluated answer sheet. So I will tell you honestly as to, is there a way that you can improve, or really is it because ICI mistake only, like what we all believe that it is ICI mistake. Let's know that fact first. Okay. And I am not talking about other subjects etc. and all, I am talking about my subject related to GST. Then next, how many of you are appearing for September 25 for the first time? Good. And so whatever I share is a learning experience for you, and definitely this will be useful, because we learn out of mistakes, either our mistakes or some other person's mistakes. Is it clear? We will always learn out of mistakes, because if a student has written exam and if he is not able to succeed, definitely that learnings of that student will help us as to what mistakes we should not commit. Clear? So that way it will be definitely be useful. And then coming back to this batch, sir, what do we expect in this batch, sir? We are going to complete the entire portion of GST which is applicable for your CA intermediate exam, and 50 marks. Every chapter we are going to learn. In which way, sir? In a quick revision format. I cannot take in detail because I have only 4 days and the exam is also nearing, and I cannot take a regular batch now. I need to take a revision kind of. So exam oriented we are discussing, and wherever really required, if you feel like we need to add some extra time in that, we will spend that time in that, but we will try to cover the entire portion. That is the agenda for this 4 days. Second agenda is about mighty 50 questions. We are going to cover mighty 50 questions in this batch. Along with the chapters what we discuss itself, the top 50 questions we are going to cover. You might have got one booklet related to mighty 50. You received it? Yes. Kindly bring that to the class daily, because afternoon onwards, whenever we are feeling low, at that time we will do the problems and solutions. Okay. Mornings we will reserve for theory discussion etc. Afternoon onwards we will reserve for problematic discussion to some extent, so that this mighty 50 questions I wanted to cover. And only when we solve questions, you know how it will be applied, because theoretically you know everything, but when we put it into the answer sheet, we find it difficult, because this is a common complaint. Every student told me that, sir, I see the question, I know what is the answer, but I don't know what to write there. The pen is not moving on the answer sheet, sir. It is getting stuck. I know, sir, I know. So whether the activity is supply or not, I know. Who is liable to pay GST, I know. But everything I know in the form of a summary, sir. Yes, no, maybe, like that only I know, sir. But I don't know how to present it. So we need to fine tune that element as well. That's the reason why as many number of questions as you solve, trust me, the success in taxation exam is very simple. The success in taxation exam is how many questions you are solving. That's where the success lies in. Reason being, when you learn something, you will learn, but you will understand, but how to put it, how to apply it, that application knowledge is something which we lack. If you are able to fine tune that application knowledge, definitely miracles will happen. For that, more number of questions we need to solve. And sir, solving does not mean seeing the question, seeing the answer and verifying, yes, for this question, this answer is correct. That is not called as solving. That is called as verification or audit. You understood or not? So you are not here to do the audit. Already The faculty who prepare the book itself will do the audit of that book. What pa? Correct or not? Then what is your role? Your role lies in solving. Then how you need to solve? You should not see the answer. Without seeing the answer, based on the question itself, you should start writing like in exam condition. You all have lost that writing practice according to me. What is that writing practice? So writing practice we have, sir. When something is there, we will see and write. Seeing and writing is not writing practice. Recollecting the information and writing it, that takes time actually. Because today what happened is that you all are using mobiles, and now in the next version you use AI also to copy paste many things, correct? Suppose if you want to draft a mail or you need to do something, what you will do, you will go to ChatGPT, you will ask it and it will give copy paste, which means already your brain half stopped functioning. Now in exam, the analytical capability needs to be improved. So you see the question, you know what is the answer, you write down the points, then you compare what you have written with what is the answer given there. Then you will know where you lack and what mistake you did. Are you getting this? This is known as introspection, a honest introspection we need to make. When we will make? Only when you start solving the questions without seeing the answer. That effort you need to put pa. Initially it will be difficult only. Maybe you may not be able to get the answer, or you will be clueless, or lot of blank time, like you don't know what to do. 5-10 minutes you don't know. Literally you will be seeing the question, you don't know what to do. All these things you need to eliminate at this stage itself, so that these mistakes will not happen in exam hall. Otherwise, whatever mistakes that I am telling now, like when you see the question paper, your mind becoming blank, or you are unable to write any answer, you look at all the people who are sitting in the exam hall. So these things and all will happen in the exam hall, and for which you need to pay a price called as next attempt. You understood? So therefore, we should not do that. Agreed or not? So tell me what you need to do now. Practice more questions. How you are going to practice more questions? By seeing the question and answer, or just seeing the question? Seeing the question. And where you need to write the answer? Somewhere in a page. And thereafter you need to cross check whatever you have written versus what is being given in the book. Is it clear? So please follow that. Definitely it will be helping you out. And we are going to solve the same way the mighty 50 questions also we will be trying to cover. But this is the best 50 questions. But if you ask me, from these 50 questions only exam will happen, sir. If that be the case, rather than giving that booklet for free to you, I would have sold it for 10,000 rupees. If from that only questions come in exam. Correct or not? Easily I can. Won't you pay pa? Same questions you are going to get in exam, like that means, will you pay or not pay? Definitely anyone will pay, because only this much I have to read and I need to go for the exam. But no, these 50 questions covers the overall portion. Out of this, some questions may come. If your luck is too good, majority of the questions may come from that itself. But we are going to cover 50. Is this 50 sufficient? This 50 will not be sufficient, but at least if you are appearing for both the groups, the number of days that you have is very, very less. So therefore, this 4 days we will spend on only GST, and we will try to revise it and complete it, done and dusted. Thereafter, we need to do only revision 1 day before the exam, or any mock test that you are preparing for. Is that clear? Fine. I am not listening anything from you. No energy. Why pa? Did not have breakfast? Had or not had? Then why? Why so much depressed or etc. like that? I am not able to see the bright faces. Maybe I lost the eyesight, I think. Okay. And but you seem dull. No, with good energy we will start. Come on. What we are going to do this September 25? Clear? Yes or no? Clear what? CA Inter. Clear CA Inter. Correct. So what is your last attempt for CA Inter? I didn't listen. I didn't hear. What is your last attempt for CA Inter? Keep that in mind. Got it? Some way or other we need to clear this September exam. With that spirit, daily morning you need to get up and think of that only, nothing else. This attempt is my last attempt. I will do whatever I can to ensure that I am becoming successful. Is it clear? Now, let's start with the GST revision. So you can see this is the index. These are all the chapters that we have: basic concepts, supply, liability to pay GST, exemption, time of supply, place of supply, value of supply, input tax credit, composition scheme, invoice, debit and credit notes, registration, TDS, TCS, payment process, returns under GST, accounts and records. In this, there are some neglected topics. Lot of coaching centers also will not teach all these chapters. What they do is that because of the limited time, etc. and all, they teach exemptions properly, liability to pay GST properly, and this input tax credit they will teach, and maybe here and there they will be touching and they will be going. But actually speaking, overall you need to read, because we are trying to score minimum to minimum 40 marks out of 50 marks. That is our target. How much pa? 40 out of 50. At any cost, taxation paper we should not fail. So 40 to GST will take care, and 20 marks from income tax. Thereby we should be aiming for exemption. Is it clear? Strategically, see, I am not telling that income tax is a waste subject, etc. and all. You don't add like this. What I said is that strategically income tax takes lot of time. Income tax, GST, both are same only, but the amount of effort you need to put in case of income tax is more compared to GST. Volume wise GST is less than income tax. So therefore with lesser effort you are able to score maximum marks. Means we need to give importance to that only, na? Agreed or not? So that's why we are giving importance to GST, and we will try to score minimum 40 marks. Income tax also I prepared superbly, sir. I am going to get 40 there also. Awesome, 80 marks. Many students got last attempt. 80s, 70s, 80s, like that only they have got. Very good. Because that is going to push your aggregate to a greater extent. Because we have this, paper 1 accounting and law, these two papers. Even if you are not able to score that much, this taxation paper will push. And for those who are writing both the groups, taxation paper will even push group 2 also. Because in group 2, if you get 40, 40, 40 also, it's okay, aggregate problem will not be there if you are aiming more marks in taxation. Is it possible, sir, to score? Possible, yeah, that's what I am telling. It is possible. How many of you are appearing for both groups? Definitely for you it will be beneficial. Definitely it will be beneficial, because group 2, if you see, auditing is not a dependable subject. Some attempts you will get marks, some attempts you will not get marks. It's not a dependable subject. FM and SM also same way, because FM you will be able to manage, but suppose FM is little bit difficult, again getting 40s will be very difficult there. And next we have this costing, again not a dependable subject. Some attempts costing, no, they will give marks like crazily, 90 marks, 80 marks, like that some attempts they will give. Some attempts and all they will be giving only 40s and 50s. But if you are really serious about clearing CA Inter, both groups, taxation will definitely help you, because it is very, very easy to get 60 to 70s and 80s in taxation. Simple, aim for minimum 40 in GST, definitely you will be able to get. So which chapter, sir, I need to give more importance in order to get maximum marks? You can see I gave a ABC index here. And which book I am using? I am using revised GST book. So if you already have this book, if you have purchased for May 25 exam, no need to buy any new book. The same book we are going to use. We are not going to have any new book. I did not make any new book, because at that time itself I gave September 25 amendments also in the book itself. So therefore you don't have to buy any new book. Just this will be sufficient. And when it comes to those who are attending this batch for the first time, you can definitely invest on this book. It will be worth it. Trust me, it will definitely be worth it. Okay, you can check and then you can buy also. And this are the A category topics here. Liability to pay GST. Mainly here we are going to learn about RCM, reverse charge mechanism. And then place of supply. Next, value of supply. What is place of supply means? For every transaction there will be a place of supply that determines whether a transaction is intrastate supply or interstate supply. So what is the meaning of intrastate supply? Two factors. What are the two factors? Come on. Location of supplier and place of supply. If both in the same state or same union territory, what is the name of it? Intrastate supply. If location of supplier and place of supply is in two different states or two different union territories or a state and a union territory, then it will be known as interstate supply. What determines whether a supply is intrastate or interstate? That is this place of supply, because location of supplier will be available in the question itself where they are registered. But what you need to identify in the question is the place of supply. Mainly this first question is there, not 10 marks question. So after that 15 marks MCQs in GST, part B, question number 1 is compulsory. In that question number 1 is for 15 marks. In that one 10 marks question is there, 5 marks question is there. That 10 marks question definitely includes place of supply, because for every transaction we need to check what is the place of supply and accordingly put it under CGST, SGST or IGST column. Because what we need to do is that we need to prepare the liability statement. That liability statement will have particulars, then 3 columns: CGST, SGST, IGST. If it is an intrastate supply, what is the type of GST? CGST and SGST. If it is an interstate supply, what is the type of GST? IGST. Which means as soon as you see the question, you need to know whether it is an intrastate supply or interstate supply. For that purpose, place of supply plays a crucial role. Sometimes a standalone question also will be given on place of supply for 5 marks, because after question number 1, thereafter the next questions you have to write any 2 out of 3. Each question will be for 10 marks, 5 marks and 5 marks. Okay. So in that 5 marks question, a standalone question may come on place of supply. Then value of supply. Value of supply talks about the valuation as to what should be taken as value for payment of GST. Last attempt also they asked one question, one 5 marks question on valuation. So every 2 attempts once they will be giving question on valuation. Then input tax credits, very important chapter. Then exemptions and time of supply. These 6 chapters alone constitute 50%, which means your 25 marks lies in this 6 chapters. And these 6 chapters at any cost you need to be thorough with. And anyhow we are going to cover all the chapters. These chapters also we are going to cover. But I said now first you need to solve more number of questions. At least in this you try to solve more number of questions. If you are not able to solve in all chapters, all the questions, in this you try to solve more number of questions, definitely that will help you. And then B and C category topics are how to solve more number of questions. So we have practice manual. So you can buy that practice manual and practice the questions, or you can buy some compiler, any compiler you can buy and you can do that. But there is one disadvantage from solving the questions from ICAI sources itself. In ICAI website also lot of suggested answers, lot of RTPs they gave us, that also we can solve. Yes, but the problem is it is not as amended. All those were based on the provisions at that time. What's the point in learning the provisions at that time? It is of no use. You need to know for that question what is the amended provision. That's the reason why buy any compiler. I'm not telling that you have to buy mine only, any compiler you buy. I also did the compilation with lot of amendments etc. and all I incorporated. Either you buy that or anything if you have, you can make use of it. But make use of those compilers and start solving as many questions as you can. Okay. Then we are moving on to the first chapter. Sir, are we going in the same order? No, we are not going in the same order, because what happens is that every time you will give importance to supply, you will give importance to exemptions, etc. and all. But there are some topics which you neglect, like returns, payment process, registration, etc. and all. We usually neglect that and go for exam. That's the reason why I wanted to cover the other topics first, and then we will see the core topics. Okay, so that's what I wanted to do for this time. And see the first chapter. First chapter we will see. First we need to know as to what is GST, etc. and all these things you might have studied, but just as a revision we are doing. You tell me, what is GST, goods and services tax, correct? It's a value added tax. Why it is called as a value added tax? Because we pay tax based on the value addition. How, sir, we pay tax on value addition? Simple pa. I am selling a product at 10,000 rupees. I purchase the product at 8,000 rupees. Really speaking, I need to pay GST only on, I purchased the product at what rate? 8,000. And I sold the product at what rate? 10,000. Seriously, I will pay GST on what? 10,000 or 8,000? 10,000. So on 10,000, let's take 10% is the GST. And 10,000 into 10% is what? 1,000 is called as my gross liability. And I will be getting input tax credit. What is input tax credit? Tax paid on inward supply. What is input tax credit? Tax paid on inward supply. So 8,000 into 10%, that will be 800. This is called as ITC. Now from this 1,000, I will reduce 800. Effectively, how much is the net liability that I will pay to government? 200. So the 200 is nothing but 10% on value addition. Agreed? The 200 is nothing but 10% on value addition. That is 8,000 and 10,000. What is the difference? 2,000. That is a value addition. Value addition means what? Increase or profit. Anyway, you can call it as. And 2,000 into 10% is what we are paying as GST. Which means GST is a value added tax. Levied on what? Supply. What is supply means? Supply is defined. That is the next chapter. We have a lot of activities which are treated as supply. So supply, it can be manufacture, it can be sale, or it can be services. So all those things will come under supply. So what is a taxable event under GST? Supply. Taxable event means what? One event on happening of which we will pay the tax. That is called as taxable event. For levy of house property, what is the event? For levy of tax on house property income, what is the event? There should be income from house property, means you should have a house property and that you should have given on let out. What is the levy for the purpose of capital gains? Transfer of capital asset. There should be a capital asset and you should have transferred the capital asset. Only then there will be capital gain tax, correct or not? Like that, for every tax, one reason will be there. What is that reason? Is called as taxable event. So what is the reason for GST? Supply. What will come under supply? Sale, transfer, barter. Like that, we have a lot of activities which will be coming under supply. Correct? Next, how GST is formed? Is GST a new law or subsuming old indirect taxes they created GST? Definitely subsuming old indirect taxes. What are the old indirect taxes that got subsumed into GST? Central government previously used to levy some taxes that got subsumed into GST now. Subsumed means what? Merged. What are those central government taxes that got subsumed? Come on. Not VAT. VAT was levied by state government. Central excise duty. I am talking about central government. Central excise duty. Then central sales tax. Then service tax. These three. Subsuming these three, they created GST. Okay. That is central government levy. What about customs? Is customs duty subsumed in GST or not subsumed in GST? Not subsumed in GST. But in customs, there used to be some additional customs duties. These additional customs duties are to counterbalance excise duty and sales tax. Simple. On imported products, there won't be excise duty, sales tax in the past. Only on locally manufactured goods, excise duty and sales tax will be there. To counterbalance that, on imported goods also it should be there. For that purpose, they brought in additional customs duties called as CVD and SAD. Whether additional customs duties also got subsumed into GST? Yes. So, what is the first point that you need to remember? All indirect taxes levied in the past by central government. What are they? Excise duty, service tax and central sales tax got subsumed into GST. Whether customs duty is subsumed into GST or outside the ambit of GST. Means even today customs duty is there. Then next, when customs duty is applicable? On import or export of goods. So on import or export of goods, GST will not be applicable. On import or export of goods, what is applicable? Customs duty. So customs duty is applicable on import or export. On import or export of goods. On import or export of goods, customs duty is applicable. Customs duty is outside the ambit of GST. However, additional customs duties. What are additional customs duties? CVD and SAD. CVD refers to what? Countervailing duty. SAD refers to what? Special additional duty. That is to counterbalance excise duty and sales tax. Whether that also got subsumed into GST? Yes, that also got subsumed into GST. Then some state government indirect taxes. What are the state government indirect taxes that got levied? Total 6. Total 6. VAT. Next. Entertainment tax. 4 more. Octroi. Octroi also called as entry tax. Next. 3 more. Luxury tax. Advertisement tax. Betting and lottery tax. Lottery betting tax. So total 6. Total 6 that got subsumed into GST. You can see there. Value added tax. Advertisement tax. Value added tax was on sale, intra-state sale in the past. Advertisement tax on hoardings, big hoardings they used to pay. Luxury tax on hotel accommodation. Entertainment tax on this DTH, cable. Then actors, serial actors, cinema actors, etc. they used to pay. That is entertainment tax. Then lottery and betting tax on sale of lottery tickets and betting transactions. Then purchase tax, also known as octroi. That is, if you are buying, if you are in Tamil Nadu and if you buy any goods from other state, you were used to pay purchase tax. All these 6 got subsumed into GST. Then some other indirect taxes levied by state government not subsumed into GST. Tell me, what are the examples of indirect taxes levied by state government not subsumed into GST? I am talking about duties which are levied by state government not subsumed into GST. Carefully listen to the question. I am not asking goods. I am asking what are the duties or taxes even today levied by state government but which is not part of GST. What are they? Property tax, okay, very good. Next. Municipal tax, then stamp duty, have you heard of stamp duty? Next. Professional tax, very good. Then local body tax, these are, and state excise duty. These are all some examples of indirect taxes levied by state government not subsumed into GST. Should we remember that, sir? Not necessary, but in MCQ they will be asking which of the following is subsumed into GST or not subsumed into GST. There it will be helpful. You remember 6. You remember 6. Only those 6 got subsumed into GST. So here I have given indirect taxes not subsumed into GST, state excise duty, professional tax, local body tax, stamp duty, etc. Whether indirect taxes levied by local authority got subsumed into GST or not subsumed into GST, not subsumed into GST. So whether local authority also will levy indirect taxes? Yes. Example, entertainment tax levied by Chennai Municipal Corporation, which is not subsumed into GST. That's the reason why that entertainment tax even today on movie theaters, on cinema tickets, there is entertainment tax. That is levied by whom? That is levied by local authority. However, entertainment tax and other indirect taxes levied by local authority not subsumed into GST. So quickly we need to remember this 5 points. Number 1, how GST is formed, like that if you get a theory question, because your last question is a theory question. And that theory question many times it will help you, because if you don't know any question, if a particular question is so critical, you can use that theory question also, because in theory question what they will do is that they will be giving like a 5-mark question or a 3-mark question or a 2-mark question, like that. But you know, last attempt lot of students have written this 7-1C, supply without consideration. They asked in the last attempt, May attempt, but the marks they did not get. You know what they wrote? They wrote like, we have learnt what are the activities which are excluded from supply means. I said them to remember a mnemonic called as DRIP, D-R-I-P. D means disposal of business asset on which ITC availed. Then R for related party transaction, including transaction between distinct person. I for import of service from a related person or other establishment located outside India. Then P for principal agent transactions. So nice. They learnt, they remember, they wrote the same way. You understood? Means what? DRIP like that they wrote. Why you will get marks? 1 mark also will not get. They have put 0. They have put 0. You will not get marks. Hey, mnemonics I am asking you to remember means that is for recollecting, idiots. Not that the same thing you need to write in exam. Now have minimum common sense here. And if you are doing like that, how you will get marks? You will not get the marks. You should not write those mnemonics and all. Because ICI hates that. They will not give marks. You should remember, but when you are writing, you should write like points. And to the extent possible, you need to reproduce it like the law. What is that? As per section 7, subsection 1, clause C, read with schedule 1 of CGST Act, the following activities constitute supply, even though without consideration. Like that they need to write. And they have written just like that. You know, casually when we ask, no, they will tell, na, like that casually. No. When you are writing, just ensure that you are a lawyer and you are writing. You got it? So it is like in Chandramukhi movie, you know how Rajnikant will visualize, like I am Vetayan, and Vetayan will come into him and he will act like Vetayan. Correct? Like that you should also. You should think that you are an advocate and you are drafting it. So like that you should write. You should not write like SMS language, how you will send it to your friend and all. Got it? Stop using that kind of language. Try to write to the extent possible the legal language. You got it? Fine. Coming back to this, theory and all, they may be asking, but worst come scenario only you write the theory answer. Because theory they will not give full marks. They will give 1 mark or 2 mark, etc. and all. So rare case, worst come scenario we will write the theory. Maybe if you don't know the answer, like first question you will know, you will write 15 marks. But next you need to write 2 na. In the 2 if you don't know 1, definitely you will write the last question, that is a theory question. Because it will be mix of theory and practical. Rarely you do that, don't write just like that because marks will be less because of it. Okay, fine. So what are the 5 points you need to remember for how GST is formed? Number 1, all indirect taxes levied by central government. That is central excise duty, then central sales tax and service tax got subsumed into GST, customs duty not got subsumed into GST. However, additional customs duties like CVD and SAD got subsumed into GST, and indirect taxes levied by state government, 6 indirect taxes, that is value added tax, advertisement tax, luxury tax, lottery and betting tax, and then entertainment tax, octroi, that is purchase tax. These got subsumed into GST. But other indirect taxes levied by state government not subsumed. Also indirect taxes levied by local authority not got subsumed into GST. Whether India follows single GST model or dual GST model. What is dual GST model means? Both central government and state government will levy tax on the common tax base. That is called as dual GST model. When you go to a restaurant, you eat food for 500 rupees. There will be 2.5% GST and 2.5% SGST, CGST. Correct? Same way, when you attend coaching in any coaching center, the coaching center will raise invoice to you. In that invoice, there will be 9% CGST and 9% SGST. So that is a case of dual GST. The CGST will go to which government? Central government. SGST will go to which government? State government. So which means both central government and state government has power to levy GST? Yes. On the common tax base, they will be levying it. Is that clear? Income tax, single tax model or dual tax model? Single tax model. Because only central government will collect it and they will retain it, and if they want, they will give it to the state governments. Whichever state governments is in need of funds, they will be giving it to that state government. That is single tax model, but GST is not. And GST, dual GST model, we copied from which countries? Brazil and Canada. See that. India has adopted dual GST model through Constitution 101st Amendment Act. So whether there is a need of Constitution amendment for bringing GST? Yes. What is the Constitution Amendment Act? Which year they have passed the Amendment Act for Constitution for bringing GST? 2017 or 2016? 2016. But GST law came with effect from 2017. but the constitution amendment was there from 2016, and from where we copied Brazil and Canada. And what is dual GST model, where both central government and state government has power to levy tax on the common tax base. Then next area, GST Council. GST Council is the decision making body under GST. So basically central government also will take decision, state government also will take decision. Then there is a need of a common body. That common body is known as, come on, GST Council. GST Council is a government body or constitutional body. Constitutional body. So it derives the power from constitution. What is the constitution article? Article 279A of the constitution. That is important. Okay, for MCQ it will be useful. Article 279A of the constitution. Who constituted it? President of India. Who are the members of this GST Council? Union Finance Minister, number one, and Union MP in charge of Union Territories. Union Territories. We have 5 Union Territories. What are the 5 Union Territories that we have? What are the 5 Union Territories we have? Daman, Diu, Dadar, Nagar, Haveli. This is one Union Territory. Daman, Diu, Dadar, Nagar, Haveli is one Union Territory. Then Chandigarh, another Union Territory. Ladakh, yet another Union Territory. Goa is not a Union Territory. It's a state. Pondicherry is not a Union Territory. It is treated like a state. Lakshadweep, Andaman and Nicobar. These are the 5 Union Territories which are under the central government control, which will be treated as Union Territory for the purpose of GST. What are the 5 pa? Again I am repeating, easily remember. Andaman, that side, Andaman and Nicobar. This side, Lakshadweep. Okay. And next, on the above to us, Tamil Nadu, Chandigarh. Okay. Then near Maharashtra, we have Daman, Diu, Dadra, Nagar, Haveli. Got it? And on the top, that is Jammu and Kashmir, we have Ladakh. So these are the 5 Union Territories which are under the control of central government. And there are 3 Union Territories which are treated like state only. What are those 3 Union Territories treated like state? Namesake only Union Territory, but it is treated like state only. What are they? Jammu and Kashmir, Puducherry, Pondicherry and Delhi. These 3 are treated as Union Territories with state legislature, means it is treated like a state. Goa is not a Union Territory. Keep that in mind. It's a pure state. It is not at all coming under Union Territory with state legislature also. Okay. Then say this, for these 5 Union Territories, one Union MP will be there. So that is number 2. So who are the members of GST Council? We are trying to understand. Number 1, Union Finance Minister. Number 2, Union MP in charge of revenue for state affairs. Number 3, for 31 states, we will have 31 state finance ministers. How 31 states? How many states are there in India? 28 only. How 31 we got? 28 plus these 3 Union Territories with state legislature. What are the 3 Union Territories with state legislature? Jammu and Kashmir, Delhi and Puducherry. So if you add to 28, that will become 31. So you can see here, total 33 members will be there. How 33 members? Already I told you, count. So state finance ministers and MP of state affairs in charge of revenue are its members. And it is a decision making body of GST and Union Finance Minister is its chairman. To take any decision, how much majority is required? In the council, lot of members will be there. What majority is required? Simple majority or 3/4 majority? 3/4 majority. What is simple majority means? 50%. But 3/4 majority means 75%. More than 75% is required. So 3/4 majority is required. So weighted majority required to take a decision is 3/4. That is greater than 75%. Whether central government vote and state government vote have the same weight? No. Central government vote will be having 1/3 weight and state government vote will be having 2/3 weight. Is it clear? Central government vote will be 1/3 weight and state government vote will be 2/3 weight. And then next one, types of GST. What are the various types of GSTs that we have? CGST, SGST, UTGST, IGST and GST compensation cess. When CGST? Intrastate, interstate? Intrastate. What is intrastate? Already we know. Intrastate means location of supplier and place of supply in the same state and same union territory. For example, supplier in Tamil Nadu, place of supply also Tamil Nadu. What is it? Intrastate supply. And CGST is applicable in case of intrastate supply. Who will levy CGST? name itself we have central government. CGST full form is what? Central government GST, goods and services tax. So who will levy? Central government. Number 2, SGST, who will levy? State government. When? Intrastate. Intrastate. Then UTGST. What is UTGST full form? Union Territory Goods and Services Tax. When is it levied? Intrastate only. But intrastate in Union Territory, which means location of supplier is in Chandigarh, place of supply also Chandigarh. Okay. Then it will be UTGST that will be applicable. And who will levy UTGST? Union territories will not levy. Central government only will levy, because all union territories are under whose control? Central government control. And then IGST. What is the full form of IGST? Integrated Goods and Services Tax. Who will levy? Central government. When it will be levied? On interstate supply. What is interstate supply? Location of supplier and place of supply is in two different states. For example, supplier in Tamil Nadu, place of supply in Karnataka. Supplier in Tamil Nadu or place of supply in Maharashtra, like that. Two different states or two different union territories. Supplier is in Chandigarh and place of supply is in Ladakh. Okay. So, two different union territories, or a state and a union territory. Suppose supplier is in Tamil Nadu and place of supply is in Andaman and Nicobar, like that. So, what is interstate supply pa? Location of supplier and place of supply are in two different states, two different union territories, or a state and a union territory. Then what is the name of the tax? IGST. So IGST is levied on interstate supply by central government. Then GST compensation cess. What is the need of GST compensation cess? Because of implementation of GST, everyone carefully listen. Because of implementation of GST, there is a loss of revenue to the state government, because previously entire revenue, indirect tax revenue of sales tax was going to state government. Now there is a sharing. 50% will be taken by central government and remaining 50% will be taken by state government. Okay. So let's try to understand this with the help of one small illustration. Say this. That is, there is a supplier. That supplier is located, that supplier, no need to make note, just listen. That supplier is located in Tamil Nadu. And where is the recipient located? The recipient is located in Karnataka. And before, what is the effective date of implementation of GST? What is the effective date of implementation of GST? 1/7/2017. Before 1/7/2017, if the supplier is making supply to the recipient, before 1/7/2017, it is called as a interstate sale. It is called as a interstate sale. And what is the type of tax that will be applicable? The type of tax will be CST, Central Sales Tax. This Central Sales Tax will be collected by the supplier from the recipient, and this will be payable to Tamil Nadu government. So this will be payable to Tamil Nadu government by the supplier. So this CST is fully retained by Tamil Nadu government. Is it clear? Fully retained by Tamil Nadu government, not central government. Even though CST is levied by central government. What is the full form of CST? Central Sales Tax. Even though levied by central government, but it was fully retained by state government. This is when before 1/7/2017, with effect from 1/7/2017. What has happened? With effect from 1/7/2017, same story. Supplier, where is the supplier located? In Tamil Nadu. Supplier is located in Tamil Nadu, and recipient is located in Karnataka. Supplier in Tamil Nadu, recipient in Karnataka, and place of supply is also Karnataka. Okay. Now what is the name of this supply? Interstate supply. Previously it was called as interstate sale. Now it will be called as interstate supply. What is the GST that will be collected by the supplier from the recipient? IGST. So price plus IGST will be collected by the supplier, and the supplier has to pay this IGST to which government? Central government. So he will pay IGST to central government. This central government, what it will do? 50%. 50% who will retain? Central government will retain. Retained by central government. Are you understanding here? 50% retained by central government. Remaining 50% to whom they are giving, because India follows what model? Dual GST model. Dual GST model means entire 100% they will not be able to retain. So they have to share 50%. So 50% they will share with whom? With state government of Karnataka, which is a consuming state. So which means GST is a destination based consumption tax. GST is a destination based consumption tax. So it will go to the consuming state. Now see what happened. Previously entire money was retained by Tamil Nadu government. Now what happened now? 50% went to central government, 50% goes to Karnataka. Same transaction before 1/7/2017. Tamil Nadu government was getting money. Now Tamil Nadu government will not get 1 rupee money also. Correct or not? 1 rupee tax also they will not be getting. So because of which is there a loss of revenue to the state because of implementation of GST? Yes, there is a loss of revenue. Means I'm not telling that they will not get any revenue. They will definitely get some revenue, but the revenue may fall compared to previous. To compensate this loss, central government is telling to the state government, don't worry, I will give you this loss compensation. And this purpose, they have created a new tax. Who created? Who gave the promise? Central government gave the promise. To whom they gave the promise? State government. Which is state government? That state government which suffer the loss. Because of what reason? Implementation of GST. Got it? So this compensation who promised by? Central government. Means they need to pay out of their pocket now, but they are not paying out of their pocket. They created a new tax. What is the name of that new tax? GST compensation cess. What is the difference between tax and cess? Tax means it can be collected and used for any purpose. If government is collecting tax, they can use it for giving 1000 rupees to people, or they can use it for construction of building, they can use it for construction of dam, bridges, statue, anything they can use. You got it? Yes, pa, they can use for any purpose. So like to renovate Vallur Kotam or any purpose they can use. But when it comes to cess, it should be used only for the purpose for which it has been collected. So GST compensation cess collected should be used for what purpose? Compensating the states on account of loss due to implementation of GST. Health and education cess should be used for what purpose in income tax? Only for the purpose of health and education. Like that, whenever they call it as cess, that should be used only for that particular purpose. Understood? Now, GST compensation cess is applicable on all goods or notified goods? Notified goods, not on all goods. And these notified goods, whether it is interstate or intrastate, GST compensation cess will be applicable. How do we know that whether it is a notified goods or not, sir? It will be given in the question itself. So it will be given in the question itself whether it is notified or not notified, and accordingly you need to take that. So see there, GST compensation cess is levied on which goods, pa? Notified goods by central government to compensate the states on account of implementation of GST. And up to when the GST compensation cess will be levied on notified goods? 31st March 2026. Thereafter, sir? Thereafter depends. If GST Council decides, it will continue, otherwise it will be stopped. Okay. So what are the examples of goods on which GST compensation cess is there? Any examples? Motor vehicles. On cars there is GST compensation cess. Then on aerated waters means beverages, sodas, etc. Pepsi, Coke, Thumbs Up, 7-Up. On this also there is GST compensation cess. Then on mineral water also there is GST compensation cess. On coal there is GST compensation cess. On garments there is GST compensation cess. Is it clear? On all these are the examples of goods on which GST compensation cess is applicable, but it is not for exam purpose, just for your information I am telling you. Got it? And in question itself they will give whether GST compensation cess is there or not. If it is there, then you do the computation, otherwise not required. Is it clear? But just to know what is the date up to which GST compensation cess is applicable, up to 31st March 2026. Now this is what we have discussed. IGST is levied by whom? Central government, and 50% of that IGST what they will do? They will give it to state government. They will give it to state government because dual GST. And which state government? Originating state or consuming state? Consuming state. So that they will determine based on place of supply. IGST is levied by central government and 50% of that is transferred to state based on place of supply. What if place of supply cannot be ascertained? When place of supply cannot be ascertained? there are certain transactions which are regarded as deemed interstate supply. Example I will give you. Supply to SEZ is a deemed interstate supply. Carefully listen. There is a supplier. Where that supplier is located? That supplier is located in Tamil Nadu. Okay. And making supply to a recipient who is located in SEZ in Tamil Nadu. SEZ in Tamil Nadu. What is special economic zone means? A notified area where government has created the infrastructure and people will come and do business inside that SEZ to encourage the exports they are doing it. So what government will do? Government will create a infrastructure. For example, Tidal Park is one example of SEZ. Then SIPCOT. So near Sri Perumbudur, that is also an example of SEZ. What they did? They created a area, and in that area they create lot of infrastructure like road, electricity, water facility, everything. And people who do manufacturing and export will come and do business over there. That is called as SEZ units. Okay. So therefore recipient is in SEZ in Tamil Nadu. Supplier in Tamil Nadu who is making supply to a recipient who is in Tamil Nadu. Means logically, and place of supply is also Tamil Nadu. Is it intrastate or not? Because where the supplier is? What is the place of supply? What is that I told you for intrastate supply? If location of supplier and place of supply is in the same state or same union territory, then it will be called as interstate supply or intrastate supply. Intrastate supply. Correct? Intrastate supply it is actually. Am I right? Respond yaar. It is intrastate supply. But the law says that it is deemed interstate supply. Deemed interstate supply. Deemed interstate supply means what? Means even though it is intra, you treat it like inter only. So therefore, what will be the type of GST that will be applicable? CGST, SGST, IGST? IGST. Price plus IGST. Again, remember carefully. There are some transactions which are regarded as deemed interstate supply. In that case, IGST is applicable. So, can we distribute it to Tamil Nadu? No. This IGST 50% will go to central government. Remaining 50% will go to consuming state. But how do you know the consuming state? Based on place of supply. But the problem here is that the place of supply is Tamil Nadu only. Means are we going to distribute it to Tamil Nadu? No. The place of supply is not known. If the place of supply cannot be ascertained, why place of supply cannot be ascertained? Because in this case it is a deemed interstate supply. When it is a deemed interstate supply, we will not check place of supply. Understood? Supply to SEZ is a deemed interstate supply. The moment it is a deemed interstate supply, we will not check place of supply. Then what it will be? Either place of supply not known. Then what they will do? Fully central government retain? No, they cannot retain. What they need to do? Read. What they will do? It shall be apportioned between the states based on the turnover of the supplier during the financial year. What does it mean? So this particular supplier will have turnover during the previous year. Say they are making sale to Karnataka, sale to Tamil Nadu, sale to Andhra Pradesh, sale to Telangana. Like that they have turnover. Say 40 lakhs, Telangana 30 lakhs, Andhra Pradesh 20 lakhs. So this IGST 50% will go to central government. Correct? Remaining 50% will go to state government. In what ratio? In the ratio. Which state government? Which state government? 50% to Karnataka, Telangana and Andhra Pradesh. In what ratio? 4:3:2 ratio. Understood? Got the clarity? So if place of supply cannot be ascertained, what they will do? They will apportion it between the states based on turnover ratio. Therefore, GST is termed as destination based consumption tax. Clear? Next, this is what we have discussed: intrastate, interstate. So if the supply of goods or service or both is taking place, that is a taxable event under GST. What is taxable event under GST? An event on happening of which we need to pay GST. That is taxable event. What is a taxable event? Supply. Supply of goods or services. This supply is divided into two: intrastate, interstate. Already we learned intrastate, location of supplier, place of supply in the Same state or same union territory. Interstate means two different states, two different union territories, and a state and union territory. And state of Jammu and Kashmir is divided into two union territories. So Jammu and Kashmir is not a state now. It will be two union territories. One is Jammu and Kashmir, another is Ladakh. Union territory of Ladakh, union territory without state legislature. Which act is applicable there? In Ladakh, which act? SGST Act, UTGST Act, UTGST Act. Keep this in mind, pa. Which act is applicable in which places? You should be keeping that in mind. What are the three union territories I told you, which is having state legislature? Union territory with state legislature. Union territory with state legislature. What are those union territories with state legislature? Jammu and Kashmir, Delhi and Puducherry. For this Jammu and Kashmir, Delhi and Puducherry, what is the type of GST that will be applicable? SGST or UTGST? SGST. SGST will be applicable. SGST Act will be applicable. And union territory without state legislature. What are union territories without state legislature? Andaman, Lakshadweep, Chandigarh, and then we have Daman, Diu, Dadra, Nagar Haveli, then next Ladakh. And for this, what is the type of GST that is act applicable? UTGST Act, SGST Act. UTGST Act, which means if the supply takes place within Jammu and Kashmir, Delhi and Puducherry, the type of taxes will be CGST plus SGST. If the supply takes place in Andaman, Lakshadweep, Chandigarh, Daman, Diu, then Ladakh, then it will be CGST plus UTGST. So that's what I have given here. State of Jammu and Kashmir is divided into two union territories. Union territory of Ladakh. So Ladakh, which act will be applicable? UTGST Act will be applicable. And union territory of Jammu and Kashmir. For Jammu and Kashmir, which act will be applicable? SGST Act will be applicable. And previously we have Dadra, Nagar Haveli and Daman Diu as separate union territories. Now it got merged into single union territory. Now see this. You need to answer based on this. Location of supplier Tamil Nadu. Place of supply also Tamil Nadu. What is the nature of supply? Intrastate or interstate? Intrastate. What is the type of GST? CGST and SGST. Location of supplier Tamil Nadu. Place of supply Karnataka. What is the type of GST? Intra or inter? Inter. The type of GST will be IGST. In this IGST, will 50% goes to state government of Karnataka? Yes. Napa, we discussed that only. IGST fully not retained by central government. 50% only they can retain. Remaining 50% they need to give to the consuming state. What is the consuming state here? Karnataka. Therefore, they need to give 50% to Karnataka. Is that clear? Whereas in the previous case, Tamil Nadu, what are the taxes? CGST, SGST. CGST will go to, SGST will go to Tamil Nadu, state government. Second case, it is interstate, IGST, 50% retained by central government and remaining 50% given to Karnataka. Next, Jammu and Kashmir and Ladakh. Type of GST, CGST, SGST, IGST. First, interstate, intrastate. Interstate, because these two are different union territories. Interstate. What is the type of GST? IGST. Who will collect? Central government will collect. And thereafter 50% they will give it to? No. Because Ladakh is under whose control? So 100% retained by? Understood or not? Yeah, Ladakh is under central government control. Why they will give 50% to Ladakh? That is retained by central government. Means in this case entire 100% is retained by central government. Next one. Ladakh, Jammu and Kashmir. Location of supplier Ladakh and place of supply Jammu and Kashmir. Nature of supply intra or inter? Interstate supply. Type of GST? IGST. Who will collect this IGST? Central government. And will they give 50% to Jammu and Kashmir? Is Jammu and Kashmir union territory with state legislature or without state legislature? With state legislature, which means definitely they will be getting that 50%. Is it clear? Then next, location of supplier Ladakh, place of supply also Ladakh. What is the nature of supply? Intrastate. What is the type of GST? CGST and UTGST. CGST will go to, UTGST will go to. Then why there is a two separate heads? Because they need to know how much is earned by UTGST. How much is earned by UTGST, separately they want to make a heading. Example, P&L account when you are making, salary is also same, wages also same, rent also expenditure, everything is expenditure. They can put it in simple expenditure and they can complete the finalization of accounts. Napa. Why printing and stationery, rent, salaries, like that they need to split. Just to understand how much is spent for each and every reason. Okay, like that, how much is revenue from UTGST they need to know. That's the reason why we have a separate accounting head called as UTGST for that purpose only. Okay, next. Jammu and Kashmir, nature of supply, intrastate, type of GST, CGST and SGST, location of supplier Tamil Nadu, place of supply Puducherry. Now, inter. Sir, Jammu and Kashmir CGST plus SGST or UTGST you said? SGST only, because Jammu and Kashmir is a union territory with state legislature. Tamil Nadu and Puducherry, inter, type of GST, IGST. Will the 50% go to Puducherry? Yes, because Puducherry is a union territory with state legislature. So it is treated like a state government. So that's what I have given there. And next you can see GST network. Basically, GST network, it provides information technology infrastructure for implementation of GST, because today lot of interaction between the taxpayers and the government is through the network, GST network. For example, if you want to do registration, if you want to file returns, if you want to pay taxes, if you want to claim refund, everything will happen through the GST network only. So this GST network is a government entity, not government. It's a government entity. And in this, 100% investment is made by the government. Central government share will be 50%, and state governments, all state governments put together, their investment will be 50%. So this GST network, what they will do? They will be implementing the GST. They will provide services to whom? Central government, state government, taxpayers and others like banks, financial institutions, etc. So see there, if you get a question on GST network, short note, you need to write this. It provides information technology infrastructure for implementation of GST. It is referred to as common portal and provides services to whom? Taxpayers, central government, state government, banks and other stakeholders. What are the functions of GST network? What activities they will do? They will facilitate registration. So if you want to do registration, that will be through GST network. What's after registration? You will file returns, correct? First step is registration. After registration, what is the next step? Filing returns. So that filing of returns also you can do. Along with returns, you need to pay tax. The tax payment also you can make through GST network. Then settlement of IGST. What is settlement of IGST means? Just now we saw 50% to state government. Then e-way bill. E-way bill, generation of reports to central government and state government. E-way bill is a document which is required to be generated before movement of goods. When we are transporting goods from one location to another location, we need to intimate to the department that we are taking these goods, say from Tamil Nadu to Bengaluru, like Chennai to Bengaluru or Chennai to Hyderabad, like that we need to intimate and we need to transport the goods. That document is known as e-way bill. So this is what you need to write. If you get a short note question, mostly 3 marks, 2 marks, like that you will get question. Then constitutional provisions. So where from we got the power to levy GST? 7th schedule to the constitution. 7th schedule to the constitution has 3 lists. What are the 3 lists? Union list, state list and concurrent list. Okay. And article 265 of the constitution. Article 265 of the constitution, tax shall be levied and collected only by authority of law. And in concurrent list, we don't have tax related information. See, 7th schedule to the constitution has union list, state list and one more list is also there. What is that list? You just write concurrent list. But in concurrent list, we don't have tax related entries. Union list and state list only we have tax related entries. In concurrent list, we don't have tax related entries. What is the meaning of union list? Central government is having power to make law. What is state list? State government is having power to make law. Concurrent list, both central government and state government is having power to make law. But the tax related information will be there only in union list and state list. Okay. Then, so whether GST is covered under union list or state list? Both. Both. Just now we saw dual GST model. Dual GST model means central government also can levy, state government also can levy. Then Article 265 of the Constitution, tax shall be levied and collected only by an authority of law. So they should get a power from the Constitution. Without having the power from Constitution, they cannot levy tax. For example, Tamil Nadu government, can they levy spectacle tax? Spectacles, glass. You are wearing glass, na? You need to pay tax. Like that, can they bring? Huh? They can bring or they cannot bring? They cannot. Why they cannot bring? Because the power is not there in the Constitution. You understood? Just like that, they cannot do everything of their choice. That power should be there from the Constitution. End of the day, as per Constitution only, they need to work. And Constitution is the mother document for everyone. So whether you are a CM or PM or you are a Chief Justice or you are a MLA, MP, anyone, any donkey for that matter, they have to follow the Constitution only. So tax and all, just like that, to their whims and fancies, they cannot levy. The power to levy should be from the Constitution. Otherwise, what they need to do? They need to amend the Constitution. Is it clear? That is Article 265. Article 245 and Article 265 has one more point also. Governs the subject matter of law made by Parliament and state legislature. So which and all comes under union list? Parliament will make law. Which and all come in state list? Assembly, state legislature will make law. Then Article 245, power for enacting laws is conferred on Parliament and state legislature. Means anything, they need to pass a bill and the bill should become act. Then only they will be bringing into reality. Without that, they can't do anything with respect to that. Is it clear? Next. What are the goods outside the ambit of GST? Remember, now there are two more alcoholic liquor for human consumption. Okay, wait. Alcoholic liquor for human consumption. Then denatured extra neutral alcohol and rectified spirit used in manufacture of alcohol. These three alcoholic products are outside the ambit of GST. Sir, what are these two, sir? Denatured extra neutral alcohol and rectified spirit. These two are basically the raw material for making alcohol. And lot of people will use this and they will boil, and without knowing it exactly how to do, they will consume it and they will die. Have you seen this? Recently also in Tamil Nadu, some people were dead because of, consuming this liquor. You know that? So that became a big political issue, etc. and all. So why like that? Because raw material, proper make they should be doing. They are called as breweries or distilleries, etc. They use this raw material and they make the alcohol. The logic is, alcohol is not subject to GST. But previously, these two raw materials were subject to GST, which means as an alcohol manufacturer, my output is not chargeable to GST, but on my input I need to pay GST. So that is too much, na? And that I cannot take credit also. Why I cannot take credit also, input tax credit also? Because my outward supply is non-taxable. When my sales is non-taxable, when my sales is exempted, I cannot take ITC on my inward supply, on my purchase. So here I am an alcohol manufacturer. My outward supply is non-taxable, means exempted. I cannot take ITC on my inward supply. What is the major cost I am spending? The major cost I am spending on these two raw materials, that is denatured extra neutral alcohol and rectified spirit. So therefore, alcohol manufacturers requested the government to remove the GST on these two products. Accordingly, they removed. But earlier it was there. From your September 25 exam onwards, it is not applicable for GST. Got it? What are those three alcohol related? Alcoholic liquor for human consumption. Alcoholic liquor for human consumption is output finished product. Beer, whiskey, rum, brandy, gin, etc. That. And next, Raw material. What is the raw material? Denatured extra neutral alcohol, rectified spirit used in manufacture of alcohol. Then petroleum products, no change. 5 petroleum products. What are the 5 petroleum products? Crude oil, petrol, diesel, aviation turbine fuel and natural gas. Crude oil, diesel. Which diesel? High speed diesel. Whether light diesel is subject to GST? Yes. High speed diesel not subject to GST. Even petrol, aviation turbine fuel is used in the flights, and then natural gas, that CNG, which are used in autos, cabs, etc. That one. Opium and narcotic drugs are subject to state excise duty as well as GST. So for the purpose of GST, what are non-taxable supplies? For the purpose of GST, what are non-taxable supplies? Alcoholic liquor for human consumption, denatured extra neutral alcohol, rectified spirit used in manufacture of alcohol, and number 2, petroleum products, that is crude oil, etc. and all. Got it? On other goods, whether we have GST? Yes. On all other goods, we have GST. Here you need to remember one important point, tobacco. Tobacco and tobacco products, we have GST, no doubt, but even the old indirect taxes. What is the old indirect taxes? Central excise duty is also applicable on tobacco and tobacco products. Is it clear? See there, below in the note, first point, tobacco is subject to both central excise duty and GST. State excise duty, CST and VAT is applicable on alcoholic liquor referred above. Central excise duty, CST and VAT is payable on petroleum products referred above. Now we will try to understand this with the help of a table. You see this. Central excise duty, state excise duty, central excise duty, state excise duty, CST or VAT, and then GST. Okay, central excise duty, state excise duty, CST or VAT and GST. Now you need to tell me on alcoholic liquor, then that is alcoholic liquor for human consumption, alcoholic liquor for human consumption. Next, what is next? Undenatured extra neutral alcohol, undenatured extra neutral alcohol, then rectified spirit. Now tell me what is applicable on this at present. Is GST applicable or GST not applicable? Not applicable. Whether state excise duty is applicable? Yes. Whether CST or VAT is applicable? Yes. Central excise duty not applicable. Is it clear, pa? What are the goods here? You can prepare this table in your notebook and keep, so that it will be helpful, because it's an amendment. Central excise duty, state excise duty, central excise duty, state excise duty, CST or VAT and GST. On alcoholic liquor for human consumption, comma, undenatured extra neutral alcohol, undenatured extra neutral alcohol, then rectified spirit, on this alcoholic liquor for human consumption, undenatured extra neutral alcohol, rectified spirit. Okay, on this central excise duty not applicable, only state excise duty is applicable, CST or VAT is applicable and GST is applicable. Is it clear? Next, what is the next one? Petroleum products. on petroleum products. What are the petroleum products? Crude oil, diesel, petrol. Petrol is called as motor spirit. Motor spirit or petrol, both are one and the same. Petrol, then ATF, aviation turbine fuel, and natural gas. On this, what will be applicable? Central excise duty, not state excise duty. Central excise duty will be applicable. Then state excise duty is not there. CST and VAT is applicable, but there is no GST. Number 3, opium and narcotic drugs. Opium and narcotic drugs. Which are allowed, which are allowed. Not your cocaine, meth, etc. and all, not that. Which are all allowed, okay. Opium and narcotic drugs. What is applicable in case of opium and narcotic drugs? Central excise will not come, only state excise duty. Whether GST is applicable? Yes. Sir, whether CST VAT is also applicable, sir? CST VAT is applicable, sir? No, CST VAT is not applicable. Only GST is applicable. But in addition to that, state excise duty is still there. Next, tobacco and tobacco products. Tobacco and tobacco products. What and all will come in this? Cigarettes, BD, then cigars, then this pan masala is there, na? Pan parak, manik chand, etc. All those things will come. All those things which are used by Vadakkans, they will, that's what, they will rotate it and they will put it in their mouth, like that they will speak, that one, okay. The tobacco and tobacco products, whether it is subject to any GST? Yes. And in addition to that, central excise duty is also payable. And we have CST VAT? No, only GST is there. Apart from this, all other goods. Apart from this, all other goods. Nothing is applicable, only GST is applicable. Clear? Next. So this is the position of goods. Definitely this point will be tested for your exam. Remember, this denatured extra neutral alcohol, rectified spirit used in manufacture of alcohol. Somewhere in MCQ also they can be testing it, because it's an amendment for September 25 exam. And see, this attempt, no, May 25 and September 25, both amendments are very, very important. This attempt, September 25 attempt. Reason, for May 25 exam, they have literally not asked any amendment based question. Everything was based on the existing provision only. I was highly expecting amendments for May 25, but it did not happen. Actually, the question paper they prepared with amendments. This postponement of exam happened because of the war, etc. and all. And they changed the question paper. So they gave the regular question paper. Usually they will prepare some 2-3 sets of question paper. And because of that Operation Sindoor, etc. and all, so lot of mess has happened. At that time, some other question paper you got. But remember, this attempt, open challenge I am telling you, definitely May 25 and September 25 amendments will come for sure. For sure. Because actually it should have been asked for May itself. So therefore, DT and IDT, both you prepare for amendments this September 25 exam, and who knows, majority will be from that itself. Sir, what are the amendments, sir? How do we know? I have given in the index of this book itself. So if you take the index of this book, I have given what are the amendments applicable for May 25, that is equally applicable for September 25 exam as well, and what are the amendments separately applicable for September 25 also I have given. That also you need to learn, okay. Next, look into the next area, input tax credits. input tax credit. So what is the meaning of input tax credit? I told you already, GST paid on inward supply. GST paid on inward supply can be availed as input tax credit and utilized for payment of GST on outward supply. For example, there is a registered person. That registered person is having some inward supplies, and for that inward supply means what? Purchase. For that inward supply, the registered person will pay the value plus GST. This GST paid on inward supply is known as input tax. Same way, the registered person will make some outward supplies. For that outward supplies, he will receive some price plus GST. This GST is known as output tax. Let's take some numbers. Suppose if the value is 1 lakh, if the value is 1 lakh plus 12,000. So what is the input tax credit? What is the input tax credit? 12,000. Again, on sales, they are selling for 1,50,000 plus 27,000. Now, what is 27,000? Output tax, that is gross liability. Now you tell me what is their net liability? Net liability will be 27,000 output tax minus input tax will be 12,000. So the difference 15,000 will be taken as the net liability. Is it clear here? So output tax minus input tax. Output tax is tax on sales. Input tax is tax on purchases. Got it? And this 12,000 is availed as input tax and set off against the output tax payable. That's what? GST paid on inward supply. GST paid on inward supply. GST paid on inward supply can be availed as input tax credit. So what is the name of this GST paid on inward supply? Input tax credit. What is the meaning of availed as? Availed means taking credit. Availed means taking credit. Input tax credit and utilized for payment of. What they are doing with respect to this 12,000? It is adjusted against 12,000. That adjusted is known as utilized for payment of GST on outward supplies. And so is this an advantage? Yes, because rather than just paying 27,000, the registered person is paying only literally 15,000. Correct or not? And this is an advantage in GST as continuous chain of credits, and it eliminates cascading effect of tax. Why it eliminates cascading effect of tax? Suppose if the credit is not there, let's see, if the credit is not there, what would have happened? This 12,000, he will add it to purchase, correct? Now how much you would have considered as purchase? Only 1 lakh. Only 1 lakh, because 12,000 rupees is available as credit, he will be considering only 1 lakh as purchase, not 1 lakh 12,000. So only 1 lakh will be considered as purchase. Suppose if ITC not available, how much you would have considered as purchase? 1 lakh 12,000. And how much is the margin that he need? 50,000. Then what would have become to the sale price? 1 lakh 62,000. Are you understanding how we got? Ayya, right now his profit is how much, pa? Right now his profit is how much? 50,000. So therefore what he is doing is that he is purchasing for 1 lakh and the 12,000 is not his cost, because he can recover that. He can recover that. So due to that reason, for 1 lakh he is just adding 50,000. 1 lakh 50 he fixes as the selling price. You understood this? Suppose if this 12,000, what is the entry for this purchases? If ITC is available, what is the entry for this purchase? Journal entry, pa. Journal entry I am asking. You are in CA intermediate. Purchase account debit. 1 lakh, 1 lakh 12,000. 1 lakh, very good. Then the 12,000 will be what? Your asset. Correct. Current asset. Current asset shows what balance? So make a debit. Input tax credit account debit. How much? 12,000 to bank. 1 lakh 12,000. Understood. So now you created asset. What is the name of the asset? Input tax credit. Now sales entry. Bank account debit. How much? 1 lakh 77,000. How much you got here? 1 lakh 77,000. In that how much is sales? 1 lakh 50 means to sales will be 1 lakh 50. To GST payable you have a liability. Liability shows what balance? Credit balance. So to GST payable how much? Got it? So GST payable shows a credit balance. Now you need to clear the liability. Means you need to set off. What you need to do? Debit. So GST payable account debit. GST payable shows a credit balance. You need to cancel. Means you need to make a debit. So GST payable account debit to ITC, asset you are using, correct? Asset shows debit balance. When you use it, it will come into credit side. So to ITC, what is that? 12,000. What is the difference? What you need to do with respect to that 15,000? You need to pay. So to bank. So that is the entry for this. Is it clear? 15,000. Now tell me, what if ITC not available? What will happen to the purchase entry? Purchase account debit 1,12,000 to bank, which means your purchase cost is now 1,12,000. Add 50,000 rupees profit, 1 lakh. On the top of that you will compute tax, which means is there a tax on tax? The tax on tax is known as cascading effect of tax. Tax on tax is known as, so that cascading effect of tax, cascading effect of tax means tax on tax. When there will be tax on tax? Only when there is no ITC. Because when ITC is not there, we will add it to the cost. When we add it to the cost, on the 12,000 also again we will calculate tax. But that is not there. Okay. Next. You understood the concept of input tax credit? Now look into the next page. Availment of ITC. What is the meaning of availment of ITC? Taking credit. Where you will take credit? In one return. What is the return? GSTR 3B return. Who is required to file GSTR 3B return? Every registered person is required to file GSTR 3B return. So in that 3B return you will avail the ITC. Is it clear? So then whenever you are writing taking credit, don't write taking credit. From now on use the word availment of ITC. Then utilization of ITC means what? Set off. Set off of what? ITC with our liability. With our liability. Where you will do this set off with our liability? In which return? Same, 3B return. So set off against GST payable reported in GSTR 3B return. So whenever you use the word set off, you need to use the word utilize. ITC avail means what? Taking credit. ITC utilize means what? Set off of credit. And suppose if you have excess ITC, is there a possibility of excess ITC? How? For example, your liability is 12,000. Your liability is 12,000. You have 18,000 of credit. What will happen? 6,000 you have excess ITC. Ayya, liability 12,000 pa, ITC 18,000 pa, means you will use fully. What is the excess ITC that you have? What you can do with that 6,000? You can carry forward. For how many years? 4 years, 6 years, 8 years? No time limit. That is for set off and carry forward only. For set off and carry forward of losses only we have a limit of 8 years, 4 years like that. But here we don't have. This is like unabsorbed depreciation or business loss. Unabsorbed depreciation, business loss. Any time limit for carry forward? No. Same way ITC also. No time limit. You can carry forward and adjust along with your liability at any point of time in future. Got it? See the next point. Excess ITC can be availed as ITC and utilized for payment of GST liability. Is there any time limit to carry forward? No. No time limit for carry forward of ITC. What will happen if there is a shortfall? When the shortfall will arise? Like this. This is an example. What is your liability? 27,000. How much is the ITC that you have? 12,000. So is there a shortfall? What you did with respect to that shortfall? Paid. Correct? You paid. So therefore whenever there is a shortfall is output tax greater than input tax shall be payable by registered person to government. Then last area in this first chapter, that is benefits of GST. What are the benefits of GST? What are the benefits of GST pa? Number 1, it eliminates cascading effect of tax. Just now we discussed, correct? Then number 2, investments increased. So how? Because of GST there is a better predictable tax climate. Better predictable tax climate means everyone will know about the GST provisions. So because of which companies will be coming and starting up their businesses in India. Humbug only, okay, cheating only. So they are telling, but reality did not happen. But everything that is there in paper need not be there in real, na? You understood? So this is in paper only. Investment will increase. I never saw any increase in investment because of GST and all. Okay. Tax complaint simplified. Again, wrong. So tax complaints is not simplified and all. It is torturing a lot. Ground level is that lot of people are, getting tortured because of GST. Actually, it should be disadvantages of GST, which they wrote as benefits of GST. Okay. And tax complaint simplified. Next, employment increased. Is it? Employment has increased because of GST. Okay. Then small business owners relaxation. This I will agree, pa. This is there. Because up to 1.5 crores composition scheme is there, and up to 40 lakhs you don't have to register and pay GST. That is there. That is really there. See, I don't want to tell all lies only now. Because if it is really there, I will tell really there. If it is not there, it is not there. Why will I pull the government leg? Okay. Then certainty in tax administration. This is also real. Because previously and all, one state, one different process. Because state to state, VAT will change. So Tamil Nadu, we will follow one treatment, Karnataka different way, and Andhra Pradesh different way. And people who used to have business in multiple states and all will get a headache. Because I have to follow some way here, different way in another place, etc. and all. But that certainty is there now. Whether it is across the country, if you do business in any state, the process is same. The return is same, the tax due date is same, the way in which you register is same, making payment is same, application for refund is same. There is no difference. State cannot follow different procedure. Is it clear? Then certainty in tax administration. Automated procedures. Yes, majority of the things will happen through portal. For previously and all, we used to go to the VAT office and stand from morning to evening for the purpose of filing return, because at that time filing return was manual. We need to take a printout, forms and all will be available. First we need to get the form from the VAT department. We need to fill, sit and write. I am talking about my articleship period, okay. And we need to sit and write. And then we need to go to the tax department, VAT department, and we need to stand. Big queue will be there, because always due date only everyone will do. You understood? And my principal also idiot. He will send me only during the due date only. Before he can send me, he will not send. Due date only. And at the time of due date, we need to wait. 2 times we need to wait. One for payment, challan, bank. In bank, one big queue will be there. And again, after making the payment, like successful, yes, I got the challan completed. Then taking that, we need to run to the VAT office. VAT office, one big queue will be there. You understood? You know, thank God now nothing of this sort. Sitting at your place, you can make the bank payment through net banking, and you can file the return through electronic mode. You don't have to visit anywhere. You have to just, suppose if it is not working, click refresh. It will work. You understood? So no issue, no issue. And we can happily file it. So automated procedures. Then Make in India initiative. Make in India initiative, again, just to convince Modi ji, they have brought in this. That's an advantage in GST, nothing of that sort. Because of GST and all, not that companies are coming, hey, I will come, India, I will come and start manufacturing. Nothing of that sort, okay. Did not happen. Make in India. Then ease of doing business. Not ease of doing business, disease of doing business actually it is. Where ease? You know, people are shutting down the business and going because they are not able to comply. One Pani Puri shop, he got some money through UPI and he got a notice here, GST notice, and he is sitting and crying, sir, by selling Pani Puri, where from, sir, I will be able to pay GST, etc. and all. No, you should not torture. You know what happened there? All these Pani Puri vendors are closely connected. They are all relatives. That's what they will tell, na, my uncle will come next week, my chittappa will come next week, like that. Half of the North Indian population is in Chennai itself. And these Pani Puri vendors are all connected. Uncle, aunt, brother-in-law, mother-in-law, like that only connections. And what they do, single UPI they got. And everyone put Xerox and they are putting it in all the shops. But what is their business, pa? One big basket, correct? In that Golgappas, correct, Puri, and they will put it into that water and they will give it. This is what Pani Puri business. Do you think it will cross 20 lakhs? Seriously, if it is crossing 20 lakhs, today itself you quit CA. I am telling you. You quit CA. You quit CA and start Pani Puri business. Seriously, if it is crossing 20 lakhs. Why to do CA? Because after doing CA also, you will definitely not get 20 lakhs and all. So, total 4 or 5 places you identify, open the Pani Puri shops, each place 20 lakhs means your turnover will be somewhere like 80 lakhs or 1 crore, and you appoint the people and you do it. Now we will give a lot of good hand gloves, etc. and all, and we will do. Seriously, 20 lakhs they will not cross. Then why they got notice, sir? The mistake what they did is that all the relatives using the same UPI, and everyone's amount will be coming into same UPI, that will cross easily 40 lakhs, 50 lakhs in a year. So department sent a notice. You understood? And that's the reason. Otherwise, it will not cross. Earning, easy way is there. Easy way of earning is there. That is called as YouTuber or Instagram influencer, etc. That is the only easy way you can earn. But already there is too much competition in that place. Again, you cannot do anything, okay? Because for everyone there is like one person is doing, and they are also finding it difficult to find the ways in which they need to promote themselves. So some will do bathroom tour, some will do house tour, some will do bedroom tour. Something only they did not put yet, okay? They did not make it adult yet. Till that it is okay. That also many akkas started already. Different. For one profession, one akka is there. And to the extent possible, they are also attracting people. Got it? Now you can't do anything because already they settled. Now you are only like a kid who will be starting. No way. So shut everything and study and become CA. Only way is that. Okay? Then make in India, ease of doing business. Ease of doing business means doing business in India is easy. That is the meaning. Ease of doing business. One nation, one market. I agree to this because previously there used to be different rates in different states, because of it the product price will be different. Rice in Tamil Nadu will be cheaper. In Karnataka will be little costlier. In Andhra Pradesh will be very costly. Same rice. Why? Because here nil rate, Karnataka 2% VAT, Andhra Pradesh will be 5% VAT. You understood? So then automatically the price will differ. But today, if a product is there, rice, across the country it is the same rate. So there is no change in the prices. Are you getting this? That is this. Now how to remember this, sir? You remember this with a mnemonic. So cities cameo. Cities cameo. Just remember, this Coolie movie pa. Okay. What they are doing, every city, one actor, big actor, they are bringing in the movie, correct? As a cameo. Okay, wow. Now trend is that only, napa. Even Jailer also they did the same way, and even Vikram movie also the same way. What they are doing, from one industry or one city they are bringing. Now Amir Khan from Mumbai, Nagarjuna from Hyderabad, and then one actor Upendra from Bengaluru, like that from Kerala, one guy. Mix everything, make it as a cameo, automatically movie will become super hit. Okay, remember this. What is it you need to remember? Cities cameo. C for cascading, that is cascading effect of taxes is eliminated, correct? Next, I, investments is increased. T, tax compliance simplified. E, employability has increased, increase in employment opportunities. Then yes, small business owners relaxations. Then cameo. C, certainty in tax administration. There are two C's. One is cascading effect, another is certainty in tax administration. A, automated process. M, make in India initiative. E, there are two E's. One E is employment increase, another E is ease of doing business. O, one nation, one tax. Don't write cameo, cities, all these things in exam. You remember like this, you write like bullet points, if at all you are writing a theory question. Okay. Then Look into this next special category states as per Article 279A of the Constitution. What are the special category states that we have? Total 11 states. As per Article 279A of the Constitution, total 11 states are treated as special category states. What are they? M, T, N, H, MMTN, A, SAM, H, U, J. MMTN first you remember. Then A, SAM. Then HUJ. MMTN is what? Manipur, Mizoram, Tripura, Nagaland. A. Assam. Yes. Sikkim. A. Arunachal Pradesh. M. Meghalaya. Then H. Himachal Pradesh. U. Uttarakhand. J. These are considered as special category states as per Constitution. Okay. Article 279A. And next point, on import of goods or services and export of goods or services, which GST will be applicable? IGST. Sir, you said on import of goods there is customs duty. Why now you are telling IGST? Correct only pa. On import of goods, export of goods there is customs duty, but under customs duty they levy IGST also. Under customs duty they levy IGST also. Why like that? Because in the past we had CVD and SAD. That CVD and SAD now got subsumed into GST. As that got subsumed into GST, in the place of CVD SAD they are levying IGST. So you remember, for intermediate level, on import of goods, import of service, export of goods, export of services, which tax will be applicable? IGST will be applicable. More details about it you will be learning at CA final level. Okay. Now with this we completed this introduction topic, and the next chapter that we are going to discuss is input tax credit. I wanted to complete input tax credit because that is an area where too much importance you will not be giving, because after this somewhere it will come in the middle, etc. and all. That's why we will study input tax credit. Very important chapter. Don't worry. Whatever is really required to understand the other aspects that I will explain. Okay. Even if you have not studied properly, etc. and all also, don't worry about it. We can understand it. Okay. Like all those disconnected topics only I will be taking. If there is any connection that is required, I will explain to you related to that. We'll take a break for 15 minutes and then we will continue one important communication to all of you. As this is a free batch, anyone can come and sit. But the problem is that as anyone can come and sit, just like that someone going in road also he will come and sit, and he will cause disturbance to you. That's the reason why I request you to please wear the ID card. Only when you are wearing the ID card, our team will know that you are attending this class. Please, it's a request. Otherwise, we don't know who is who, etc. and all. Second, during the class, to the extent possible, please avoid, to the extent possible, I am not compelling you, but to the extent possible, please avoid opening the door and going, because this is an auditorium. The moment you open the door, that sunlight will cause disturbance to others. Okay. So due to that reason, please avoid. Emergency, okay. And if you want to frequently use the toilet, etc. and all, please sit on the last column, like last row. Somewhere you sit there, because so that it will become easy for you to go and come and you are not causing disturbance to others. Please adhere to this so that comfortably we will complete this batch. Okay. We'll meet after 15 minutes. Thank you. Okay, we'll start. Look into segment 8, that is input tax credit. So we just completed introduction to GST, and from there we are moving on to input tax credit, a very important chapter, and you cannot imagine a question paper without input tax credit, that much important it is. And in input tax credit chapter we have few sections. So these are all the topics which we are going to discuss in this. First, about the availment of ITC. Where we will avail ITC? What is availment of ITC? Just now we saw. What is availment of ITC? Taking credit in GSTR 3B is known as availment of ITC. And manner of utilization of ITC means once we avail the ITC, that will be adjusted against our liability. That information is manner of utilization of ITC. Then the condition for availment of ITC means we have certain conditions that should be fulfilled for availing ITC. Then apportionment of ITC, that is when inward supplies are commonly used for taxable and exempted. Carefully listen. When my outward supply is exempted, can I take ITC on my inward supplies? Yes. Again I am repeating, you are not listening. When my outward supply is exempted, can I take ITC on my inward supply? No. When my outward supply is taxable, can I take ITC on my inward supply? Yes. For example, I am making a product X. That product X is taxable. Can I take the ITC on raw material purchased for product X? Yes. And I am making product Y. Product Y is exempted. Can I take ITC on the raw material purchased for making product Y? No, I cannot take. What if I have a raw material which is common for both product X and product Y? Can I take ITC? I can, but I cannot take full ITC. I need to take the proportionate ITC. Same way, I have purchased something and used for my business purpose. For example, I am buying this iPad, and iPad I am using for business purpose, profession. Can I take ITC on the iPad purchased? Yes. I am buying an iPad for my home, for my kids to play games and watch YouTube, etc. Can I take ITC on that iPad purchase? No. What if it is common for both business as well as non-business? Can I take ITC? Yes. But how much ITC I can take? Proportionate ITC I can take. Okay. That is with respect to apportionment of ITC. Then what is blocked ITC means? There are some inward supplies on which we cannot take credit. That is called as blocked ITC. Even though it is used for business, but we have certain restriction in availing ITC with respect to that we cannot take. That is blocked ITC. Then availment and reversal of ITC in special cases. And then we have circular on warranty, circular on return of expired medicines. So these are all the topics we are going to discuss in this. Just now we completed this information from one chart which we discussed in introduction. There is a registered person who is having some inward supplies. He is making price plus GST. Say price is 1 lakh and GST 12,000. What is the name of this 12,000? Input tax credit. Input tax credit. And what is this? Outward supplies price plus GST. This GST payable 18,000 known as output tax or gross liability. What we will do with respect to input tax credit? We will adjust against the output tax liability, so we get the net GST payable. So what is the computation for net GST payable? Gross GST payable on outward supply minus input tax credit. And this is the entry for purchase. Already we discussed purchase account debit 1 lakh, ITC account debit 12,000, to supplier account 1 lakh 12,000, purchase entry. Sales entry also, recipient account debit 1 lakh 68, sales 1 lakh 50, to GST payable 18,000. GST payable liability shows a credit balance, ITC is a asset, shows the debit balance. Now liability we are closing down, so GST payable account debit 18,000 to ITC account 12,000, and the difference 6,000 rupees is the net GST payable. Either you can arrive at this way or directly also 18,000 minus 12,000 also net GST. But accounting we are learning just to understand how it will be reported in financials. Then we have three terminologies here: availment of ITC, utilization of ITC, and reversal of ITC. What is the meaning of availment of ITC? Taking credit. Utilization of ITC, set off against the liability. reversal of ITC, reducing the ITC availed. When we will reverse the ITC? Suppose if you have wrongly availed ITC, that needs to be reversed, that is to be reduced. That is known as reversal of ITC. Where we will do availment of ITC, utilization of ITC, reversal of ITC, all these things we will do through GSTR 3B. And there are 3 ledgers which will be maintained by GST network with respect to every registered person. What are those 3 ledgers? Come on. Electronic liability ledger, electronic credit ledger, electronic cash ledger. These 3 ledgers who will maintain? GST network on behalf of every registered person. So whenever you take the ITC, what happens in the ledger? Whenever you take ITC, ITC is what balance for you? For you. ITC is asset or liability? Asset. Asset shows what balance? Debit balance. Means the moment you take the ITC, if you maintain the ledger, where it will be coming? Debit side or credit side? Debit side. As they maintain the ledger, it will be contra, just like bank passbook, cash book. When you deposit, what you will do in cash book? Debit. Too much pa, this is really. When you deposit money in cash book, what you will do? Debit. So what bank will do in passbook? Same logic. Okay. So whenever you take the ITC, what will happen to your ledger? Debit. But as this ledger is not maintained by you, they are maintaining. What will happen? Credit. So as soon as you avail the ITC, the electronic credit ledger will get credited, which will be used for payment of liability. That's what I have given. Availment of ITC means taking ITC in electronic credit ledger through GSTR 3B. Then GST paid on inward supply can be availed as ITC, utilized for payment of GST on outward supply. Therefore, net GST will be gross GST minus ITC. Now, these are the 3 ledgers which I am talking about. What are the 3 ledgers? Electronic liability ledger, electronic credit ledger and electronic cash ledger. One second, here one student asked me this doubt. In the first chapter, sir, that is denatured extra neutral alcohol, undenatured extra neutral alcohol, that is undenatured. Actually both are same. Denatured we will not be getting readily, undenatured is only available. That undenatured only we use in manufacture. This is undenatured. Page 4 you take and write there undenatured. It is not denatured, undenatured extra neutral alcohol, or you can remember simply ENA, extra neutral alcohol. ENA, extra neutral alcohol, that also you can remember. Then come to this page, input tax credit. Come back to page number 94. E-ledgers, electronic liability ledger. This is ELL. Electronic liability ledger ELL, electronic credit ledger ECRL, and electronic cash ledger ECL. These are the 3 ledgers that will be maintained by GST network with respect to every registered person. Maintained by GST network on behalf of every registered person. What balance will be there in liability ledger? What is the balance in liability ledger? Which is your liability, gross liability. Okay. So whenever you report your liability, that will be coming to liability ledger, gross GST payable. What will be there in credit ledger? Your ITC availed. And the difference between these two is what you need to pay as cash, correct? For example, see the previous page, 18,000 is my liability. Where it will be coming? This 18,000 will be coming in which ledger? Electronic liability ledger. Then 12,000 is your ITC. Where it will go, this 12,000? To your electronic credit ledger. Now 18 minus 12 is what? 6,000, that you need to deposit into the electronic cash ledger. Means liability ledger minus credit ledger will be equal to cash ledger. Understood? Then how you will avail the ITC in GSTR 3B? For that we have a section 41 read with rule 36 sub rule 4. Even if you are not remembering the rule, at least remember section 41. So that's a very, very important section. Section 41 talks about availment of ITC. What does this section says? How much ITC you can avail? That ITC which is reflected in 2B can be availed as ITC. Okay. How ITC will come in 2B? based on your supplier's GSTR1. What is GSTR1? GSTR1 is a return filed by each and every supplier reporting the details of outward supplies. What is GSTR1, pa? GSTR1 is a return. Who will file that return? Supplier. That contains what details? Outward supply details. When they report it, they will mention your name as the recipient. So portal will take all those transactions and give you one statement. For example, you purchased from 100 suppliers. Carefully listen. You purchased from 100 suppliers. Each and every supplier will report your name as the recipient. And they are reporting, when you are making purchases from those 100 suppliers, all those 100 suppliers will file GSTR1. Now portal will take the data from all the return and put it into one statement and give it to you. Boss, this is your purchase data, called as GSTR2B. Just like how in income tax there is TDS deducted by various people, form 26AS, like that one form is there. In that form 26AS, all the TDS deducted by your recipients will be reflected in one statement, just like a compilation pa. So this is also a compilation of inward supplies. You make purchase from different people. All those things will be put into one statement and made available to you. What is the name of that statement? GSTR2B. What this GSTR2B will contain? Inward supply data. What 2B will contain? வாயில கொழுக்கட்டை ஏதாவது வச்சிருக்கீங்களா? இல்லல்ல. Only when you tell it will get registered in your mind pa. Repeat, okay? So 2B contains what data? Inward supply data. Based on that, you can avail the ITC in GSTR3B. You got it? See the process. First, step number 1, your supplier will add the invoice. B2B means what? Business to business, means sale to registered person. Can unregistered person avail ITC? No, only a registered person can avail ITC. So they will report B2B invoice. In which return? GSTR1, and it is filed. Now what happens from there? It to the recipient, it will auto populate in GSTR2B. From the supplier GSTR1, data will come in GSTR2B. And this ITC, whatever is there in 2B, is called as matched ITC. Why will there be a difference between ITC as per your books versus this matched ITC? Tell me. As per your books, some ITC is there versus as per 2B, some ITC is there. Why will there be a difference between these two? Why will there be a mismatch? Number 1, supplier did not file GSTR1, or supplier filed GSTR1, he forgot your invoice. Got it? Or supplier filed GSTR1, he mentioned incorrect details of invoice. Is it clear? So GSTR1 not filed by supplier, or GSTR1 filed but invoice not reported, or GSTR1 filed but reported incorrect details, because of which our books versus matched ITC, there will be different. But which one we will take? Based on invoice or matched ITC? Matched ITC is only relevant. What if ITC is not coming in 2B? What you will do? You will ask the supplier. What you will ask the supplier? Whatever you like, you ask. Okay. So that is, you will call the supplier and ask, bloody idiot, I purchased from you. You are not filing proper returns. Then how will I get the ITC? So who is responsible here? Supplier. So we will follow up with the supplier and we will ensure that they are filing. What if they file next month? Next month only it will come in 2B. You got it? What if they rectify after 3 months? After 3 months only it will come in 2B. Are you getting this? Then until that point of time we cannot take ITC. No, we cannot take that ITC. So we need to wait. You got it? Your money only, but you need to wait to take the ITC. Why? Because of the mistake done by the supplier. Now, what is the ITC that can be availed? Base. Matched ITC. And where you will avail the ITC? Step number 3. Now, so far we are in step number 2. Step number 3, where you will avail this ITC? GSTR3B. What is the name of this ITC called as? Self-assessed ITC. Why self-assessed ITC? Whatever is there in 2B, directly we will not be taking. From that we will do certain adjustment and then only we will take the ITC in 3B. Example, there is some blocked credit. There are some inward supplies which are considered as blocked credits. You purchased. So the supplier reported in GSTR1. It came in 2B, but still you will not be able to take. Why you will not be able to take? Because it's block credit. Is it in 2B or not in 2B? In 2B, but you should not take. So what you should do? Minus blocked ITC. Understood or not? Then next point, you are purchasing something. Utmost concentration I need. Okay. See, we are not going to have another opportunity here. We are going to learn in the class then and there itself. If you focus in the class, you will learn it and thereafter revision is not required. Otherwise, then again you need to sit and read. So, why to sit and read unnecessarily again and again, correct or not? So, let's make use of this 4 days productively. Is it clear? Now concentrate. So, I have told you one point. If I purchase an iPad and used for non-business purpose, can I take ITC? No, but I don't know at the time of purchase. So, at the time of purchase, I would have given my GSTIN. So, my supplier will report it in GSTR1 and it came in 2B. Can I take the ITC? Why I should not take ITC? Because it is used for non-business. But it came in 2B. So, what should I do? Minus non-business purpose. Is it clear? Then next one, I have purchased something used for exempted outward supply. Can I take that ITC? But at the time of purchase, I don't know now that I will be using it for exempted outward supply. So, I would have given my GSTIN to my supplier. So, he will report it in GSTR1. It came in 2B. It came in 2B. But can I take ITC? No. So, why? Because it is used for exempted. So, what are the 3 things that I need to separate from matched ITC? Blocked ITC, non-business purpose, exempted outward supplies. Is it clear? So, in question also be careful. They will be giving matched ITC and they will tell this invoice even though reflected in 2B, but it is a blocked ITC. Then what you should do? You should eliminate. Sometimes they will twist like this. Blocked ITC, it is not coming in 2B like that they will give. Ignore. Ignore. Why you need to ignore? You should not take. Already in 2B it is not there. Then why you need to deduct it? They will confuse you like that. Be careful. These 3 things, if it is coming in 2B only, we need to deduct. If it is not at all coming in 2B, simply ignore. Okay. Then 3 things we need to add. What is that? GST paid under RCM. Whatever GST you paid under RCM, you can avail as ITC. What is RCM means? Reverse charge mechanism. What is reverse charge mechanism? Whenever I purchase something from a person or I receive any service on which I need to pay GST under RCM to government. Generally, who will pay GST to government? Supplier or recipient? That is called as forward charge mechanism. Example, you are, attending a coaching from a coaching center. Now, coaching center will collect the GST from you and remit it to government. Agreed? Coaching center will collect the GST from you and remit it to government. Here, who is supplier, who is recipient? Coaching center is supplier, student is recipient, and the coaching center will pay GST to government. Means forward charge or reverse charge? Forward charge. In reverse charge, what will happen? Recipient will pay. Means you are the recipient, you are the student, recipient. You will only pay GST to government. That is reverse charge mechanism. Is it clear? When recipient pays GST, supplier may not report in GSTR1. Carefully listen. I am your supplier, you are my recipient. I am your supplier, you are my recipient. Now, when you only pay tax, I may not put it in GSTR1. Correct? Because it is not my liability. I may not put it in GSTR1. So, will it come in 2B or it may not come in 2B? It may not come in 2B. If I put something in 1 only, it will come into 2B. You understood? If there is no 1, there is no 2. Correct? If first step number 1 only happens, step number 2 will come. If step number none itself is not happening, step number 2 will not come. So, therefore, I am not putting it in GSTR1. If I am not adding invoice in GSTR1, will it come in 2B? No, it will not come in 2B. Even then, can you take ITC? Yes. General rule, only that credits or that amounts which is reflected in 2B only can be taken as ITC. But this is first exception, correct or not? Even though it is not reflected in 2B, you can take ITC with respect to GST paid under RCM. What if it is already coming? What if it is already there in 2B? Means even though it is RCM, but I may add the invoice in GSTR1, yes. If I add in one GSTR1, it will come in 2B, yes. Then anyhow you will take that as ITC, na? So that is not an exception you need to remember. What is it you need to remember? Even though not reflected in 2B, we can take. What is that? GST paid under RCM. Then pertaining to earlier tax periods. Pertaining to earlier tax periods means, say you have purchased from me in January month, but you forgot to take ITC. It came in 2B of January month. Carefully listen. It came in 2B of January month. In July month, you wanted to avail the ITC. Can you avail the ITC? Yes. But it will not come in July month 2B. Ayya. Are you understanding? You purchased from me in which month? Whether you avail the ITC in January month, but it got reflected in 2B of January month. And next, when you wanted to avail ITC, July month, whether it will come in 2B of July month? No, why it will come in 2B of July month? It will not come in 2B of July month because already it came in January month. Then can you avail the ITC in July month? Yes, even though it is not coming in July month, because it is pertaining to earlier tax periods. Is it clear? Like that, maximum by when we can take ITC? What is the maximum time limit by which we can avail ITC? Not utilization. Utilization time limit is there. What is the utilization time limit? No time limit. Utilization you use for any number of years, but for availment there is a time limit. Are you understanding the difference? Once I take the credit, I can use it for any number of years. But for taking the credit, there is a time limit. What is the time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Got it? By that time, I should avail the ITC. Means for a financial year. What is the current financial year we are talking about? 24-25. For 24-25, by when we can take ITC? We are in current year is 25-26 then what is the previous year? 24-25. For 24-25, by when we can take ITC? 30th November 2025 or date of filing annual return, whichever is earlier. By that time we can take ITC. Correct? Then next, sometimes what will happen? We will reverse the ITC. First we will avail the ITC and we will reverse the ITC. Why, sir, we will reverse the ITC? Maybe conditions are not fulfilled. For example, we have one condition. If recipient is not making payment to supplier within 180 days from the date of invoice, somewhere you would have studied. If the recipient is not making payment to supplier within 180 days from the date of invoice, the recipient should reverse the ITC. And again, as and when he made payment to supplier, he can re-avail the ITC. That re-availment will not come in 2B. First it came in 2B. Carefully listen the sequence of events. First it came in 2B. You took the credit. Then because of the non-fulfillment of conditions, you reverse the ITC minus. Then again you want to re-avail. Why it will come in 2B again? It will not come in 2B again. But can you re-avail? Yes, even though it is not reflected in 2B. Tell me what are the three cases, even though it is not coming in 2B, we can take ITC. GST paid under. Next, pertaining to earlier tax periods. Next, re-availment of ITC reversed earlier. You understood? In these three cases, even though it is not reflecting in GSTR 2B, we can take ITC. Now tell me what are the 6 adjustments we need to make to 2B so that we will avail the ITC in 3B. Come on. ITC as per 2B. 3 minus 3 plus. What are the 3 minus? Blocked ITC used for non-business purpose, used for exempted outward supply. 3 plus. GST paid under RCM pertaining to earlier tax period, re-availment of ITC reversed earlier. Understood? Now look into this. When ITC as per 2B is less than the ITC as per books. Only ITC as per 2B is relevant for availment, correct? As and when supplier files GSTR1 or rectifies GSTR1, ITC shall be reflected in 2B and that can be availed in GSTR3B. That I told you, if supplier not filed GSTR1, supplier filed GSTR1 but invoice not reported, he will rectify that or he will file that when in future. As and when supplier files GSTR1 or rectifies GSTR1 in future, at that time it will come in 2B and at that time they can avail the ITC in 3B. That is this point. If ITC in GSTR 3B greater than ITC in 2B, for example, ITC as per 2B is 3 lakhs, but the ITC they availed in 3B is 4 lakhs, means they are taking excess ITC, correct? Genuine may not be genuine, may or may not be. Which case it is genuine? Which case it is genuine? GST paid under RCM or tax pertaining to earlier tax period or reavailment of ITC reversed earlier. Otherwise, just like that also we can take ITC. Am I right? If you do that, we will get a notice. If IT is in 3B greater than IT is in 2B, a system generated notice shall be given under Rule 88D and accordingly reply should be furnished. Is it clear? What is that reply we need to furnish? If it is genuine ITC, you give the reply, sir, this is GST paid under RCM, sir, or it is pertaining to earlier tax periods, or it is reavailment of ITC reversed earlier. You give the reason. Suppose if it is not genuine, you have to pay. If it is genuine, give the reply. If it is not genuine, pay along with interest. Got it? What if you are not doing anything? They will give a show cause notice, another show cause notice and do the recovery. Where is that information given, sir? So that is given in Rule 88D and Rule 88D is in page 98. Rule 88D is in page 98. When Rule 88D will come into picture, pa? When you have availed ITC in 3B greater than ITC in 2B. ITC in 3B greater than ITC in 2B. Difference in ITC claim, that is credit availed in 3B exceeds the credit as per auto generated statement in 2B. Then you will get a intimation. That intimation is in DRC 1C. And you need to give a reply. Upload, communication, how they will give. Either they will upload in the portal or they will send email. What is the time limit within which you need to reply? 7 days. Within 7 days, what you should do? Either pay the difference or explain the difference or partial payment and explain the balance. What if you have not done anything within 7 days? You will get a show cause notice under section 73 or 74 and they will recover. If you don't pay, they will recover. How they will recover? They will take money from our bank account. They will take money from our bank account or they will attach our property, movable property, etc. Many places you would have seen, they will put one board. This property belongs to income tax department or this property is attached to income tax department. No one should buy like that. So they will put that. Okay. That is attachment. Somehow they will recover. Pa. Till that time, this difference is paid or reasons is properly explained. Your GSTR1 will be blocked. Means you cannot generate GSTR1. If you are unable to generate GSTR1, what will happen to 2B? If you are not able to generate, if you are not able to file GSTR1, what will happen to 3B? You cannot file. Because without filing GSTR1, you cannot file GSTR3B. If GSTR1 and GSTR3B not filed for 2 consecutive periods, your e-way bill also will be blocked. You got it? And this will also lead to cancellation of registration. What are the 4 consequences till the time you pay the difference? Consequence number 1, GSTR1 is blocked, not allowed to file returns in GSTR1. Next, GSTR1 not filed means 3B gets blocked. Next, if GSTR1 not filed for 2 consecutive periods, what will happen to e-way bill? That will also be blocked. Next, last, it will lead to suspension of registration. Understood rule 88D? Separately also they may ask a question related to rule 88D. They will not directly ask rule 88D, they will give a situation. So and so person has taken a ITC which is more than the 2B ITC. State the consequences. Our problem is we don't know which answer to write for which question. And we know the answer, and sitting in the exam hall we will not be able to recollect it as to which answer we need to write. Outside we will come and ask, for this what answer we need to write, they will tell. At that time, no, our heart will burn. You understood? Ayyo, I know the answer. Had I known it before in the exam hall itself, I will be able to write. That's why be careful while reading the question. When you read the question, you may not get directly the questions. You will be getting like this. So and so person has availed their ITC this much, which is more than the ITC as per GSTR 2B. State the consequences, like that they will ask. Now what you need to write? Rule 88D you need to write. Are you understanding? Rule 88D you need to write. So what is it you need to write in rule 88D? This process. So how you will write? Like this, what? Tell me what you will start, how you will start. You know the key points, how you will start. As and when ITC availed in GSTR, okay, as per rule 88D, whenever ITC availed in GSTR 3B exceeds the ITC as per GSTR 2B, a notice or intimation shall be issued in DRC 1, either in portal or email, and within 7 days a reply to be furnished to that notice or intimation, or we need to pay the difference along with interest, or partly explain the reason for difference and part payment. Like that paragraph you write. Don't write like this bullet points. Okay. So write like a paragraph. You can write like two lines, give 1 line gap, and again 2 lines, again 1 gap, again 2 lines. Like that you try to write like a sentence. Don't write like key points. Key points you should remember, this is common for all the exam. Law, audit, tax. These 3 exams it is common. Law, audit and tax. These 3 exams you remember like points. But when you write in exam, you write like a paragraph. Because what happens is that ICI will be giving the evaluation to some college professors. Because now that they increase the number of attempts from 2 to 3, but for CA final as well as CA intermediate, now they don't have that many chartered accountants who will do the evaluation fast. That's why they have taken the support of various college professors. These college professors and all will see the key, and if it is like key, then only they will be giving marks. AI and all will not work, because the problem with AI is that first it should understand your handwritten. Your handwriting they should understand, and your handwriting only human being will understand. AI will take time to understand. Moreover, what if AI is doing mistakes? It's not that easy. Don't think your answer sheet you will upload in ChatGPT, so it will give you the answer like marks and all. Will not happen like that. Practically it is not possible also like that. It is taking time. It will take. Definitely it is possible in future, but not today. It requires some more rapid advancement and all. It will definitely to happen in future, but not today. Today they are human beings who are evaluating your answer sheets. But when they are evaluating your answer sheets, professors, what they see the key and they will write. They will check. And you ever observed answer key given by ICI, suggested answers? Suggested answers will never be point wise or highlighted points. Suggested answers will be like paragraphs only. Have you seen or not seen? Law, audit and tax, it will be like paragraphs. That's why try to write like paragraphs so that they will check that and they will be giving the marks appropriately. Is it clear? Then the mistake what we do is that we all read from summary book, and the same way in summary book we will try to write in exam. That is the problem. Okay, that try to eliminate. Now coming back to this, you understood about rule 88D? Next, look into page number 95. Page 95. What is GSTR 1? It is a return that containing the details of underlying outward supplies. Underlying outward supplies. Who will furnish it? By every registered person. And mostly they will enter the data consolidated or invoice wise. Invoice wise. Then 2A. What is 2A? Based on GSTR1, an auto-populated statement will be given to recipient in 2A and 2B. There are two forms in form 2A, 2B. Both will deal with inward supplies. But what is the difference? 2A is like a static document. 2B is like a static document. 2A is like a dynamic document. For example, I'll send you a Google Sheet. If I make some changes in Google Sheet, will it be reflected there immediately? Yes. In Google Sheet, it will reflect immediately. Instead, I am sending you an Excel sheet. If I make change here, will it be reflected there? No. 2B is like Excel sheet. 2A is like Google Sheet. Whenever supplier makes any correction in 2A, it will come immediately. But 2B is not like that. If supplier files the GSTR1 by due date, that data only will come in 2B. Carefully listen. I'll just show you the simple difference that we have between 2A and 2B. Don't write, just listen. Supplier will report the data. Supplier will report the data of July 2025. What is the due date of GSTR1? GSTR1 due date. 11th of next month, that is 11th August 2025, correct? But GSTR1 due date is 11th August 2025. For July month, they need to file by 11th August 2021. Whatever GSTR1 that is filed by 11th August will be coming in which place? Reflected in GSTR 2B. Very good. Thereafter also they can file, correct? Thereafter also they can file. Thereafter also they can file. Suppose if this GSTR1 is filed thereafter, this is reflected in GSTR 2B of which month? July month, correct? GSTR 3B of July, 2B of July month, it will be reflected, correct? When? If the supplier files GSTR1 by the due date. If the supplier files GSTR1 after due date, it will be reflected in GSTR 2A of July month, but 2B of which month it will be reflected? Very good. Reflected in GSTR 2B of August month. Understood the difference? Sir, whenever they file by the due date, it will be reflected in 2B of the month for which they are filing. Suppose if they file it after due date, it may come only in 2A, but it will not come in 2B. Then which month 2B it will come? Thereafter next month. What is next month after July? August month. In August month 2B it will be coming. Got it? Understood everyone? But which is relevant for availing ITC? 2A or 2B? 2B is only relevant for availment of ITC. Then 2A is for what? Just to know at least that idiot filed GSTR1 or not. You understood? Otherwise we need to follow up, na? Pa. Whether he filed late or not, we need to know that you check based on 2A so that you don't have to follow up with him. Otherwise you need to follow up with the supplier. For that reason we have 2A. 2A is only reference purpose. But for availment of ITC we use 2B. So say this. 2A, based on GSTR1 or invoice furnishing facility furnished by every supplier, recipient can generate a statement of inward supplies in 2A auto-populated from GSTR1 filed by supplier. But 2B is a static month-wise auto-drafted statement for regular taxpayers introduced on the GST portal. It is like 2A but remains static. What is the difference between 2A and 2B? 2A is dynamic. 2B is TDS TCS details, will it come in 2A? Yes, but it will not come in 2B. So what TDS TCS? Income tax TDS TCS or GST TDS TCS? GST TDS TCS. Details of invoices if GSTR1 filed after due date. Filed after due date. Will it come in 2A? Yes. But it will come in 2B? No. But when it will come? However, it is reflected in subsequent month. You understood? Reflected in same month 2A, but not reflected in same month 2B. It will be reflected in subsequent month 2B. Purpose. What is the purpose of 2A? Reference. But 2B for availment of ITC. What is GSTR 3B? That is a written consolidated details of outward supplies, inward supply, GST liability, GST paid, everything you will put it in 3B. 3B is the main written. 3B is the main written through which we will make the payment of taxes, etc. and all. But the time of filing GSTR1, we will not pay any taxes. Is that clear? Now this is what I told you. Supplier will report the details of outward supply in GSTR1, and if it is filed by due date, it will be reflected in 2B of the recipient. This is known as matched ITC. And to this matched ITC, we need to avail ITC in 3B. Total 6 adjustments we need to make. First 3 adjustments reflected in 2B are not reflected in 2B, are reflected in 2B, but ineligible. That's why we are deducting. Next 3 reflected in 2B are not reflected in 2B, are not reflected in 2B, but it is eligible. That's why we are taking the ITC, we are adding it. Then we are moving on to the next part. Listen, so far what we discussed, supplier will file GSTR1. Based on the GSTR1 of the supplier, the data will be reflected in 2B of the recipient, and the ITC will be availed by recipient in 3B. Correct? 1, 2B, 3B. 3 steps. 1, 2B, 3B. 1, 2B, 3B. 1 by 2B by auto populated. 3B recipient. Clear? Now, supplier filed 1 means he paid tax or not paid tax? Not paid tax. Just now I said at the time of filing GSTR1, we will not pay tax. We will pay tax at the time of filing 3B. We will pay tax at the time of filing 3B. We pay tax at the time of filing 3B. At the time of filing GSTR1, we will not do anything. Got it? So, supplier filed GSTR1 means paid tax or not paid tax? Not paid tax. But it came in 2B and we availed the ITC in 3B. Clear? Now, supplier has to file 3B. Supplier has to file 3B means he need to pay tax. He didn't pay tax. He didn't pay tax means he did not file 3B. So, what we should do? Reverse the ITC. You got it? Again I am repeating. Step number 1, supplier filed. Step number 2, it came in 2B. Thereafter, we avail. We in the sense recipient. Recipient avail ITC in. Understood up to this. Step number 4, supplier should file, but he did not file. Got it? When he did not file, what we should do? Reverse the ITC. What is the time limit by which we should have checked? By which he filed, the supplier filed the GSTR 3B. By when he should file? By when he should file? Read there. Read there. Book is there before you. Our screen also you can see. By when supplier should file GSTR 3B? September 30th of. So they gave ample time. Correct? Not next month. Next financial year. Means for entire financial year 24-25, they should have filed 3B by when? 30th September 2025. Financial year 24-25, they should have filed by 30th September 2025. Means ample time given. By the time he did not file 3B, then what will happen? Who should reverse the ITC? Recipient should reverse the ITC. By when recipient should reverse the ITC? Check there, point number 5. By when? Means how many months he has? 2 months. By 30th September, supplier should file GSTR 3B. Not file means October, November, 2 months is there for the recipient to reverse the ITC. What if recipient is not reversing by 30th November? What will happen? interest will be applicable. Reverse he need to do pa. If he is not doing by November 30th, then interest will be applicable. What rate? See there below I have given. What rate interest? 18% from the date of utilization of ITC till the date of reversal or payment. Is it clear? They need to pay the interest. But what if they reverse by November 30? No interest. If they reverse by November 30, no interest. If they are not reversing by November 30, then only interest will come. Is it clear? Now tell me these 5 steps. Step number 1, supplier files, and it is reflected in GSTR 2B of the recipient, and thereafter ITC availed in GSTR 3B of the recipient, and thereafter supplier not filed GSTR 3B by September 30 of next financial year. Then what recipient should do? Reverse the ITC by November 30 of the next financial year. Is it clear? What if supplier filed GSTR 3B by 30th September? What if supplier files GSTR 3B by September 30th? We don't have to reverse. Recipient is not required to do any reversal. Got it? Only that idiot not filed GSTR 3B by 30th September, we have to reverse the ITC. For whose mistake who is penalized? Who is penalized? Recipient is penalized. For supplier mistake, recipient is penalized here. Correct? And recipient should reverse the ITC. What is the time given to him to reverse the ITC? What if he reverses by 30th November? No problem. No interest. But if he is not reversing by 30th November, respond. Interest payable at the rate of 18%. Now concentrate. Supplier filed GSTR 3B thereafter. He did not file by 30th September. So we will reverse. What we will do? We will keep quiet. We will call the supplier. Beep, 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 beep. You understood? So left, right, center, we will take him on the 4th gear, 5th gear. Correct? Bloody idiot, I am buying from you and you are not filing GSTR 3B. Like that, definitely we will not keep quiet. Okay, and what he will do? Sorry sir, because he cannot lose the customer. Remember, today customer is the king, and because of the competition, once upon a time competition was not there. As a competition was not there, so whatever supplier says, the recipient has to listen. But today there is a heavy competition in everything. There are no entry barriers. Correct? And therefore, as per Porter's 5 forces model, so there is more bargaining power to the buyers, customers. You understood? So because there is no threat of new entrants, easily they can come, anyone can come. So automatically the bargaining power of the supplier has come down. The bargaining power of the buyer has increased. Correct? So therefore, what I need to do? I need to satisfy my customer. If I am not satisfying my customer, what my customer will do? Poda, like that he will go. You understood? He will go with some other person. Then I cannot lose my business. So I will say, sorry sir, I will file my GSTR 3B, like that. He files at a later point of time. Now can you avail the ITC? Yes, yes. As and when supplier files GSTR 3B at a later point of time, recipient can re-avail the ITC, and this re-availment no need to come in 2B. Got it? This re-availment of ITC need not be reflected in 2B. Still we can take. Do you remember I told you this point? But this entire process, what is loss? Interest if you are not reversing by November 30th. Correct? Otherwise, first plus ITC taken, next minus ITC reverse, again plus we are re-availing the ITC. Am I right? There is no loss. But if you are not reversing it by 30th November, then you need to pay interest. Can that interest be re-availed? No. Only ITC component you can re-avail. Interest and all they will not give. Come on. Giving ITC itself is too much. On the top of that, interest also they will give or no. It is whatever money you pay to government is income to the government. Clear? ITC reversed can be re-availed. Is there any time limit for re-availment? No time limit. Generally, there is a time limit we learned for availment of ITC. What is the time limit? 30th November of succeeding financial year or date of filing and return, whichever is earlier. But the time limit is not applicable in case of re-availment of ITC. Got it? Remember this. If not reversed by November 30th of next financial year, interest at 18% shall be payable from the date of, underline this, 10 times underline, date of utilization, not date of availment, date of utilization, till the date of reversal or payment. What is reversal? What is payment? If you have balance, you will reverse. If you don't have balance, you will pay. Simple pa. I gave you 1 lakh. I asked you to keep it in your bank account. You kept it in the bank account. Whenever I am asking, you will take money from the bank account and you will give. Correct? What if you spent? Then you need to pay out of your pocket. Correct? Like that, if I have balance in ITC, I will reverse. If I don't have balance in ITC, I will pay. Simple. That is this date of reversal or payment. How to determine the date of utilization? How to determine the date of utilization? Remember, easy step, easy only. That is, carefully listen. You can make note of this also. Illustration on computation of interest on account of reversal of ITC. On account of reversal of ITC, we are trying to understand. Illustration on computation of interest on account of reversal of ITC. If you are unable to see this, try to hear and write. Illustration on computation of interest on account of reversal of ITC. Now, first, ITC with respect to an invoice, ITC with respect to an invoice for which supplier, ITC with respect to an invoice for which supplier not filed GSTR 3B, ITC with respect to an invoice for which supplier not filed GSTR 3B. Okay. And what is the date of invoice? ITC with respect to an invoice for which supplier not filed 3B, say 1,50,000. 1,50,000 is the ITC. For this invoice, supplier filed 3B or not filed 3B? Not filed 3B. When? By when? By September 30th of succeeding financial year. Not filed GSTR 3B. Invoice dated 18th April 2024. Invoice dated April 18th April 2024. Okay. Then, now we need to see as to when we are utilizing the ITC of what? 1,50,000. Now say this, month, opening balance, ITC availed, month, opening balance, ITC availed, ITC utilized or reversed, ITC utilized or reversed, and closing balance. Month, opening balance, ITC availed, ITC utilized or reversed, closing balance. Now, month, let's take from April month because the invoice is dated April na. April 2024. April 2024. Opening balance, some 40,000 is there. How we got 40,000? Closing balance of previous month. ITC availed 4 lakhs, including 1,50,000 with respect to above invoice. Including 1,50,000 with respect to above invoice. ITC utilized the reversed is 2 lakhs. What is the closing balance? 2,40,000. Correct? Napa? Opening balance 40. ITC availed 4 lakh means 4 lakh 40. How much we used? 2 lakhs. So what is the closing balance? 2,40,000. Whether the balance in ITC falls below wrongly availed ITC. What is the wrongly availed ITC here? 1,50,000. Whether the balance in ITC falls below wrongly availed ITC? No. No. So which means we utilize 1,50,000 for April or not utilize 1,50,000 for April? Not utilize 1,50,000 for April. Then again, May 2024. Opening balance 2,40,000. ITC availed is 2 lakhs. ITC utilized 3 lakhs. What is the closing balance? 1,40,000. 1,40,000. Whether we utilized ITC? Yes, we utilize the ITC because the closing balance falls below 1,50,000. So to what extent we utilize ITC? 10,000. When we utilize 10,000? May month we utilize the ITC for 10,000. Are you understanding? Then again, June. Opening balance is 1,40,000. ITC availed 1 lakh. ITC utilized 2 lakhs. Closing balance 40,000. Correct? Now what happened? We utilized the ITC. How much we utilized the ITC in June month? 1 lakh. 1,50,000 to 1,40,000. 10,000 we utilized. Again 1,40,000 to 40 means 1 lakh we have utilized. Clear? Then July, ITC opening balance 40, ITC availed 5 lakhs, we utilized 1 lakh and closing balance 4,40,000. Does it mean we reverse the ITC? No. Balance reduced means we utilize ITC, but balance increased does not mean we reverse the ITC. Is it clear? Balance reduced is only we have utilized, but balance increased doesn't mean we have reversed the ITC. Now, above 1,50,000, above 1,50,000 is reversed. Above 1,50,000 is reversed in GSTR 3B of December 2025 filed on 20th January 2026. Filed on 20th January 2026. Compute interest. Compute interest. You understood the question, pa? You just quickly go through the question once, we will do the answer. Just go through the question, whatever you have written, we will see the answer for this. I am repeating it again for you. ITC with respect to an invoice for which supplier not filed GSTR 3B. By when 3B needs to be filed? By when 3B needs to be filed? By 30th September 2025. Why 30th September 2025? Because that is the date by which they need to. Financial year. Invoice is 2024 now, April 2024. So 1,50,000. Invoice dated 18th April 2024. So from April we have analyzed as to when we have utilized the ITC. So in June month we utilize the ITC. To what extent we utilize the ITC in June month? 10,000. In July month how much we utilize the ITC? Sorry, in May month we utilize 10,000 And in June month, to what extent we utilize the ITC? To the extent of 1 lakh. And this entire 1,50,000 is reversed in GSTR 3B of December 2025 filed on 20th January 2026. Compute interest. Okay. Can we proceed to the answer? Now write down the points which I tell you first. First write down. As per section 41, as per, here and write, listen, here and write, okay, because it is little theory which we need to write in exam. As per section 41 of CGST Act, I am telling you how we need to present the answer when you get a question like this related to interest computation. As per section 41 of CGST Act, comma, when supplier has not filed GSTR 3B, when supplier has not filed GSTR 3B by 30th September of succeeding financial year, has not filed GSTR 3B by 30th September of succeeding financial year, comma, recipient shall reverse the ITC. Recipient shall reverse the ITC by 30th November of succeeding financial year. Write here, rather than looking at me, you write. Only when you write, you will know how to present in exam. Director mari ukaradinga. No, you are not a company director or you are not some business magnate, etc. and all. You tell, I will listen like this. Write here. For your sake only I am telling, because it is a very important question. They can definitely test it. Okay. So recipient shall reverse the ITC by 30th November of succeeding financial year. Full stop. Otherwise, interest is payable at the rate of 18% per annum from the date of utilization till the date of reversal. From the date of utilization till the date of reversal. Okay. Now, whether supplier filed a 3B by 30th September of next financial year? No. Correct? In the present case, next paragraph, in the present case, supplier not filed GSTR 3B. Supplier not filed GSTR 3B by 30th September 2025. By 30th September 2025. And recipient reversed ITC. Recipient reversed the ITC on 21/2026. On 21/2026, but not by on 21/2026, but not by when they should have reversed, but not by 30th November 2025. Therefore, interest payable is as follows. Therefore, interest payable is as follows. How many interest computations? One or two? Two interest computations. First, interest 1 on what? Rupees 10,000 of ITC utilized. Interest 1 on rupees 10,000 of ITC utilized. In which month? For which month? For May 2024. For May 2024, when they would have filed 3B, that is on 20th June 2024. So 10,000 rupees IT is utilized on 20th June 2024. So interest from which date to which date? Interest from 26 2024 till 20th January 2026. Are you understanding this? Because they did not reverse the ITC by 30th November 2025, the interest starts from back date. What is that back date? From the date of utilization till the date of reversal. What is the date of utilization? 26 2024. You understood how 26 2024? Which month they have utilized the ITC? May month. For May month, when they will file 3B? 20th June. That is this 20th June. Is it clear? Now, how many days? 26 2024 to 26 2025. That itself is 365 days. Correct? 1 year, pa. 26 2024 to 26 2025, 365 days. Thereafter, in June month, how many days? 10 days. 2025 June. So first 365 days plus in June month 10 days. You understood how 365? 20th June 2024 to 20th June 2025, 365 days plus June month 10 days, 2025 June, July, August, September, October, November, December, January. So 365 plus 10 plus 31 plus 31 plus 30 plus 31 plus 30 plus 31 plus 20. How many number of days? 579 days. So then for 579 days we need to pay interest? Yes. On what? 10,000. Now calculate interest. 10,000 into what is the rate of interest? 18%. How many days? 579 divided by 365. How much? 2,000? 2855. Are you rounding off to nearest 1 rupee? 2855 point something you will get. How much? 0.34. So round off to 1 rupee. So 2855. Are you understanding how this interest computation we did? Then again, second interest computation on what? 1 lakh. Why 1 lakh? Because we have the balance in ITC in May 2024 1 lakh 40, but June 40 means the balance in ITC falls by 1 lakh, means 1 lakh we have utilized. Okay. So interest 2 on rupees 1 lakh, on rupees 1 lakh of ITC utilized for which month? For June 2024. So for June 2024, when they will avail the ITC? When they will utilize the ITC, sorry, when they will file 3B? 20th of July 2024. Now again, interest from which date to which date? They are utilizing in the month of June, whichever month the balance in ITC falls below wrongly availed ITC we need to see. For that month, whenever they file 3B, that date will be the date of utilization. Okay. So interest from 20th July 2024 till when are they reversing? 20th January 2026. That is again 365 days. In July 11 days, August 31 days, September 30, October 31, November 30, December 31 and January 20 days. That is how many days? 549 days. For this we need to pay interest. How much? 1 lakh into what is the rate of interest? 18% into 549 by 365. 27,074. So what is the total interest payable? Total interest payable. The total interest payable will be, so 2,855 plus 27,074. That will be 29,929 is the total interest payable. You understood how they will frame a question? Then, got the clarity about this interest computation? Respond pa. Why are we not taking 366 days? Because in numerator we did not get February month 2024. Everything starts from April, May 2024. Only in numerator, if you have February month 29 days, in denominator you need to take 366. Otherwise 365 only. Now say this. Page 96. What is the meaning of date of utilization? We learned this with the help of an illustration. First we need to see the month in which the balance in ITC falls below availed ITC. Step number 2, you need to see the due date of 3B or actual date of 3B for the month whichever is earlier, for that month. For that month in which balance in ITC falls below wrongly availed ITC, we need to see due date of 3B or actual date of 3B for that month whichever is earlier. For example, ITC wrongly availed with respect to an invoice issued by supplier for which supplier filed 3B is rupees 12,000. Invoice dated 4th May. Now we need to see the month in which the balance in ITC falls below how much? 12,000. See there, first month, May. May balance is 22. Whether the balance falls below 12,000? No. Means May 24 we have not utilized ITC. Again June 2024, what is the balance? 10,000. Means 12,000 is the ITC availed, but the balance is 10, means how much we utilized? 2,000 is utilized. Then again July 2024 balance increased, doesn't mean we reversed. Again August 2024 the balance is 4,000. Already the balance came from 12 to 10. Now 10 to 4, which means we have utilized 6,000. So conclusion, 2,000 utilized in June and 6,000 utilized in August. Accordingly 3B due date or actual date of such month relevant for computation of interest. That's what we did now. How to compute the interest we did. Clear here? Next. Sometimes supplier will cheat this section 41. When this section 41 will come? Only when supplier not filed 3B. Correct? Carefully listen. Please listen. Please listen. Supplier not filed 3B, then only recipient should reverse the ITC. Now recipient is going to the supplier and telling you file 3B first. Even though the liability is less, you file. Are you getting this? What is the cheating here? What is the cheating here? Supplier filed 3B or not filed 3B? Filed 3B. Supplier filed 3B, but he did not report full liability. He reported only lesser liability. Puridapa. Sir, supplier, if they are not filing 3B only, recipient has to reverse the ITC, pay interest, all this nonsense will come. Supplier now files 3B, but what is the mistake he is doing? He reports a lesser liability. You got it? Now, whether recipient should reverse the ITC or no need to reverse the ITC? No need to reverse the ITC. Why? First of all, when this will be applicable? Only if supplier not file. Respond here, respond here, respond here. When supplier is not filing GSTR 3B, by 30th September only section 41 will come. Correct? What if supplier files GSTR 3B? This section will not come. Correct? But there is a mistake. What is that mistake? He reported lesser liability. How will that be recovered? For that we have rule 88C. Go to page number 97 and read that. Liability in GSTR 1 greater than liability in 3B. Understood? What does it mean? My liability is 10 lakhs, but how much I am paying? Less than 10 lakhs. My liability is 10 lakhs. Seriously, I doubt whether you studied and are coming or no. I doubt pa. You listened all these things before or first time you are listening? Already you listened, na? So liability in GSTR 1 greater than liability in 3B means what? My liability in GSTR 1 10 lakhs. But am I paying 10 lakhs or paying less than 10 lakhs? Less than 10 lakhs. Then I will get intimation in rule 88C. Supplier filed GSTR 1 and GSTR 3B. Both they filed. But liability in GSTR 1 exceeds liability in 3B. Whether recipient is required to reverse ITC as per rule 37A. Just now we discussed na. this section 41 read with rule 37A, whether this will be applicable or not applicable? Not applicable. So recipient is not required to reverse ITC as per rule 37A because supplier filed GSTR 3B. Now there will be one notice given to him, form DRC 1B. Within 7 days, he need to either pay the difference along with interest or he need to explain the reason for difference. If he neither pays nor explain the reason for difference, then officer is satisfied or not satisfied, officer not satisfied or not replied within 7 days, then recovery of such difference along with interest and penalty. This is similar to rule 88D, correct? That's why I gave a comparison between 88C and 88D. See there. What is the trigger point for rule 88C? When 88C will come into picture? Liability in GSTR 1 exceeds liability in GSTR 3B. When 88D will come into picture? ITC in 3B greater than ITC in 2B. And what will happen? In case of 88C, notice, first notice, that is in DRC 1B, but here 1C. You can remember 88C a rule. Before C, what is alphabet? That is a notice, 1B. Then 88D, what is before D? So 1C. Got it? Now, how they will communicate? They will upload in the portal or send an email. Within 7 days, what we need to do? Either pay the difference or explain the reasons for difference or partial payment and explain the balance. What will happen if you are not giving reply or not paying within 7 days? They will not give another notice, direct recovery. Direct recovery of tax under section 79, liability posted in electronic liability ledger. Only in case of 88D. This is the only place there is a difference. This is the only place where there is a difference between 88C and 88D. Otherwise 88C and 88D is same, correct? So what will happen in case of 88C? No notice, no further notice. Directly they will do recovery. But in case of 88D, what they will do? Another notice, another show cause notice they will be giving. Is it clear? And till the time we pay the difference or explain the reason for difference, what they will do? Till the time we pay the difference or explain the reason for difference, what they will do? Same. GSTR 1 is blocked. GSTR 3B is blocked. If 2 months, if you are not filing, e-way bill also will be blocked. And this will also lead to cancellation of registration or suspension of registration. Clear? You may get 3 possible questions from this. Rule 88C or Rule 88D or a comparative difference between Rule 88C and Rule 88D. Any type of question you may get. Okay. Next. With this we completed manner of availment of ITC. So far what we have discussed is one section. What is that section? 41, which deals with availment of ITC. Along with 41 we have discussed 4 rules. What are those 4 rules? Rule 36 sub rule 4, self-assessed ITC to be availed. 6 adjustments, matched ITC, 3 minus, 3 plus, that one. Then rule 37A. What is rule 37A? Supplier not filed GSTR 3B by 30th September, we need to reverse. That is rule 37A. Then rule 88C. That is liability of supplier in GSTR 1 exceeds the liability in GSTR 3B. Then rule 88D. What is rule 88D? ITC availed in 3B is greater than the ITC as per 2B. Clear? Then we are moving on to the next section, that is manner of utilization of credit. That is given in section 49 subsection 5. Now carefully listen. I have all the credits and all the liability, but how I need to utilize it? So that we need to understand now. Carefully listen. I have CGST credit. I have CGST credit, SGST credit, UTGST credit and IGST credit. Same way I have liability, CGST payable, SGST payable, UTGST payable and IGST payable. Now tell me, can I use CGST credit for payment of CGST payable? Yes, CGST credit we can use for payment of CGST payable. SGST, UTGST, IGST. SGST credit can use for payment of CGST, SGST, UTGST, IGST. UTGST credit can use for payment of CGST, no, SGST, UTGST, IGST. IGST credit can use for payment of all liabilities. Means first principle we need to remember, there is no restriction of IGST. What does it mean? IGST credit can be utilized for payment of any liability and any credit can be utilized for payment of IGST liability, correct? But with respect to other three, respective credit is used for payment of respective liability and cross utilization is not possible. So that is the first principle you need to remember. There is no restriction with respect to IGST. That is, IGST credit can be utilized for payment of any GST liability and any GST credit can be utilized for payment of IGST liability. Amongst the other taxes, that is amongst the other taxes, respective credit can be utilized for payment of respective liability and cross utilization is not allowed. Understood? So this you can easily remember with one more simple point. Okay, say Mr. X, Mrs. X, parents of Mr. X. Mr. X is IGST, Mrs. X is CGST, parents of Mr. X is SGST or UTGST. Mr. X will adjust with his parents will adjust with him. He will adjust with his wife will adjust with him. Whereas, parents will not adjust with his wife and his wife will not adjust with his parents. Correct? So, IGST can be utilized for payment of CGST, CGST can be utilized for payment of IGST. Adjustment possible. IGST can be utilized for SGST, UTGST, SGST, UTGST for IGST. That adjustment is possible. But CGST with SGST, UTGST or SGST, UTGST with CGST is not possible. Clear? Then next. Second principle. Priority. What is the priority, sir? Which I need to pay first, sir? I have IGST credit. Carefully listen. I have IGST credit. Which I should pay first? First whose money will be spent, pa? Mr. X is IGST, pa. First whose money will be spent? Correct? So, IGST credit for IGST. My money for myself. So, first priority. Then, CGST, SGST, UTGST. Wife is important, parents is important. Both are important. That's why no priority. Any manner, any proportion. You got it? Clear? IGST credit first for payment of IGST liability. When I have excess, I can use for payment of CGST, SGST or UTGST, any manner, any proportion, case to case basis. Case to case basis, it depends. It depends. You cannot tell like that. Always CGST, always wife, always parents, like that you cannot tell. You can never tell like that. Okay, depends. What is it depends? Sometimes, wife, sometimes parents, case to case basis, like that. IGST, when you have excess credit, depending upon the liability, you utilize. You understood? There is no priority there. Then, CGST credit, pa. CGST. Now, Mrs. X. Will first think of Mrs. X or Mr. X? Another? Mrs. X will first think of Mr. X. Wife will think of husband first. Naya, you are not getting married, na? You will not know. Future you will know. Wife will think about wife only first. So, CGST credit first for? Then only husband. You understood? IGST. Same way, parents, post marriage. Parents after their kids' marriage. First, they will think about them only. Then only son will come into picture. You understood? Seriously, here. Because they will tell, after you get married, still donkey's age you got, you are dependent on me, like that they will tell. You understood? So therefore, first they will think about themselves only. If there is anything left, they will give it to you. Next, you understood the priority? What is that priority for IGST credit? First for IGST, then for CGST, SGST or TGST in any manner, any proportion, but all three, first for their liability, then only for IGST. That is the second principle. Priority, IGST credit first for IGST liability, then CGST, SGST or UTGST in any manner, any proportion, all other three first for its liability, then only IGST. Now, you are badly in need of money. You are badly in need of money. You are Mr. X. What you will do? You have some liability to pay. You have some liability to pay. What you will do? First you will ask parents. No, first, no. You will take from out of your pocket. Check whether anything is there. Napa, your father will try to pay liability out of his earnings, correct? Then what? Then wife. Borrower last. Then wife, correct? Thereafter only parents, because after marriage, if you go to pay, parents and all, that won't be good. So therefore, for payment of IGST liability, first IGST credit, then so that is the third principle. Fourth principle, for payment of IGST liability, credit shall be utilized in following order. First which one? IGST. Next SGST or UTGST. Then, so usually whose money will be exhausted first? IGST. Is it clear? Because whenever it comes to spending, it is always the head of the family. So that is Mr. X money only will be spent. So therefore, which credit you need to utilize first? Before utilizing CGST, SGST credit, credit of IGST should be completely exhausted. Understood? These are the four principles. Come on, quickly tell me these four principles. Number one, there is no restriction on IGST, which means IGST credit can be utilized for payment of any GST liability and any GST credit can be utilized for payment of IGST liability. Between the other three, respective credit for payment of respective liability, cross utilization is not allowed. Second principle, order of utilization. IGST credit first for IGST liability, thereafter CGST, SGST in any manner, any proportion. And next, other three, first for its liability, then only for IGST. Next, third principle, before utilizing CGST, SGST credit, the credit of IGST should be completely exhausted. And then fourth principle, for payment of IGST liability, first IGST credit, then CGST credit, and then SGST or UTGST credit. Clear? Now, see this, IGST credit after utilizing for payment of IGST liability can be used for payment of CGST, SGST or UTGST in any proportion. So, multiple answers are possible in exam, but what we need to do? Just check the CGST, SGST liability. In that ratio, you need to apportion. Okay. If you want, you can make note of this illustration, otherwise not required. This is illustration on utilization of ITC. Illustration on utilization of ITC. You have CGST, SGST and IGST liability. CGST, SGST and IGST liability. Gross liability. Gross liability, CGST is 2000, SGST is 2000, sorry, 5000, 5000, 5000 you keep, 5000 CGST, 5000 SGST and 5000 IGST. ITC 2000, 2000 and 10,000. Now what should be the answer, final answer? What should be the total of net liability? What is the total of gross liability? 15,000. What is the total of ITC? 14,000. So 15,000 minus 14,000, 1,000 rupees will be your net liability. Is it clear? Then only your answer is correct. But total liability minus total ITC should be your final answer. Correct? Total liability 15. Total ITC 14, and 15 minus 14, 1000. You should get 1000 rupees. Then only your answer is correct. Now, we will do the computation. First, CGST, SGST, IGST. Gross liability. Which ITC you need to use first? Which ITC? IGST you need to use first. So you will use it for payment of what? IGST credit you need to use first. And again, that is second principle. Second principle says, before utilizing CGST, SGST, utilize IGST. First you need to utilize IGST. Then that is third principle. And second principle says what? Priority. IGST credit first for payment of. Then still how much money you have? 5000. Can we use it for payment of CGST fully? No, don't do that. Because if you do that, this 2000 CGST credit will be carried forward and that cannot be set off with SGST. So don't do that. Then which ratio you need to divide? How the liability is? How CGST, SGST liability is? Equal. So therefore divide it equally. 2500 and 2500. Got it? That's what I said, pa. IGST credit after utilizing for payment of IGST liability can be used for payment of CGST, SGST in any proportion. My view is that depending upon CGST, SGST liability, it should be apportioned. What is the CGST, SGST liability? Equal. So therefore we will apportion it equally. 2525. Now what is the balance that you have got? 2500, 2500 and 0. How much is the CGST and SGST credit that we have? 2000 and 2000 we will set off. So we will get 500, 500 and 0. What is the total? 1000. So therefore our answer is correct or not? Yes, because the total of the liability is 15 and the total of the ITC is 14. 15 minus 14 we are getting 500. So this answer is correct. Net GST payable. Okay. Sir, any alternative answer? Yes. Alternative answer is also there. But the total will be 1000 rupees only. How, sir, alternative answer? Instead of 2500 you use 3000, 3000 and 2000. Possible? Then what will happen if you use 3000, 2000? Then it will be here 0 and here it will be 1000. Correct? Because 5000 minus 2000 minus 2000. Then also answer will be same. Any answer you can do, pa. Till the time the total of the net liability will be same. Okay. So in exam what you need to do? Put one total column also. Put one total column also in exam so that if your answer is not matching with the suggested answer, at least they will see the total column and they will understand that yes, your answer is correct. So total column 15,000, 14,000 and 1000. This total column you ensure that you are adding in exam. Okay. So that is about this first point. Look into the next point. What about GST compensation cess? GST compensation cess can be availed as ITC and utilized only for payment of GST compensation cess on outward supplies. Which means, can GST compensation cess be used for payment of IGST? No. GST compensation cess is like our relatives, pa, who will not adjust with anyone. Correct? We will not adjust with our relatives. Na, pa. Some relatives will be there, na. What they will do? Anything we do, they will tell something. Okay. And we will not adjust with them, they will not also adjust with us. But they will adjust with themselves. You understood? That is, this GST compensation cess cannot be utilized for payment of any liability except GST compensation cess. So we completed second part also. First part is availment of ITC we discussed. Second is utilization of ITC. Now look into condition for availment of ITC. What are the conditions to be satisfied for availment of ITC? Condition number 1. Already we know that condition. Who should avail ITC? Total 8 conditions are there, pa. Who should avail ITC? Registered person only should avail ITC, unregistered person should not avail ITC. Naturally, he will not file 3B, so availment of ITC not possible, correct? Who will file return? Who will file return? Only a registered person will file return. How to take ITC? How availment of ITC will happen? Only in GSTR 3B. You don't forget the basics here. Whatever we discussed, availment of ITC, how we will avail the ITC? In GSTR 3B. Who will file GSTR 3B? Only a registered person will file 3B. So, which means unregistered person will not file 3B, so cannot avail ITC. What is the first condition? Only registered person can avail ITC. Suppose if it is used for non-business purpose, can we take ITC? No. Means what is the second condition? It should be used for business purpose. Used intended to be used. Both. What is the difference between intended to be used versus used? You purchase something, but you have not used it. You will be using it in future. That will be called as intended to be used. Can we take ITC? Yes, it's not like section 32 depreciation. Section 32 depreciation says that only when the asset is put to use you can claim depreciation, correct? But ITC is not like that. Whether you put to use, you use it, or you are not using it, you may be using it in future. You purchase it, you can take the ITC. Again, it will differ between, this AS10 also. AS10, accounting for fixed asset, which says that only when the asset is put to use, we will be able to capitalize the asset for that year, and up to the date it is put to use. AS16 says all borrowing costs should be capitalized. Too much I am going, no? Okay, let me restrict. So, even it is same as per AS also, okay? AS as well as this income tax, which says that only when the asset is put to use, you will be able to recognize the asset and you can claim the depreciation. Okay, va? Now, coming to GST. GST purpose, even though you are not putting it to use, you may be using it in future, still you will be able to take the ITC. Okay. So, sometimes I will get deviated and go travel too much and all. No, don't worry, I will come back, because like a regular batch, I will tell the flow, that's why. Inward supply on which ITC should be availed should be used or intended to be used. Used means used for business, or intended to be used in future in the course or furtherance of business. Course of business means existing business. Furtherance of business means some business which you are going to start in future. And third condition, recipient should be in possession of tax paid document. Possession of tax paid document. What are the various tax paid documents? Tax invoice, debit note, ISD invoice and bill of entry. These are the various tax paid documents. And just because he purchased it, he cannot take ITC. He should be in possession of those documents. What if the tax invoice is missing? He cannot take ITC. What if the ITC is already availed? Reverse. So, what are the various tax paid documents? Total 4. Tax invoice, debit note, then bill of entry. Bill of entry will be at the time of import we need to file. Then ISD invoice. What is ISD? Input Service Distributor. You can write somewhere here. ISD is Input Service Distributor. Sir, who is an input service distributor? Head office. Head office or corporate office, which will take the credit and distribute the credit to their branches, is known as input service distributor. So, what will happen? Sometimes we will raise invoice to the head office. Simple there is a company which is having 4 branches. Now, we do the audit for all the 4 branches, but we will raise invoice to head office, each branch separately. Head office, we will raise audit report or invoice to the head office. Now, head office will take the credit of the audit services and distribute the credit to the branch offices. That concept is known as input service distributor. So, therefore, that is ISD invoice. Bill of entry, when it will come? In case of import. So, 4 documents: tax invoice, debit note, ISD invoice, bill of entry. Now, what are the 3 conditions we have seen so far? Number 1. Only registered person can avail ITC. The inward supply should be used or intended to be used in the course or furtherance of business, and the recipient should be in possession of tax paid document. and recipient should have actually received the goods or services. What does it mean? Invoice is January month. Goods are received in March month. Which month we can take ITC? January month or March month? March month, because you should have actually received the goods or services. Service also same, but usually services they will manipulate. No one will know now when the service is received. For goods there is e-way bill, so easily everyone will know when the goods are received. For service they will not. So whenever they receive invoice itself, they will assume that they have received services and they will take the ITC, but actually it is wrong. So you should take ITC only in the month in which goods and service are actually received. Then supplier should have furnished the details of invoice in GSTR1. For just now we saw section 41, only matched ITC can be taken, correct or not? If we need to take matched ITC, what our supplier should have done? Reported the details in GSTR1, correct? And by when he should have paid the tax? By when he should have filed 3B? September 30th. So that is also one of the condition, correct? Supplier should have paid the tax with respect to such supply within September 30th of next financial year. And recipient should have filed the returns in GSTR 3B. Without filing returns in GSTR 3B, we cannot take ITC. And one more condition, GST paid on inward supply should be reflected in 2B under ITC available column and should not be restricted. I am just showing you practically as to how this GSTR 2B will look like. So this is your GSTR 2B. In this GSTR 2B, the moment we open, we will be having 3 columns: ITC available, ITC not available, ITC reversal. You know what is ITC reversal? If your supplier not filed GSTR 3B by September 30th, you need to, how do you know whether your supplier filed 3B or not? You will not know. That's why the data will be available in ITC reversal. Is it clear? So when you click on ITC reversal, say this. When you click on ITC reversal, it will show you some information. ITC reversal on account of rule 37A. What is rule 37A? Your supplier not filed 3B, you need to reverse the ITC, na? That data will come here. You got it? Means this much you need to reverse ITC. Means what? Means what? Your supplier has not filed. Who is that supplier? You click on this, you will know that supplier GSTIN and call him and ask. You understood or not? Whatever you want to ask, you ask. Got it? That is how we will see this. Okay, va? Next. There are 2 more columns. What are the 2 more columns here? ITC available, ITC not available. What is this ITC not available? You may get some amount in ITC not available. Then can we take ITC or we cannot take ITC? We cannot take ITC. Why it will come under ITC not available? Again, supplier's mistake. Supplier might have done something wrong, because of which it will be coming under ITC not available. Can we take this as ITC? No. Then what is that we should take as ITC? Only that is reflected in ITC available column. Now, tell me out of these 8 conditions, what are the 2 basic conditions? First 2. Only registered person can avail ITC and the inward supply should be used or intended to be used in the course or furtherance of business. Then 3 conditions. Recipient should follow, recipient should fulfill. What are the 3 conditions recipient should fulfill? He should be in possession of tax paid document and he has actually received the goods or services and he filed GSTR 3B, correct? Then 3 conditions in the hands of the supplier. What are the 3 conditions in the hands of supplier? Number 1, supplier should report the details in GSTR 1 and supplier should pay the tax by 30th September of, that is GSTR 3B by 30th September of next financial year. And one more point, supplier should not have committed mistake so that the ITC will not come in ITC not available. ITC should come in ITC available. GST paid on inward supply should be reflected in GSTR 2B, under which case ITC available and should not be restricted. Is it clear? When it will be restricted, we have a section 38. As per section 38, in few cases ITC will be restricted in GSTR 2B. What are those few cases ITC will be restricted in 2B? We have in section 38. That information you can see in returns chapter. You give the page number reference here. Refer page number 166. Refer page number 166. So what is this, pa? You have, that is your supplier, you have purchased, and your supplier has filed the GSTR 1. But even then, it will be coming in 2B under ITC not available. Why? See the first point. In the following cases, even though supplier declared the details of outward supplies in GSTR 1, even though supplier declared the details of outward supplies in GSTR 1, ITC can be restricted in 2B as per section 38. What is the first reason? Supplier is a newly registered business. So your supplier is a newly registered business, pa. Means this year only they have started business, and if you buy from them, you will not be able to take ITC. Why, sir? Why if I buy from them I will not be able to take ITC? Because they started business new now. They have to regularize their returns. Till that time you will not be able to take ITC, because what if they are making a fake registration and just filing GSTR 1 and leave? You got it? They will just get a fake registration, pa. They will file the GSTR 1. They will not file 3B. Then in that case, anyhow you need to reverse the ITC, na? Correct or not? That's why they are telling wait for some time. Your supplier is a newly registered person. Means till the time they regularizes their return, you will not be able to take ITC. Got it? So next time onwards, when you are purchasing from any supplier, what is the question that you need to ask? Are you fresh, sir? Understand? Are you newly registered person, sir? Yes. Sorry, sir, I will not buy from you, because if I buy from you, I will not be able to take ITC. Number 2, supplier has filed GSTR 1 but not GSTR 3B. What does it mean? Sir, if they are not filing 3B, anyhow we need to reverse, na, sir? Correct. That is now. But in the past, this was not there. Now, if they are not filing 3B, we need to reverse, pa. But for the past periods, some old periods, if they have filed 1, not filed 3B, first of all, we cannot take ITC. If we take ITC only, we will reverse, na. That is for the current period. I am talking about some 3 years before, 4 years before. For some months, they filed GSTR 1 but not filed GSTR 3B. Then current month it will come in 2B under ITC not available. Means we cannot first of all take ITC. The difference between what we have seen there in section 41 is that it will come in 2B under ITC available. We are taking it, but the supplier not filed 3B, we need to reverse. Are you getting this? But here, first of all, it will come under ITC not available, means we can avail or we cannot avail the ITC. We cannot avail the ITC. You got it? Then next, supplier liability in GSTR 1 greater than 3B, past period. Again, supplier ITC in GSTR 3B greater than 2B. Supplier is committing certain mistakes in the past. What are those mistakes? Either he is a newly registered business, or his liability in GSTR 1 greater than 3B, or he filed 1 not filed 3B, or he availed ITC in 3B greater than 2B, or he got demand notices for non-payment of tax and the default continues, or he did not pay 1% of the liability through cash ledger as per rule 86B. As per rule 86B, you have to pay 1% of your liability through cash ledger, even though you have sufficient balance in the credit ledger. If you are not following that, that is also one of the reasons for which your recipient will not be able to enjoy the ITC. All these cases, whose mistake, pa? Again, who is penalized, pa? You understood? So, in these cases, ITC will come in 2B or it will not come in 2B? It will come in to be. மூக்கிலே குத்துவ ஒழுங்கா சொல்லுங்க. So it will come in to be or it will not come in to be? It will come in to be, but it will be under which column? ITC available or ITC not available? ITC not available. So can we take ITC or we cannot avail ITC? We cannot avail ITC. Understood? What are the cases? 6 points. First, supplier is a newly registered person. Filed 1, not filed 3B. Liability in 1 greater than 3B. ITC in 3B greater than 2B. Defaulted in payment of tax and default continues. Non-payment of 1% of liability through cash ledger. Okay. So in these cases, recipient will not be able to take ITC. Now come back to this condition for availment of ITC. Understood here these 8 conditions? Now see there. What can be availed as ITC? Input tax can be availed as ITC. What is the meaning of input tax? Either CGST, SGST, UTGST charged on supply of goods or service or both made to a registered person. It also includes tax paid on RCM. I told you already. Even tax paid under RCM also can be availed as ITC. Even IGST paid on import of goods. Previously we had CVD and SAD, and subsuming that CVD, SAD into GST, we have now IGST. Even IGST paid on import also we can take as ITC, but it does not include tax paid under composition scheme. So some people are eligible for composition scheme. Rather than paying GST at the regular rate, they will be paying GST at the reduced rates. First of all, they should not recover the GST from the recipient. If I am under composition scheme, I should not collect GST from you. If I collect GST from you, you will not be able to take ITC. Got it? I should not collect first of all. But even if I recover from you, you will not be able to take ITC. That is this, it does not include tax paid under composition scheme. This is the meaning of input tax. Then, generally, you should be in possession of valid tax paid document. Okay, valid document means tax invoice. But I have a document which does not contain all the details of tax invoice. Generally, tax invoice should contain supplier registration, supplier address, recipient GSTIN, and HSN for goods, SAC for services, description, value. Lot of things should be there in the tax invoice. But I have a document, but the document don't have all the details. What minimum details that should be present in the document so that it will be called as a valid invoice for availment of ITC? Apart from date, what details should be there? Minimum details. Date should be there, but apart from date, supplier GSTIN, next recipient GSTIN, description, then only you know now what inward supply it is, then value, then tax and place of supply if it is interstate supply. These 6 details should be there. See there below. Description of goods or services, value and the amount of tax, GSTN of supplier and GSTN of recipient, and place of supply if it is interstate supply. These are the minimum details that should be present in a document to be called as an invoice. If the invoice does not contain all the specified particulars but contains the following details, ITC can be availed by such person. Then what is the meaning of inward supplies? Inward supplies means purchases. Your purchase is fully divided into 3: inputs, input service, and capital goods. Inputs means goods which are charged to P&L other than capital goods. Then what is capital goods? Which are capitalized. You are buying, for example, I am buying a camera, iPad and light, etc. and all. What I will do? Capitalize or charge it to P&L? Capitalize. Therefore, it will be coming under capital goods for me. If I buy paper, stationery, office stationery, or batteries, etc., what I will do? Charge it to P&L. Then it will be treated as inputs. And I take immobile property on rent. That will be my input service. Understood? So every registered person, inward supplies are categorized into 3: inputs, input service, and capital goods. Inputs means goods which are charged to P&L, and capital goods means which are capitalized, and any service received will be input service. But all these 3 should be used in the course or furtherance of business, then only we can take ITC. Then see this deemed delivery concept. Deemed delivery means when goods are delivered to some other person, okay, on behalf of the registered person, can the registered person avail ITC? Example, bill to ship to transactions. Carefully listen. I am raising invoice to you. You placed an order with me, I am raising invoice to you. You are my billing address. I raised invoice to you. But you are asking me to deliver the goods to some other person, maybe your customer. Now in this case, I will raise invoice to you, but I deliver the goods to that some other person. You are A. You are A. And the goods are delivered to B. Now tell me, who will take ITC? A or B? A. Because A is only having invoice. But what of the condition says that you should be actually receiving the goods, but you have not received the goods. Then can you take ITC? You cannot take ITC. Then same way, B. B received the goods, but B is not having invoice. So B cannot take ITC. That's why they brought in this deemed delivery. Whenever B received the goods on your behalf, it is deemed that you have received the goods and you can take ITC. Is it clear? When the goods are delivered to a third person on behalf of the registered person, it is deemed that the registered person has received the goods and they can take ITC. Same way services also. On your behalf, if I provide services to some third person, on your behalf, if I am providing service to a third person and raise invoice to you, the day on which the third person received the services, it is deemed that you have received the services and you can take ITC. Example, say now that you are completing CA intermediate and CA final you have joined. When you join in CA final, you will be in articleship. Now your principal has paid the fees and for which I am providing coaching to you. Can I raise invoice to your principal? Yes. And can he take ITC? Yes. Under the deemed delivery concept. The date on which you received the coaching on behalf of that principal is deemed that the principal has received the coaching services and they can take ITC. But it should be in the course or furtherance of business. Means you should be part and parcel of articleship. The moment you complete the articleship, thereafter if we do that, the principal cannot claim that it is in the course or furtherance of business. Understood? Sir, same way, can our parents take ITC on our coaching fees? Yes. On your coaching fees, whatever GST you have paid, your parents can definitely take ITC provided you are part and parcel of your parents' business. If you are part and parcel of your parents' business, your parents can definitely take ITC, but the invoice should be in the name of your parents, not in your name, under their GSTIN. Definitely they can. Same logic, deemed delivery logic. When the goods and services are provided to a third person on behalf of the registered person, the date on which the third person has received goods or services is deemed that the registered person has received the goods or services. When goods are delivered to any person or service are provided to any person on the instructions of the recipient, the date on which such person has received goods or service is deemed to be the date on which recipient has received the goods or services, which means in case of bill to ship to transaction, billing address can avail ITC. Is it clear? Next. What if goods are received in lots or installments? When can we take ITC if goods are received in lots or installments? On receipt of last lot or installment. For example, against a single invoice, I need to deliver 100 units of a particular product. First month 30 units, second month 30 units, third month 40 units. Now all 100 units when you can take ITC on receipt of last lot. Okay. So that is up to this. We'll take a break and then we will continue with this reversal of ITC and other points. So afternoon we are going to complete this and we are going to discuss blocked credits. That is an important area, that block credits we are going to discuss. So we will meet at 2 o'clock. For now it is 1:15 pa. 2 o'clock we will meet. Okay. 45 minutes is enough, no? Yes. Thank you. Okay, we'll start. So in the previous session, we started with input tax credit and we completed section 41, which deals with availment of ITC. Along with that, we have seen few rules, that is rule 36 sub rule 4, which says that only matched ITC can be availed, and then we have seen rule 37A, wherein if supplier not filed GSTR 3B by 30th September of the succeeding financial year, we need to reverse the ITC by 30th November, otherwise we have to pay the interest. And then we have seen rule 88C and rule 88D. Rule 88C talks about liability in GSTR 1 greater than liability in 3B for one or more tax periods, then in that case they will be giving notice. 88D is also similar to that. That is, if I avail the ITC in 3B which is more than 2B, then we will get a notice and we need to respond to that within 7 days. And till the time we are responding, or that is we are making payment, or we are giving the reply, our GSTR 1 will be blocked, which is common for both the cases. Our GSTR 1 will be blocked and 3AB will be blocked. If 1 and 3B is blocked for 2 consecutive periods, then E-way will also gets blocked, and that will lead to suspension of registration. Then we moved on to section 49 subsection 5, that is manner of utilization of credit. There I told you first principle that there is no restriction with respect to IGST, means IGST credit can be utilized for payment of any GST liability, and any GST can be utilized for payment of IGST liability. But with respect to remaining 3, respective credit should be utilized for payment of respective liabilities. And then second principle what we have seen is that before touching CGST, SGST credit, the credit of IGST should be exhausted. And then priority also we discussed. What is that priority? First IGST should be utilized for payment of IGST, then between CGST, SGST in any manner, any proportion, other 3 first for its liability, then for IGST. Then last principle for payment of IGST liability, first IGST credit, then CGST credit, and thereafter SGST or UTGST credit. Then we moved on to section 16, condition for availment of ITC. Total 8 conditions should be satisfied, that is only a registered person should avail ITC, and the inward supply should be used or intended to be used in the course or furtherance of business. And 3 more conditions from the recipient point of view, that is the recipient should be in possession of tax paid document, recipient should have actually received the goods or services, and the recipient should file the return in GSTR 3B. Then 3 conditions from supplier point of view, that is the supplier should report the details in GSTR 1 and that should be made available to the recipient, and then supplier should pay the tax, that is file 3B by September 30th of the succeeding financial year, and whatever details reported by supplier should not be in the ITC not available in 2B, it should be under ITC available. And from there we discussed as per section 38, what are the situations where ITC may be coming under ITC not available, even though supplier files GSTR 1, it will come in 2B, but it will be under ITC not available. I told you 6 situations. That is, supplier is a newly registered person, or supplier filed 1 not filed 3B, or liability in 1 greater than 3B, or ITC in 3B greater than 2B, or there is a notice or default is continuing and he failed to pay 1% of liability through cash ledger. And then we proceeded to, in case of deemed delivery, that is when goods and services are delivered to a third person on the direction of the registered person, it is deemed that the registered person has received the goods or services on the date when the third person has received the goods or service. So the registered person can avail ITC. And then what are the minimum documents, like what are the valid tax paying documents? Tax invoice, bill of, then debit note, then bill of entry, and then ISD invoice. There are some minimum details that should be present, and it will be called as a valid invoice for availing ITC, that is GSTN of supplier, GSTN of recipient, and then description of the goods, value of the goods, and taxes, and place of supply in case of interstate supply. Then we discussed if the goods are delivered in lots, that is against a single invoice, when goods are delivered in lots, only on receipt of last lot, ITC can be availed. Now, we are discussing rule 37. What is this rule 37? Supplier has raised the invoice. Carefully listen. I am your supplier, I am raising invoice to you, you are my recipient. You have not made payment to me. Can you avail the ITC? Yes. Again I am repeating. I am your supplier, you are my recipient, I am raising invoice to you. You have not made payment to me. Can you avail the ITC? Yes. Even if you have not made payment to me, you can avail the ITC, but that ITC what you are availing, okay, so is not final. because you have to make payment to me within 180 days from the date of invoice. Because to avail ITC, nowhere it is given that the recipient should make payment to the supplier within, like supplier, they don't have to make payment. But another proviso says that the recipient should make payment to supplier within 180 days. Otherwise, so much of the ITC availed by recipient needs to be reversed along with interest at the rate of 18% per annum. That is this. Carefully read. If recipient has not made payment, value plus tax to supplier within 180 days from the date of invoice, then so much of the ITC proportionate to the amount not paid to supplier availed by the recipient shall be reversed along with interest 18%. But always interest will be computed from which date to which date? From the date of utilization of ITC till the date of reversal. What if the availed ITC I have not utilized at all? Then whether the reversal shall arise? No. The availed ITC I should have utilized. However, interest not payable if the availed ITC is not utilized. For example, within 180 days you gave me 80%, 20% only you have not made payment. Then how much you need to reverse? Proportionate to 20%. For example, 1 lakh plus 12,000 is the invoice value. Carefully listen. 1 lakh and 12,000. 1 lakh 12,000 will be the invoice value. 1 lakh 12,000. 1 lakh 12,000 is the invoice value. Means you should have made payment of 1 lakh 12,000 to me within 180 days. Not just 1 lakh or 12,000. Both 1 lakh and 12,000. How much you paid? 80% you paid. 80% you paid means how much you paid? 1 lakh 12,000 into 80%. 89,600. What is that you have not paid? 20%. What is the ITC component related to the 20%? Come on. Do calculation. Do calculation. Take your calculator. 1 lakh 12,000 is the invoice. 80% is paid within 180 days. That is 89,600. What is not paid? 20%. What is the 20%? 22,000. In the 22,400, what is the GST component? That 2,400 needs to be reversed. Is it clear or not? You understood, pa? That is in this GST component, how much ever is not paid, that needs to be reversed. What is the GST not paid? 12,000 into 20%. So that much of ITC the recipient should reverse. Is it clear? What if the recipient is not having balance in ITC? They will pay. Now, that's what they are telling. ITC proportionate to the amount not paid. Say for example, within 180 days you have not paid fully. Entire 1,12,000 you have not paid. So 12,000 you are reversing. Correct? Again afterwards you will make payment to me. Can you re-avail the ITC? Yes. Suppose if you have paid only 50%, then only 50% can be re-availed. Okay, is there any time limit for re-availment? No. We come across re-availment in two places. Only two places we have re-availment. What are they? Number one, Rule 37, this rule, Rule 37, non-payment of consideration to supplier within 180 days, we reverse the ITC. Again, as and when we make payment to supplier, we can re-avail the ITC without any time limit. Same way, 37A, what is 37A? Supplier should file GSTR 3B by 30th September of succeeding financial year. If supplier not filed GSTR 3B by 30th September of succeeding financial year, then we need to reverse the ITC, and again as and when supplier files we can re-avail the ITC. In both these re-availment of ITC there is no time limit, we can take. Got it? Then however this provision is not applicable. This provision is not applicable in the following cases. What is that? Number one, supply covered under RCM. In case supply covered under RCM, who will make payment to government? Recipient. So therefore he don't have to make payment to supplier within 180 days. Then supply without consideration. There are some activities which are treated as supply without consideration. The DRIP, DRIP. In that case, consideration itself is not there, wherefrom recipient will make payment to supplier within 180 days. Then last, payment to third party on behalf of supplier. That is, you have not made payment to me, but you made payment to some other person on my behalf. For my creditor, you made payment. My creditor, you made payment. Means indirectly I am collecting, correct or not? Even though I have not actually collected, but you have already made payment to my creditor, to a third person on my behalf. So therefore I have received it. So 180 days condition is not applicable. Is it clear? So this is important part. Three places 180 days condition is not applicable. What are they? Number one, supply covered under RCM, and supply without consideration. Payment to some other person on behalf of the supplier. ITC can be reavailed as and when payment is made to supplier after 180 days, but interest paid cannot be availed as ITC. So there is no time limit for reavailment. Then next, ITC not available in case of depreciation computed on GST. Generally, when you follow block of assets method, that is section 32, income tax, block of assets method, how will you calculate depreciation? First you will take opening WDV of the block, correct? Huh? And that opening WDV, you will be adding to it additions, then thereafter any sale. 1 second. Any sale if you are making or disposal you are doing, that you will deduct, and closing WDV. Now say you purchased an asset for 11 lakh, 10 lakh plus 1 lakh 20,000, 11 lakh 20. Now how much you will add in the block? 10 lakhs or 11 lakh 20? Again I am repeating, you purchase asset for 10 lakh plus 1 lakh 20,000 GST, so 11 lakh 20,000. Now in the block of assets, how much you will add? 10 lakhs or 11 lakh 20? 10 lakhs. If you add 10 lakhs, then 1 lakh 20 you can take as ITC. What if you add 11 lakh 20? No ITC, that is this. So purchase of capital goods 10 lakhs, GST on the same is rupees 1 lakh 20,000. If depreciation is computed on 11 lakh 20,000, then ITC with respect to 1 lakh 20,000 is not available. That is given in section 16 subsection 3. Then 16.4 talks about the time limit for availment of ITC. What is the time limit for availment of ITC? 30th November of the next financial year or date of filing and return, whichever is earlier. But this time limit is not applicable in one case. Which case? Reavailment of ITC reversed earlier, correct? Huh? In case when you are reavailing. So time limit not applicable in case of reavailment of ITC. In case of debit note, how you need to check the time limit? See the debit note date. See the, for example, debit note date is 14th of February 2025. Means which financial year? 24-25. So based on that you determine the time limit. So in case of debit note, availment of ITC depends on the debit note date, but not the date of invoice related to such debit note. Not the invoice, not the invoice. For every invoice they will be giving a debit note, correct? Huh? So what is debit note? Whenever there is an increase in the invoice value, increase in the invoice value. For example, I am raising you invoice for 1 lakh plus 12,000. Now I am also collecting some extra interest from you. Then what I will do? I will be giving a debit note. Why debit note? Simple logic. When I am raising invoice to you for 1 lakh plus 12,000, I would have made a debit to you for 1 lakh 12,000, correct? What is the entry for sales? Debtor account debit 1 lakh 12,000, to sales 1 lakh, to GST payable 12,000, correct? Means you are showing what balance in my books? Debit balance, not credit balance, debit balance, because it is a sales entry. Debtor means debtors will be showing debit balance, got it? Now, I am collecting some interest from you because you are not making payment on time, so I am collecting interest. Say I am collecting 5,000 rupees interest from you. Then what is the entry for this 5,000? Interest receivable. Recipient account debit, that is debtor account debit, correct? Recipient account debit to interest income. Income, interest is a income. Income we will credit, okay? I don't know how you came to see a intermediate and all. And income will be credit. So therefore, we need to take debtor account debit or recipient account debit to interest income, which means already recipient shows a debit balance. We are again making a debit to that person. So therefore, what is the name of the document? Debit note. When credit note? When credit note? Decrease in the debtor balance. When there is a decrease in debtor balance, discount. In case of discount, what is the entry? Discount allowed account debit, because discount shows a debit balance. Expenditure, correct? Nominal account, expenditure. So discount account debit to debtor account. So to debtor account, because debtor we are making a credit. Who is accounts teacher here? Who is your accounts teacher? Seriously, no? Somehow you learnt, you are coming. And tomorrow don't ensure that someone is asking you who is your GST faculty like that, okay? And so whenever we make the debtor balance credit, so because whenever we are offering a discount, the debtor balance will be going into credit. So what is the name of the document? credit note. From this, what is the conclusion we can draw? Increase in the invoice value. Name of the document, debit note. Decrease in the invoice value. Got it? Means already one invoice is given. Say the invoice date is 4/4/2024. 4/4/2024 is the invoice date. Invoice date is 4/4/2024. Debit note is 2/2/2025. Okay. Debit note is 2/4/2025. 2/4/2025 is the debit note. Now tell me which we need to see for determining the time limit of ITC. 4/4 or 2/4 or 2/4/2025, not the invoice date for which this debit note is issued. See the debit note date. In case of debit note, availment of ITC depends on the debit note date, but not date of invoice related to such debit note. In case of RCM, generally in case of RCM, who will be giving invoice to whom? Supplier will be giving invoice to recipient, but in case the supplier is unregistered, let it be FCM or RCM, always invoice will be given by supplier to recipient. But in case the supplier is unregistered, then the recipient will give invoice to the supplier within 30 days from the date of receipt of goods or services. Is it clear? That's a May 25 amendment. Self-invoice. This concept is known as self-invoice. When self-invoice concept will come into picture? When the supplier is unregistered and the recipient is registered and the supply is covered under RCM. Who will be giving invoice to whom? Recipient will give invoice to supplier. What is the time limit within which that recipient should give invoice? 30 days from the date of receipt of goods or services. Now suppose if the recipient delays giving invoice, what will happen? ITC also will get delayed, because in case of RCM, we need to see the self-invoice date. Whenever the self-invoice is issued, that date only will be taken as availment of ITC. See there. In case of RCM, where registered recipient issues invoice to unregistered supplier, the date on which recipient issues invoice is relevant for determining the time limit for availment of ITC. Concentrate, please concentrate. That is, I am an advocate. I am an advocate and I am giving you one supply and you are a recipient, business entity. You are a business entity. Say this. I am an advocate, and you are a business entity. Generally, advocate is unregistered. Why advocate is unregistered? Because advocate's outward supply is fully covered under RCM or it will be exempted. Due to that reason, advocate will be exempted from registration. Is it clear? When advocate is exempted from registration, then business entity which is registered is liable to pay GST under RCM. So advocate services to business entity is taxable under RCM. Now, advocate has made the supply. What is the date on which supply has been made? The date on which supply has been made is, say, somewhere like 25th February 2025. 25th February 2025 is the date on which supply has been made. Now tell me, what is the time limit within which the recipient should give invoice? Due date of self-invoice. Here who should give invoice to whom? Advocate to recipient or recipient to advocate? What is the name of this invoice called as? Self-invoice. What is the due date of this self-invoice? 30 days. 30 days from the date of receipt of goods or services. What is the date of receipt of goods or services? 25th February. Then what is the due date? 27th of March. Because in February there is only 3 days. So 27th of March 2025 is the due date. Correct? Now, what is the actual date of invoice? Say actual date of invoice. Actual date of invoice is, say, 25th of March 2025, or actual date of invoice is 4th April 2025. Then what will happen to the time limit for availment of ITC? That's what we are trying to understand here. Kindly make note of this. Illustration on availment of ITC in case of self-invoice. Illustration on availment of ITC. Illustration on availment of ITC in case of self-invoice. In case of self-invoice. Illustration on availment of ITC in case of self-invoice. There is an advocate who is unregistered person. URP means unregistered person. And there is a business entity which is registered person. And advocate is making supply on 25/2/2025. It is taxable under RCM. Okay. Now, who should be giving invoice to whom? Business entity should give invoice to the advocate. Self-invoice. Self-invoice issued by business entity to the advocate. What is the due date by which the self-invoice to be issued? Within 30 days from the date of receipt of goods or services. That is 25/2/2025 plus 30 days. That is 27/3/2025. That is the time limit by which the self-invoice needs to be issued. Written up to this. Now, actual date of invoice. If you see, actual date of invoice, first case 25th March, second case 4th April. Now tell me, in which month they will avail ITC? In the first case. In the first case, in which month they will avail ITC? March month, April month, March month. Correct? ITC available for March 2025. Whereas here, when they received the services, February. When they received the services, February. But they will take ITC only based on invoice. Whenever they are giving invoice, then only they can take ITC. So therefore, ITC available for, come on, March or April? April. So which means, in case of RCM, self-invoice, whenever the self-invoice is issued, that month is relevant for availment of ITC. Please look out for this in the questions in exam carefully. They will give RCM, but blindly don't take in the month in which they received the services. Check whether any self-invoice point is mentioned, and whichever month they are giving self-invoice, that month only they can take ITC. So it is RCM, okay, fine. But another point we need to check, self-invoice point. For example, the service is received in February, but the self-invoice is in April. So then April month only they can take ITC. Means this month they cannot take ITC. So as this is an amendment, they may be testing this. Again, suppose if the invoice is given in February month itself. If the invoice, when the services are received part 25th February, if the invoice is raised in February month itself, then in that case, can February month they can take ITC under RCM? Yes, February month, whichever month, whichever month they are raising invoice, that month they can take ITC. If they raise invoice in February, they can take ITC in February. If they raise invoice in March, they can take ITC in March. If they raise invoice in April, they can take ITC in April. So therefore, in case of RCM, when they can take ITC, whichever month the recipient is raising invoice to the supplier. Due data, actual data you need to check. Actual date, not the due date. Whichever month recipient raises invoice to the supplier, that month recipient can take ITC. In which case? RCM, where the self-invoice is required to be issued by recipient to supplier. Respond whether you understood or not. Then, here, what is the maximum time limit by which ITC will be availed? Maximum time limit. Maximum time limit for availment of ITC. Come on. Maximum time limit for availment of ITC. What is the maximum time limit? 30th November 2000. 25, because this pertains to which financial year? When the invoice is given part 25/3/2025 means financial year 2024-25. So therefore 30th November 2025 or date of annual return, whichever is earlier. Then here what is the maximum time limit? They can take ITC in April month, but what is the maximum time limit for availment of ITC? Maximum time limit for availment of ITC. What is the maximum time limit for availment of ITC? Which financial year? When the invoice is given 4/4/2025 means which financial year? 2025-26. So therefore 30th November 2026 or date of annual return, whichever is earlier. Is it clear, pa? Now tell me what are the 2 points that you remember in case of RCM self-invoice? First point, as and when invoice is issued by recipient to supplier, in that month they can take ITC, and that date on which they gave invoice is the relevant financial year for the purpose of determining the maximum time limit. Correct? So that is with respect to this May 25 amendment. Next, time limit for availment of ITC for certain financial years, that is from financial year 17-18 to 2021. This point may not be tested, not that important, but the previous one is important. This may not be tested. For any financial year from 17-18 to 2021, if you have availed the ITC by November 30, 2021, even if it was disallowed at that time, they should be giving the ITC now. Is it clear? Again I am repeating, what are the financial years, pa? 17-18 to 2021. ITC disallowed at that time, but it has been availed as on November 30, 2021. Everything is past only. Everything is past. At that time you have availed the ITC and it has been disallowed. Now they need to give the credit. Why they need to give the credit? Because government lost the case in Supreme Court. As government lost this case in Supreme Court, that for this period they should be giving ITC. So even though it was disallowed at that time, but they are giving the ITC now. It is allowed even though it is in violation of 16(4). Which financial years? 17-18, 18-19, 19-20, 20-21. 4 financial years only. That too they should have availed ITC by which date? 30th November 2021. Then next, time limit for availment of ITC in case of revocation of cancellation of registration. What is this revocation of cancellation of registration means? First, carefully listen. My application, like my registration has been cancelled. When my registration has been cancelled, I can make an application for revocation of cancellation. What is revocation of cancellation means? Revocation means withdrawal. Revocation means withdrawal. Withdrawal of cancellation order. Again I am repeating, my registration got cancelled one day and I made an application for revocation of cancellation, and they have passed the revocation order. Now carefully listen. From the date my registration is cancelled till the revocation order, I could not file the returns. Why I could not file the returns? Because my registration got cancelled. When my registration got cancelled, I cannot file the returns for that period. And now they revoked the cancellation order. Revoke the cancellation order means what? They are allowing me to continue in the registration. But for this period, which period? Which period? Cancellation to the date of revocation order. From the date of cancellation to the date of revocation order, can I avail the ITC? Yes. But by what time I should avail the ITC? The regular time limit. What is the regular time limit under 16(4)? 30th November of succeeding financial year or date of filing annual return, whichever is earlier, or 30 days from the revocation order, whichever is later. So by that time I need to avail the ITC. For what period? Registered person can claim ITC on such invoice or debit notes in any return filed within this time limit. Why they have brought in this time limit? Let's try to understand with the help of some numbers. So see this carefully. So if you want, you can make note also. First, my registration, that is, I have been a registered person. I have been a registered person exactly on 1st March 2024. Exactly on 1st March 2024. Registration is cancelled. Which date registration is cancelled? 1st March 2024. Now, I have some inward supplies pertaining to the financial year 2023-24. Pertaining to this financial year 2023-24, I have some inward supplies. Still the time limit is there. Still the time limit is there to avail the ITC. As on 1/3, do we have the time limit to avail the ITC? Yes, we have the time limit to avail the ITC. Even for financial year 22-23 also, we have the time limit to avail the ITC. Agreed? Basic financial year 2022-23. What is the time limit for availment of ITC? 30th November 2023. So we are in March, then time limit is already over now. Can we avail the ITC for this financial year? No. Then for financial year 23-24, what is the time limit for availment of ITC? 30th November 2024. Right now we are in which period? March. Still the time limit is there to avail the ITC. Yes or no? So financial year 2023-24, we have the time limit to avail the ITC as on 1st March. But our registration is cancelled. So we could not avail the ITC. Thereafter we made application for revocation, and thereafter they have revoked the cancellation order. Revocation of cancellation. Revocation of cancellation. On which date they have revoked the cancellation order? Say on 25th December 2024, they revoked the cancellation order. Is it clear? Revocation of cancellation order. Registration is cancelled as on which date? 1/3. And revocation order, that is revocation of cancellation order, 25th December. Now I want to take ITC for which financial year? 23-24. For 23-24, what is the time limit for availment of ITC? Time limit is 30th November 2024. But I could not take ITC. Why I could not take ITC? Because my registration is cancelled during this period. So during this period, returns cannot be filed and ITC cannot be availed. Returns cannot be filed. Returns cannot be filed and ITC cannot be availed. Returns cannot be filed and ITC cannot be availed. For which period? 1/3/2024 to 25/12/2024. I cannot file the returns, which means even though the time limit is 30th November, but I could not take the ITC by 30th November because the returns cannot be filed. Correct? Now they are telling it's okay, it's okay, still you can take ITC. What is the time limit that they have given for availment of ITC? Even though it is 30th November, but we have a further time limit. What is that further time limit? 30 days from the date of revocation order. What is 30 days from the date of revocation order? 25th December, you count. 24 January 2025. Even though you could not avail ITC at this time, 30th November 2024 or 30 days from revocation order, that is 24/1/2025, whichever is later, revised time limit for availment of ITC. Revised time limit for availment of ITC. Is it clear, pa? Now you understood the logic behind it. That is, again I am repeating, for financial year 23-24, the time limit to avail the ITC is 30th November. But the registration got cancelled from 1st March 2024 to 25th December 2024, because of which they could not avail the ITC. Means as on 1st March they availed or not availed? For this financial year, they availed or they have not availed as on 1st March. ITC not availed. ITC not availed. Now can they avail it? Yes. What is the time limit for availment of ITC? The regular time limit. What is the regular time limit? 30th November 2024 or 30 days from the date of revocation order, whichever is. Which is later? 24/1/2025 is the later date. By that time they can take the ITC. Is it clear? Mainly for this purpose they brought in that amendment. Okay. Clear? Very, very important concept. On this concept, definitely there is a high chance that you will be getting a question. Because in RTP they gave, one question related to this. So I'll just show you that question. Finish making note of this. Okay, see this. So this is actually given in RTP for CA final, but on the same concept, and they don't mind giving the same question for 5 marks at CA intermediate level, because it's on the same concept. See, this is how you may get a question. Akarsha Traders, a registered supplier under GST in Uttar Pradesh, had their GST registration cancelled retrospectively with effect from 1st September of the current financial year. From when their registration got cancelled? 1st September. The cancellation order was passed on 15th September. Even though cancellation order was 15th September, but effective from 1st September, their registration is cancelled. At the time of cancellation, the supplier had not availed ITC on certain eligible invoices issued in February and March of the preceding financial year. February, March of the preceding financial year means, so for that 30th November of the succeeding financial year, this year will be the time limit, correct? But they have not availed the ITC as on 1st September. At the time of cancellation, the supplier has not availed ITC on certain eligible invoices issued in February and March of the preceding financial year for inward supply of taxable goods, on which ITC is otherwise available under GST law. Subsequently, what they did, they made an application for revocation of cancellation, and that application for revocation was revoked by proper officer on 15 December. When cancellation order got revoked? 15 December. from 1st September to 15 December, they could not file return. So therefore, the time limit for availment of ITC, regular time limit is over. Correct? 30th November time limit is over. Now, the firm wishes to file its GSTR 3B return for the September month on 21st December for current financial year and wishes to claim ITC on the said invoices of February and March of the preceding financial year in this return. Is it possible for them? Yes, because what is the time limit for availment of ITC? The regular time limit, that is 30th November of this year or 30 days from revocation order. When the revocation order happened? 15 December. 15 December plus 30 days. 14 January, whichever is later, they can take ITC, whichever is later. Now they want to avail ITC on 21st December. Is it within the time limit? Yes, because we have time limit till January. So they have wanted to take only 21st December. They want to file return and they want to avail ITC. Is it possible? You are required to advise Akarsha traders whether it is entitled to claim ITC in respect of invoices issued in February and March of the preceding financial year. In terms of the provisions of GST law, assuming that annual return for the previous year is furnished on 31st December of the current financial year. First, what is the time limit for availment of ITC in case of revocation order? A. Regular time limit. What is regular time limit? 30th November of the succeeding financial year, that is this year. 30th November this year or date of filing annual return. What is the date of filing annual return? 31st December, whichever is earlier. First A point is whichever is earlier. Say this. A point is whichever is earlier. Regular time limit is whichever is earlier. Regular time limit is whichever is earlier. 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Then B. What is B? 30 days from the date of revocation order. That is 14th, 15th December pass, so 14th January, whichever is later. Therefore, the time limit for availment of ITC is 14 January and they want to avail ITC by the date, so they can definitely avail the ITC. So, that is the answer for this question. Okay. So, say this. Therefore, Akarsha traders is entitled to claim ITC in respect of invoices issued in February and March of the preceding financial year in the return for the month of September furnished on 21st December, because whichever is later, 30th November or 14 January, whichever is later. Clear up? So this mark as very, very important, this one, this time limit for availment of ITC in case of revocation of cancellation of registration. Then how to avail this ITC for the past periods? This section 16.5 and 16.6, they are telling that for the past periods also, if they have not availed ITC, they can avail ITC now. For that, they need to make an application, but this is not for exam. This is not for exam. This will not be tested now because the time limit is over. The application should be made by 7th April. The application should be made by 7th April. Right now we are in September, August, September month. So therefore it is relevant, not for exam. Don't worry about it, leave it. You can happily remove this for exam purpose. Then with this we completed section 16 fully. Now we are moving on to apportionment of credits and blocked credits. What is apportionment of credit means? Simple, I told you already. If I have some inward supply used for taxable outward supply, can I take ITC? Yes. I have some inward supply which is used for exempted outward supply, can I take ITC? No. What if I am using it for both? Read the first point. Inward supply used exclusively in taxable outward supply or business purpose, ITC available. Inward supply used exclusively in exempted or non-business purpose, ITC not available. Inward supply used for both taxable and exempted outward supply, can we take ITC? Yes. What? How much ITC we can take? Proportionate ITC. You tell me what is the proportion we can take as ITC. Say this, say this, say this. Sir, I have raw material purchased. Raw material purchased. Raw material is 1 lakh plus 12,000. Using this raw material, I am making two products, FGX and FGY. FGX is taxable, FGY is exempted. So what is the proportion I need now? What is the proportion? Turnover of what? FGX and FGY. So what is the turnover of FGX? Say the turnover of FGX is 15 lakhs and the turnover of FGY is 5 lakhs. Now tell me how much ITC I can take? I know 3:2, 3:4, etc. and all. You calculate and tell me You don't teach me, you calculate and tell me. How much ITC is available? 9,000. How 9,000? 12,000 into what by what? 15 by 20. 15 by 20 we can avail as ITC. Is it clear or not? Proportionate ITC. So logically, for taxable turnover only we can take ITC, for exempted turnover we cannot take ITC. So the answer will be 9,000. But 9,000 we should not arrive directly. What we should do is that first we need to take ITC availed. What is the ITC availed? 12,000 is the ITC availed. How ITC availed is 12,000? Sir, first 12,000 whatever GST we paid on purchases we will take as ITC, sir. 12,000 minus ITC reversed. To what extent we need to reverse? To the extent of exempted we need to reverse. What is the extent of exempted? 12,000 into, what is the ratio? 5 by 20. 15 by 20 you will take ITC. Now don't do that. First you take fully, then you reverse proportionate to exempted. So 12,000 into 5 by 20. What is 12,000 into 5 by 20? 3,000 you need to reverse. So we will be getting 9,000 as the net eligible ITC. This 9,000 we can set off against the liability. Is it clear? You need to check for this information in the question. Blindly don't arrive at the answer. You check whether we have exempted turnover and we have input tax credit. If we have input tax credit and exempted turnover, and you know that this inward supply is used for the exempted turnover, like this proportionate calculation you need to do and you need to arrive at the net eligible ITC. Is that clear? Then, so that is what it says. Whenever we have proportionate ITC means like this. Then same way, inward supply used partly for business and partly for non-business, then also proportionate ITC, same logic, okay. Then where you will keep zero rated supplies? Zero rated supplies will come under which place? Taxable or exempted? For ITC purpose, taxable. Even though it is zero rated, but it will be treated as taxable for the purpose of availment of ITC. What are zero rated supplies? Export of goods or services or supply of goods or services to SEZ is known as zero rated supplies. Why is it called as zero rated? Because the rate is zero? No. The burden will become zero. How the burden will become zero? I will pay the tax, prove that the goods are exported or supplied to SEZ, and I will get the refund of that tax. Pay and get refund means the burden will become. That's why it is called as zero rated. Is it clear? Why it is called as zero rated? Because I will pay. Sir, why to pay and why to get refund? Pay either using your cash ledger or credit ledger. Means I have some input tax credit. That input tax credit I can use for making payment, but refund will come into my bank account. Are you understanding? When I have input tax credit, what is the purpose for which I can use input tax credit? Only for payment of liability. Only for payment of liability I can use my input tax credit. Are you understanding this? But can I withdraw the input tax credit into GPay? No, not possible. The input tax credit can be used only for payment of your liability. But now what you are doing, when you pay, you will use input tax credit and you will pay. And when you get the refund, that refund will be into your bank account. That is the advantage. Is it clear? We will pay using our credit ledger also, cash ledger also, but full refund will come into our bank account. That is the advantage of this zero rated supply. So your burden will become zero. Even though your burden becomes 0, but it should be treated as what? Taxable supplies. Means can we take ITC on our inward supply when my outward supply is 0 rated? Yes. When my outward supply is 0 rated, I can take ITC on my inward supplies. Then, what is the meaning of exempted supply? Because if it is partly for taxable, partly for exempted, proportionate ITC available. What is the meaning of exempted supplies? But this meaning of exempted supplies is only for the purpose of, this meaning of exempted supply is only for the purpose of ITC computation. Okay. Now, total these 8 points you need to remember, pa. These are the exempted supplies for the purpose of ITC computation. What is ITC computation? Just now we did na exempted turnover divided by total turnover. Then what should be taken as exempted turnover? What should be taken as taxable turnover is what we are learning here. You got it? Now, what is the meaning of exempted turnover? Number one, if my sales are notified as exempted, or if my outward supply is nil rated, or if my outward supply is non-taxable, it will be exempted for ITC purpose, correct? Notified as exempt, nil rated, non-taxable. Even supply covered under RCM is also treated as exempted turnover only for me while computing ITC. Is it clear? But actually, is it exempted? No, it is not exempted. It is taxable. Who will pay? My recipient will pay. But for me, it will be treated as exempted turnover. Again, I am repeating, carefully listen. How to compute proportionate ITC? So, can you all stand and sit once? Okay. Done? Sleep over. Sit. Tell me, how do we calculate proportionate ITC? First, what we will do? ITC availed minus ITC reversed. What is the formula for ITC reversed? ITC availed into exempted turnover divided by total turnover. That is the ITC reverse. Correct? Up to that you got a clarity. But how you got that exempted turnover and total turnover? You need to know what are the turnovers which are coming under exempted turnover. What are the turnovers which will come under taxable turnover? Then only you will be able to find. Correct? Turnover means what? Inward supply, outward supply. Outward supply. When your outward supply is notified as exempted, when your outward supply is nil rated, when your outward supply is non-taxable, or your outward supply is covered under RCM, that will be treated as your exempted turnover for ITC computation. Understood or not? Even sale of land, sale of building, sale of securities, these three are not a supply. Land is excluded from supply. Building is also excluded from supply. Securities are not a supply. But these three are treated as exempted supply, which means that should also be added to your exempted turnover. One more, supply of warehoused goods to any person before clearance for home consumption. That is, there is a duty-free shop which is selling. Where the duty-free shop is located? In international airport. When they are making sale to incoming passengers, that is also treated as exempted. Got it? So, total 8 points you need to remember for counting exempted turnover. This is mainly for ITC computation, not for payment of GST, only for ITC computation. Mean only when you are doing this ITC availed into exempted turnover divided by total turnover, in that place only we need to do this. Generally, what is the meaning of exempted for payment of GST? You know what is the meaning of exempted. That is, if it is notified as exempted, nil rated, non-taxable, that alone will be treated as exempted for payment of GST. But this is for the purpose of computation of ITC. What are the 8 points you need to remember? Come on. First 3 easy. Notified as exempted, nil rated, non-taxable. Next, supply covered under RCM. Then, total 4, land, building, securities, supply of warehoused goods. That is duty-free shop to duty-free shop in international airport. To whom? Outgoing passengers, incoming passengers. incoming passengers. So in an international airport, there is a duty free shop. So why is it called duty free shop? Because they will import the goods without payment of duty. Got it? Why is it called duty free shop? Because they will import goods without payment of customs duty. They may sell these goods to outgoing passengers or incoming passengers. If they sell, both they can sell. If they sell to outgoing passengers, then it is called as zero rated supply. So it will be treated as what? Taxable supply for ITC purpose, correct? Huh? Just now we saw zero rated supply will be treated as taxable supply, whereas they will be making sale to incoming passengers. When they are making sale to incoming passengers, it is actually not a supply, because it is like a supply of warehoused goods under customs. Got it? It is not a supply, but it should be treated as exempted supply. It is not a supply treated as sale of warehoused goods under customs, but it is treated as exempt supply for reversal of ITC. You got it? So now whatever purchases that they make within the country, full ITC they can take or proportionate ITC only they can take? Proportionate ITC, because part of their outward supply is zero rated, part of their outward supply is exempted, then whatever they purchase within India, so they can take proportionate ITC. What will they buy, sir? They may buy some items in India like packing materials, cover. Full product is imported, but that product they need to put in one cover and give, na. Bill they need to print and give, na. And printer and all they will buy now to print the bill. And immobile property is in India only they are receiving, correct? So all these are inward supplies in which they want to take full ITC. That is not possible, only proportionate ITC they can take. Understood? These are the 8 transactions which are treated as exempted supply. For land building, usually what value to be taken? Stamp duty value. Even in income tax also same, na? For land we will take stamp duty value, for building also we will take stamp duty value. But for securities what we need to do? 1% of the sale value of such securities. And in case of supply of warehoused goods, normal sale value only we will be taking. Apart from these 8 transactions, you need to remember 2 more transactions. Even though it is exempted for payment of GST, but for ITC purpose it will be treated as taxable. But before moving on to this, what is the reason why these transactions, land, building, securities, even though not a supply, but treated as exempted supply? What is the intention behind making this as exempted supply? Come on. To reduce the ITC. Even though it is not a supply, but when you have this considered as exempted supply, what will happen to your ITC? It will get reduced. For example, you see this. Raw material 1 lakh, GST 12,000, finished goods X taxable, turnover 15 lakhs, finished goods Y exempted, turnover 5 lakhs. How much is the net eligible ITC? 9,000. Now listen carefully. During the month, they sold a land for 20 lakhs. During the month they sold a land for, now compute net eligible ITC. Compute net eligible ITC. Whether this sale of land is exempted for ITC purpose, exempted, even though it is not a supply, but for ITC purpose it is exempted. So what is the net eligible ITC? See this. How much is the ITC availed? Same, ITC availed will be 12,000 minus ITC reversed. What is the ITC reversed? 12,000 into exempted turnover divided by total turnover. What is the existing exempted turnover? 5 lakhs. Now what is to be added to that 5 lakhs? Clear? 25 divided by, what is the total turnover? 15 plus 5 plus 20, that is 40. Sir, it's okay, sir. Numerator and denominator increased by 20. Previously it was 5 by 20. Now it is 25 by 40. Means numerator denominator increased by 20 only. Why will the number change? Definitely it will change. Mathematics, mathematics, it's not multiplied, it is added, okay. So definitely it will change, the proportion will change. See that, 12,000 into 25 by 40. Huh? Means what is the net eligible ITC? Net eligible ITC is, this is the criminal intention of the government. You got it? Previously you were getting how much? And it became 4,500 for one reason. What is that one reason? Sale of land. Is sale of land first of all supply? No, because they brought it into exempted supply. What happened to your ITC? It got reduced. Got it? The ITC availability get reduced. That's the bloody reason why sale of land, sale of building, sale of securities and the supply of warehouse goods under customs are treated as exempted supplies, mainly to reduce the ITC for that purpose. Okay. Now a person will question or not, sir, why are you reducing my ITC? So therefore they did a balancing act now. What is that balancing act? Even though it is exempted, we are treating some transactions as taxable for you. Got it? Some transactions not a supply. We treated it as exempted. Okay, sorry, but don't worry. There are some transactions which are actually exempted, which are actually means no need to pay tax, but we will treat it as taxable. Then automatically what will happen? Your ITC will increase. Oh, super, sir. What is a transaction? Interest on loans, advances, deposits. Okay. But that interest on loans, advances, deposits will be a small income, na? But it is other of other income, correct? Where you will put interest on loans, advances, deposits, other income, in other income also one of the other income, correct or not? So while taking, they are taking big money, while giving, they are giving one small piece. It is like you purchased a Oreo biscuit packet and you thought fully I can eat today, but they snatch the Oreo biscuit packet from you and they are taking one biscuit, catch, like that they are putting. You understood? Only one transaction, but that too interest income will be more for whom? Bank, financial institution, NBFC, but for them this benefit is not there, which means interest on loans, advances, deposits is treated as exempted turnover only for them. For other than bank, financial institution, NBFC only it will be treated as taxable turnover. You got it? See the other point next. Service by way of accepting deposits, extending loans or advances in so far as the consideration is represented by way of interest or discount, except in case of banking company, financial institution or NBFC. Second transaction means actually it is exempted, but they are treating it as taxable, but not for banking company, except in case of banking company, financial institution, NBFC. Next point, sale of duty credit scrips under foreign trade policy. We have a foreign trade policy concept. At final level you will be learning, and in this foreign trade policy, whenever you are exporting, they will be giving you an incentive in the form of scrip. You can understand it like coupon. You export, because you are exporting, to encourage you to export, they will give you a coupon. What you can do with that coupon? You can transfer it to any other person and encash it, or you can use it for payment of customs duty on import. Simple pa, you have a movie voucher pa, okay. So you have a movie voucher, latest Coolie movie is getting released. You have a ticket you have, but you don't want to go. What you will do? Huh? Give it to friend, sell it to friend. Be clear. Give it to friend. Oh, you became that much Mahan and all, that you will be giving, take care, go, I am not going, you go, like that. No, definitely you will sell. Definitely you will sell at a price less than the ticket price. For example, ticket price is 200 rupees, means you will sell for 100 rupees or 150 rupees, like that you will sell, correct? Like that, you are an exporter. You made an export, they gave you a voucher. What you can do with that voucher? You can sell it. Now you realize some money, that is exempted under GST, no need to pay. Even though it is exempted, but for ITC purpose it will be treated as taxable. Only two transactions. Only two transactions, even though exempted, will be treated as taxable. What are they? Come on. Interest on loans, advances, deposits, and sale of duty credit scrips. Clear? So first those 8 points you need to remember, which are treated as exempted. Then these 2 points you need to remember, even though exempted but treated as taxable. Then look into the next area, special provision for availment of ITC by banking company, financial institution, NBFC. So you did the bank accounts, na? Bank accounts, etc. and all. You have no financial accounts of banking companies, etc. You don't have. Oh, super. Then you tell me, for a banking company, what are the various incomes majorly? Interest income, other income. What is other income? NEFT charges, RTGS charges, credit card charges, debit card charges, commission, etc. Correct? Interest income for a bank is taxable or exempted? For payment of GST, interest income for a bank is taxable or exempted? Exempted. Interest income for a bank is exempted. Other income for the bank will be taxable. Clear? So they will be giving loans, they will be giving advances, they get the interest, housing loan interest or vehicle loan interest or personal loan interest or business loan interest. All these interests will be exempted. For whom? For the bank. Other incomes are there, na? That will be taxable, which means bank will always have partly taxable income and partly exempted income. Means can they take full ITC? No. So they will be able to take only proportionate ITC. What proportion they can take ITC? What proportion? To what extent they will take ITC? To the extent of taxable turnover. Correct? Rather than that, they have been given one option. That is, flat 50% they can take ITC, remaining 50% will be gone. So what is the assumption here? 50% is their taxable income and 50% is their exempted income. See this. So special provision for banking company, financial institution including NBFC. They have two options. Option 1, avail proportionate ITC. Option 2, avail 50% of eligible ITC. Okay. Now, in case of option 2, 50% ITC method, when you will prefer? Say this, carefully listen. Your interest income is 80%, other income is 20%. You will prefer option 1 or option 2? Option? Someone said option 1, again I am repeating. Interest income 80%. Can you take ITC or you cannot take ITC? You cannot take ITC. For interest income purpose, inward supply you cannot take ITC, correct? And other income will be 20%. If you go for proportionate ITC, how much ITC you can take? 80 or 20? If you come for option 2, how much you can take ITC? So which is better? Option 2, got it? If your interest income is 30%, other income is 70%. If you go for option 1, how much ITC you can take? 70%. If you go for option 2, how much you can take? So which will you prefer? Understood or not? So therefore you can decide between these two options. But sir, when? Month on month can I decide? No. I have to decide it in the beginning of the financial year, and once decided, that will be applicable throughout the financial year. In the mid of the year I cannot change. See this line, option 1's exercise cannot be withdrawn during remaining part of the year. Means I need to decide it in the beginning of the financial year. Then look into this option 1, option 2, how to do the computation. You have some inward supplies used for taxable outward supplies. If you go for proportionate ITC method, you can take full ITC. But if you go for ad hoc ITC, that 50% ITC method, you can take only 50%. Again I am repeating, I have some inward supplies which is used for taxable outward supplies. If I go for proportionate ITC method, how much I can take? 100%. If I go for ad hoc ITC method, how much I can take? 50%. I have some inward supply used for exempted outward supply. If I go for proportionate ITC method, I cannot take ITC. But if I go for 50% method, I can take 50%. Are you understanding the difference? Ayya, under proportionate ITC method, inward supply used for taxable, full ITC. Inward supply used for exempted, no ITC. Inward supply used for both taxable and exempted, proportionate ITC. But under 50% ITC method, inward supply for taxable, inward supply for exempted, inward supply common, everything will be 50% only. Is it clear? Inward supply for taxable, inward supply for exempted, common ITC, everything will be 50%. But it will change in case of proportionate ITC method. So here 100% ITC if it is used for taxable, if it is used for exempted, no ITC, if it is common ITC, it will be proportionate ITC. You got it? This is one point which you will miss. No one will teach also, okay? And last, if you are having inward supply from a distinct persons, if you are having inward supply from a distinct persons, who are distinct persons? Same registration, like same person, other registration. For example, you are having one registration in Tamil Nadu, another registration in Karnataka. These two registrations are called as distinct persons. So bank is having inward supply from its branch in another state, distinct person. If you go for proportionate ITC only you will get. But if you go for this ad hoc ITC method, how much ITC you will get? 100% ITC. These 4 points you need to remember. Clear? What are the 4 points? Come on, tell me. First, what are the two options? Option 1, proportionate ITC. Option 2, ad hoc ITC. In proportionate ITC, what we need to do? Inward supply used for taxable outward, full ITC. Inward supply used for exempted outward, no ITC. Inward supply which is common for both taxable and exempted, proportionate ITC. Inward supply from a distinct person also, proportionate ITC. Then ad hoc ITC method. What is ad hoc ITC method? That 50% ITC method. In that, inward supply used for taxable outward, inward supply used for exempted outward, inward supply which is common. How much ITC we can take? 50%. Inward supply from a distinct person, then we will be able to take 100%. Clear? So that is about this. And what about blocked credits and non-business purpose? In both the cases we should not take. In case of option 2, inward supply exclusives for non-business and blocked credits, ITC should not be availed. And next, we are moving on to blocked credits. Section 17, subsection 5. So far what we have discussed is apportionment of credit. Now we are moving on to a very, very important area, that is blocked credit. You cannot imagine a question without blocked credit application. Input tax credit, how much ever important, in that this section is very, very important. 17.5. Carefully listen. We will spend some half an hour time on this. Thereafter I will give you break, you take a break, okay? So concentrate, come on. What are the blocked credits that we have? The entire blocked credit. Blocked credit means what, pa? Inward supply on which you cannot take ITC. The entire blocked credits are divided into 3 divisions. Motor vehicle related blocked credit, then construction related blocked credit, and number 3, other blocked credits. That's it. This much is only there. Motor vehicle related blocked credit, construction related block credit, other block credit. Look into motor vehicle related blocked credit. Now, first we will learn this, then we will apply. Motor vehicles is divided into 3. For transportation of persons, vessels and aircrafts, and other motor vehicles. What will come under transportation of persons? 2-wheelers, 4-wheelers, bus, car, jeep, everything will come under for transportation of persons. Vessels and aircrafts means only aircraft and ship. Then others, what will come? What will come in others? Others. Lorry, truck, correct? Road roller, am I right? Then the JCB, all those things will come under other motor vehicles. That is also vehicle only, na? Road roller also vehicle only, na? And bulldozer also vehicle only, na? So, but it will come under other motor vehicles. If it is other motor vehicles, can I take ITC? Yes. If it is other motor vehicles, we can take ITC. Example, trucks, lorries, etc. If it is for transporting persons, again divided into 2. Capacity does not exceed 13 and capacity exceed 13. What are capacity exceed 13? Tempo traveler, bus, mini bus, etc. will come under capacity exceed 13. Can we take ITC? Yes. Capacity exceed 13, we can definitely take ITC. And example, stage carriage, contract carriage, bus for transporting employees. But capacity does not exceed 13. What will come? Cars, then maxi cab, then this Innova Krista, then Safari, that kind of vehicles, correct, SUVs, and even two-wheelers. This will be blocked credit, ITC not available. But there are 3 exceptions. In these 3 exceptional cases, ITC available. What are the 3 exceptions? Number 1, further supply. Further supply means what, pa? Buying and selling of motor vehicles or buying and renting of motor vehicles, I can take ITC. For example, I am a dealer in motor vehicle. Can I take ITC on the car purchased? Yes. I am into the business of renting of cars. Can I take ITC on the car purchased? Yes. Used in the business of transportation of passengers means travel agencies, Ola, Uber, etc. and all. Can they take ITC on the car purchased? Yes. Driving schools, so they can also take. So generally motor vehicle capacity does not exceed 13 is a blocked credit, but 3 exceptions are there. Further supply, used in the business of transportation of passengers or imparting driving skills, correct? Then in case of vessels and aircraft also it is blocked credit. Vessels and aircraft also blocked credit, but we have 4 exceptions. What are the 4 exceptions? Number 1, used in the business of used for further supply, used in the business of transportation of passengers, used for imparting driving skills, then one more point, used for transportation of goods. Then ITC available, otherwise ITC is not available. What is the reason behind making this provision, sir? That reason is very important, then only you can understand this. Usually motor vehicles like cars, etc. and all, which are purchased by the people in the business name, they will not be fully using for business. They will be using for personal purpose. Agreed or not? For example, if I buy a car, will I use the car only for coming to take class and going to meet the client's place, or I will take my family also in that car? Correct. But I will buy the car in the name of the business and enjoy the ITC. Then it is very difficult for the government to identify whether really the car is used for business or for non-business, partly for business, partly for business. That is a very difficult task. Then they need to install one CCTV inside the camera to know, who is going, etc. and all. That will become very, very big problem and all then in future. You understood? Because lot of nasty things and all we do inside the car only nowadays. So now coming back to this. So car is used for partly business, partly non-business purpose. And how to segregate it? That's why better they are telling it's a blocked credit. We will not give ITC. You got it? We will not give ITC unless we know that it is used only for business purpose. Lorry and truck, no idiot will take for personal purpose. Correct? For a marriage function, we will not take a lorry or a truck and go. Correct? So that is purely for business. So other motor vehicles ITC available. And these 3 also purely business, correct? Further supply, business. Used in the business of transportation of passengers, business. Mostly these will have yellow board, correct? And next, driving school means, again, it is not used for personal purpose. Driving school vehicle, no idiot will take for personal purpose. Seriously, because driving school vehicle will have clutch and brake both sides. This side also will be there, that side also will be there. And the driver, who is driving, the master will be sitting that side and he will be operating. Just the steering control alone they will be giving to us initially. You got it? That driving school vehicle, no one will be taking it for personal purpose. Definitely it will be purely business purpose only. That's why they are giving ITC. Are you understanding this? Same is the case vessels and aircraft. Vessels and aircrafts, these 4 cases purely business, further supply, business of transportation of passengers and imparting driving schools and used for transportation of goods. If you remember this logic, you can remember this easily. Okay. Now, I'll give you some situations you need to answer whether ITC available or not. Reliance Industry Limited purchased an aircraft for transporting its directors. Can they take ITC on the aircraft purchased? Yes or no? No. Why? Where it will come? Vessel and aircraft. Vessel and aircraft. Whether transportation of director is given anywhere here, further supply. Business of transportation of passenger. Oh, director is a passenger. You know what is the meaning of passenger means? They can board anywhere and they can get down anywhere. That is the meaning of passengers. Anyone can board in company's flight. Reliance Industries is having one flight. Can you board? No, you cannot. You cannot board here. It is only for the director. You cannot board it. Then it will not be called as transportation of passengers. Then, is it for driving schools? Are they teaching the director how to operate flight, etc. and all? No. It is used for transportation of goods, director goods. Then how ITC available? ITC not available. Got it? Then another case. A chartered accountant purchased a car used in his profession for meeting the clients, etc. Going to the income tax office, GST office and meeting the clients. Can he take ITC on the car purchased? Where car will come? Transportation of persons, capacity does not exceed 13. And is it covered under further supply? No, he is not into the sale of car, etc. Then used in the business of transportation of passengers, like a share auto he is operating, dropping the CA students, etc. and all. No. And driving school, he is not teaching to article students, na, A for accelerator, B for brake, C for clutch. No. Then definitely ITC is not available. What if a Ola or Uber driver purchased a car? ITC available. Where it will come? Used in the business of transportation of passengers. Then Indigo Airlines purchased an aircraft for transporting passengers. Can they take ITC? Yes, vessels and aircrafts used in the business of transportation of passengers. Then this Blue Dart Courier, you know, Blue Dart Courier, they purchased a flight for transporting the courier parcels. Can they take ITC? Yes, used for transportation of goods. Understood? This is about motor vehicle purchase. Now second, you have some services in relation to this motor vehicle. What are those services? Repair and maintenance service, insurance service, and then servicing, hiring, renting and leasing of motor vehicles. Repair and maintenance you can understand. Insurance also you can understand. What is this servicing means? When you buy a vehicle, you give it for servicing now with authorized service center. That is this servicing. Then hiring, renting and leasing of motor vehicles, vessels or aircrafts. If the motor vehicle, vessel and aircraft is eligible for ITC, that is if the motor vehicle purchased is eligible for ITC, on these four service also you can take ITC. If the motor vehicle purchased is not eligible for ITC, then on these four service also you cannot take ITC. Let's try to understand this with some examples. A company purchased a bus for transporting its employees and they took the insurance with respect to that bus. Can they take ITC on the insurance services? Again, I am repeating the question. A company purchased a bus for transporting its employees and they took the insurance on the bus. Can they take ITC on the insurance service? First. Can they take ITC on the bus purchased? Yes, because bus will come under motor vehicles capacity greater than 13. Definitely they can take ITC on bus purchase. As bus purchase is eligible for ITC, for that bus if they receive insurance service, that is also eligible for ITC. So on insurance service they will be able to take ITC. Then a chartered accountant purchased a car for use in his profession. On that car he took repair and maintenance service. Can he take ITC on repair and maintenance service? No. As the car purchased is not eligible for ITC, on repair service also ITC not available. Are you understanding this? So in respect of four services, what are the four services? Repair and maintenance, insurance, servicing, that is authorized service center services, hiring, renting and leasing of motor vehicles. If the motor vehicle is purchased is eligible for ITC, then hiring, renting and leasing of motor vehicle is also eligible for ITC. Okay. Say for example, I wanted to buy a luxury car, say some BMW car or Jaguar car or some other luxury car. Can I take ITC? I personally. Can I take ITC? No. Instead, I will take it on rent. I'll take it on rent, pa. For what purpose, sir, you will take it on rent? For business purpose only, pa. To meet a client. I'm going and meeting a client. And when I get down from this costly car and all, my fees also will be high. You understood or not? If I go in Alto car, I can bill him 5,000. If I go in some normal, Hyundai, Creta, or some urban cruiser, or Breeza, I can charge him 7,000, 8,000. If I go in Scorpio, Innova, I can charge 10,000, 15,000. If I go to his place in BMW, Benz, etc. and all, definitely I will be charging him 50,000. Are you understanding this? So, I need to go to meet him. If I go in a normal car and if I am charging 50,000, he will not pay me. Definitely he will not pay me. So, that's why the appearance, presentation, everything matters. So, therefore, I will go in a luxury car, but luxury car I don't have. For the sake of this one meeting, I cannot buy a luxury car. I don't know whether he will give me work or he will not give me work. So, it is huge cost na buying. So, instead I will take it on rent, purely business purpose. Can I take ITC on the rent charges paid? Because luxury cars and all per day rent is 20,000 to 30,000 rupees. Can we take ITC on the 20,000, 30,000 we paid rent? No. Why? As the car purchased is not eligible for ITC, on rent also GST paid cannot be taken as ITC. Understood or? Got it? Then look into some special points in this regard. While determining the capacity, driver seat should be included or excluded? Included. We are talking about capacity. Capacity means including driver seat. Further supply means what? Either purchase and sale of motor vehicles or motor vehicles used in the business of hiring. For example, I am into the business of renting of motor vehicles. If I buy motor vehicle, can I take ITC? Yes, we have no exception. Further supply. Further supply means don't understand only sale. Further supply includes even renting, because supply means not only sale, even renting, leasing, everything will come under supply. Next, repairs, insurance and servicing of motor vehicle received by a general insurance company is always eligible for ITC. For example, I have purchased a car and it's a brand new car. Insurance is also there with respect to that car, and I was taking it on the road, and these auto people or two-wheeler people, they don't know how to drive in Chennai. Like that zigzag they will come and go, and they will put one scratch in my car and they will go pa. Now what should I do? Get down and fight with them? No. No, insurance is there na. Insurance is there. Why should I bother? I will not get down and fight. If you get down and fight, unnecessarily road rage will happen. He will speak something, you speak something. We should avoid that. Insurance is there. Go to the garage, go to the service center. I will give the vehicle there and I will tell, I was driving, one person has hit and went, proof is there in the dash cam, you check it. And now insurance company will take the entire claim. So the insurance company will make the payment to the garage, then the garage will raise invoice to insurance company. What invoice? Repair and maintenance invoice. Carefully listen. Now can the insurance company take ITC on the repair and maintenance expenditure, but the car is not owned by them? Car is not owned by them. Generally repair and maintenance in relation to car eligible for ITC. If the car purchased is eligible for ITC, they are not buying the car. So then how can they take ITC? That's why we have a special point. Repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. Is it clear? We don't have to check whether motor vehicle purchased by insurance company, not purchased by insurance company, what type of motor vehicle, nothing of that sort. Insurance company can always take ITC on the invoice raised by the service center. Is it clear? Next point. Suppose if the renting, hiring or leasing of motor vehicles is under a statutory obligation to provide the service by employer to employee, then ITC is always available. Carefully listen. there is a BPO which is working in night shifts, because BPO means they will do the process for US, UK, etc. and all. So they will be working in night shifts. There is a government order which says that any BPO which is working in night shift should mandatorily provide cab facility to their employees. Because of that purpose, they received a rent-a-cab service. Can they take ITC? Generally, if the cab purchase, they cannot take ITC. Correct? Why they cannot take ITC? Because cab will come under capacity does not exceed 13 and it will not come under the exception. So generally, cab purchase they cannot take ITC. So rent-a-cab also they cannot take ITC. However, this is incurred by employer to employee under a statutory obligation. So ITC available. Hiring, renting, leasing of motor vehicles as a statutory obligation by employer to employee is also eligible for ITC, and the statutory obligation can be under any law for the time being in force. Okay. Then what about ambulance and caravan, where it will come? For transporting persons or others? Others. Ambulance is not for transporting persons. If that be the case, we can pay money and travel in ambulance. No, it is for providing first aid during travel. Caravan, that is people who go for shootings, outdoor shootings, etc. and all, actors, they will not have place to sleep or take rest, etc. For that reason, they will be taking their caravan wherein, this washroom and bed, etc. and all will be available. So this is like a temporary accommodation that cannot be called as used for transporting persons, because the actors will not travel in that, they will just stay at their place. So therefore, it will come under other motor vehicles. See the last point there, ambulance and caravan are not motor vehicles for transportation of persons. Then we have certain clarifications. All these are important May 25 amendments. Listen carefully. Can ITC be availed on the demo car purchased by a dealer for using it for this demo driving, test drives? Test drive cars are there na? The test drive cars are purchased by the dealer. Can they take ITC? Can they take ITC? Yes. How? But they are not selling that car, no? That will be facilitating further supply, but that is not used in further supply. Correct? I mean, that car we are not selling, but that car helps in sales. Correct? That car we are not selling. Test drive car we are not selling. I am a car dealer. I am not selling the test drive car. I will sell. When I will sell test drive car? In future, when a new model comes. In future, when a new model comes for that car, I will sell the test drive car. Example, Mahindra Thar Rocks is there. Mahindra Thar Rocks, like that, one new car got launched. This Mahindra Thar Rocks is a new model, but Mahindra Thar was the old model. Definitely that old model cars they would have kept in the test drive. When new model comes, definitely they will keep new model only in the test drive. Now, for example, if you want to join for CA coaching, suppose if some old batch videos and all, like sometime IPCC, PCC or CA PE2 like that, those video lectures and all, if we are showing to you and telling I am an amazing faculty, will you buy? No, na? Correct. Latest syllabus. Is it previous batch or ongoing batch? Then only you will buy. Am I right? Correct or not? Because everyone wanted to buy the latest model and check the test drive also with respect to the latest models. Then what they will do with the old model? They will definitely sell it. But now at present are they going to sell it? No. But it will facilitate the sales. Agreed? It will facilitate the sales. Due to that reason, ITC should be given on the demo car purchase. That's what CBIC has given clarification. See there. Whether ITC available on demo vehicles used by dealer for showcasing and test driving to potential customers. ITC is available on demo vehicles if they are used for promoting further supply of vehicles. But remember, it will come under their inventory asset. This demo car will be classified as inventory asset because they are not going to sell it. So it will not come under inventory, correct? So it will be coming under asset. When it is asset, they will capitalize it, but they should ensure one point. What is that? GST component should not be capitalized. If GST component they capitalize, they will not be able to take ITC. Read the second point. If demo vehicles are capitalized, ITC is available unless depreciation under section 32 is claimed on the tax component. Also, on sale of such capitalized demo vehicles, so whenever we capitalize the demo vehicles, I told you it will be sold in future, correct? When it will be sold in future, whenever a new model launches, we will sell. At that time, how we need to pay the GST in terms of 18.6? How we will pay GST in terms of 18.6? ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale. Again I am repeating, 18.6 will come into picture whenever there is some capital goods on which ITC is availed and that capital goods is sold. Okay. So what we need to do, how much is the GST payable? ITC availed minus 5% for every quarter or part thereof, because depreciation will be computed based on 5%. 5% for every quarter or part thereof. From which date to which date? From the date of purchase till the date of sale, or GST on sale value, transaction value, whichever is higher, that will be taken as the GST payable. If the demo vehicles are used for non-business purpose or as a part of marketing service for manufacturer, then ITC is blocked. Example, if you see in airport or this malls, Phoenix Mall also, they will keep lot of cars as a display. Have you seen that? So in malls and all, car they will keep as a displayer. Even in airport also they will keep car as a display. Test drive possible? For example, you have been to Phoenix Mall. Just try once. It's a good mall, very big mall. Okay, full colors only. And so this Phoenix Mall, when you are going, I mean, colorful cars will be there is what I am telling. And lot of cars are there. Will they give it for test drive? No. If they give test drive, then Beast movie will happen there. You understood? You will take a test drive like Beast movie, you will go and you will come. All those things are not possible. Test drive is not allowed. Can they take ITC on that car's purchase? No. Only on test drive cars ITC is allowed. That is his last point. If the demo vehicles are used for non-business purpose or as a part of marketing service for the manufacturer, ITC is blocked. And this 18.6, how to compute GST, it's already there. In one page you can see how to compute GST payable under 18.6. Page number 113. Pa, when 18.6 will come into picture, pa? You have purchased some capital goods. On that capital goods you availed the ITC. Again I am repeating, when 18.6 will come into picture, you purchase some capital goods. On that capital goods ITC is availed. Now you are selling that capital goods. So when the capital goods are supplied on which ITC is availed, GST payable shall be highest of the following. What is that? A, how much ever ITC that you have availed, minus, why 5% we need to reduce? We would have used it for some period now. So that's why we need to do depreciation. The logic behind this 5% is the 5-year life. How 5-year life? If you use for 1 year, how much? 1 year, 20%. How 20%? 1 year, how many quarters? 4 quarters. 4 into 5, 20%. 2 years, 40%. 3 years, 60%. 4 years, 80%. 5 years, 100%. You got it? Means the life of the capital goods is considered as 5 years. So ITC availed minus 5% for every quarter or part thereof. From which date to which date? From the date of invoice till the date of supply, or GST payable on the value of that capital goods determined under section 15, that is transaction value, whichever is highest. Suppose if that capital goods are refractory bricks. Refractory bricks means these bricks which are used in the construction of commercial clints. So you would have seen in factory, refractory bricks, in factory and all, they will be constructing a clinpa to heat the material like this. So to heat the material, yes, to heat the material, they will be using clints like this, and in this clint, they keep the metal and heat it to convert into liquid form. That liquid they will pour into a mold to bring it into a requisite shape. But these bricks are so costly that it will withstand any amount of heat. It is not a normal red bricks which we use for construction of house. These bricks are different category, and these refractory bricks is having life of hardly 2 years. Again after 2 years they need to reconstruct. So refractory bricks, molds and dies. Molds and dies means what? To bring the product into requisite shape, they use a mold. So during this Ganesha festival, you would have seen now one mold they will take, put the clay and they will press it so that we will get the requisite shape. That is a mold or a die. Or jigs and fixtures in order to hold the raw materials or in order to hold the capital goods. Example, this camera is on one tripod now. Tripod is a fixture, and that lights and all are constructed or erected to one structure now. That structure will be coming under fixtures, jigs and fixtures. These may be sold as scrap. Then in that case, what are the 3 items per 3 goods? Refractory bricks, molds and dies, jigs and fixtures, sold as scrap. Then GST payable on the normal sale value, whatever is there. Means no need to compare A or B, whichever is higher. No need to compare this ITC avail minus 5% or GST payable. Just GST payable on sale value. For which goods pa? 3 goods. That too it should be sold as scrap. What if it is normally sold? Not as scrap, normally sold. Then A or B, whichever is higher. Now let's see some examples to understand this. Look into page number 115. There is one illustration. Page 115, there is one illustration. Capital goods purchased on 8/10/2019 for rupees 10 lakhs, excluding GST at what rate? 12%. They were disposed of on 5/5/2021 for rupees 6 lakhs, excluding GST at 12%. Compute the GST payable. Is it capital goods? Yes or no? Yes, clearly given, capital goods on which ITC availed. So 18.6 is applicable or not? Yes. Tell me the provision as per 18.6, what we need to do? First A, ITC availed. What is the ITC availed in the question? 10 lakhs into 12% is how much? 10 lakhs into 12%, 1 lakh 20,000 minus 5%. How many quarters? 8/10/2019. 8/10/2019 means October, November, December, 1 quarter. In 2020, 4 quarters. Correct? In 2020 financial year, that is calendar year, there are 4 quarters. So 2019 1 quarter, 2020 20. Epdipa 2 quarters. 8th October pa, October, November, December 1 quarter dhan pa. Adu 2020 dane pa. Jan will come in 2020 only, no? Sir, you lo poichi sir. Lot of thing went off sir, only subject sir. I will not make mistake, trust me sir. Full, see, how much went? You got it? At least now trust me sir. Like Dhoni, I had hairstyle sir. I started teaching this subject. Now I became like this sir. Then how many batches, how many years you might have understood. When I started this, even I did not get the mustache also sir when I started. You can search service tax valuation like that in YouTube. You search, my video will come first. Okay, you see in that video, even me say also not there at that time. Now it came, it went, everything over. Vehicle went to garage also. Still I am taking. I will teach sir, not trust me. So 2019 will be 1 quarter. 2020, how many quarters? 4 quarters. 2021, Jan, Feb, March, April, May, June, part thereof. So total how many quarters? 7 quarters. 7 into 5%, 35%. So what is the ITC availed? 1,20,000 minus 5 into 7, 35. Please do the calculation. 78,000 or GST on sale value. What is the sale value? 6 lakhs into 12%, that is 72,000. Whichever is, which is higher? That is the GST payable. Understood? Then second, what will be your answer if such goods are not capital goods? Come on. Normal sale value. What is the normal sale value? 6 lakhs into 12%, 72,000. Ayya, this 18,6 will come into picture only if it is capital goods, not other goods, only capital goods. How do you know it is capital goods or not? If it is capitalized in the books of the person who is purchasing it, it is capital goods. Otherwise, it will be inputs. Okay. Then, next question. What will be your answer if such capital goods are disposed of without consideration and the value determined under rule is 4 lakhs? What should be taken? Without consideration. A, same B, instead of, this is rule 31. So instead of 6 lakhs, we need to take 4 lakhs. 4 lakhs into 18%, 48,000. Whichever is higher? 78,000. Next, third, what will be your answer if such capital goods are disposed of without consideration and value cannot be determined as per rules? Then B is not possible. Why B is not possible? We don't have the transaction value. So only A will come. That is 78,000. What will be your answer if such capital goods are sold after 5 years? Then A will become 0. Why A will become 0? 5 years means 100%, correct? Then B will be sale value into 12%, 72,000, whichever is higher will be 72,000. What will be your answer if they are refractory bricks which are sold after 4 years as scrap for a value of 1 lakh? Don't compare. Don't compare A or B, whichever is higher. Just take sale value of scrap. What is the sale value of scrap? 1 lakh into what is the GST rate? 12%. So 12,000 will be taken as the GST payable. Understood? Now, look into one more illustration in the previous page. This is related to section 16. XYZ Limited is engaged in manufacture of taxable goods. Compute the ITC available with XYZ Limited for the month of October 2023 from the following particulars. Inputs A, 1 lakh. One invoice on which GST payable was 10,000 is missing. Can we take ITC on that missing invoice? Reason? Person availing ITC should be in possession of. For this reason you need to write pa. It's not yes, no. Again I am repeating. It's not yes or no. It's about the reason. What is the reason? One of the condition for availment of ITC is that the person availing ITC should be in possession of tax paid document. In the present case, as the invoice is missing, ITC not available. Like that reason you need to write. So how much ITC is available then? 90,000. Inputs B, 50,000. Inputs are to be received in 2 installments. First installment has been received in October 2023. Right now you are in which month? And this month only first installment. Means can we take ITC? Reason? ITC can be availed on receipt of last installment. In the present case, first installment is only received in October month. So as and when the last installment is received, ITC will be availed in that month. Like that reason you need to write. Next, capital goods 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST, as it will avail depreciation on full invoice value. ITC available or not available? Reason? As per section 16 subsection 3, ITC not available if the depreciation is computed on tax component. Correct? In the present case, as the depreciation is computed on GST component, so therefore ITC is not available. Next, input services. So which means 1 lakh only 90,000 can be taken. Then second case and third case nil, but you need to give the reason. Fourth case, input services 2,25,000. One invoice dated 21/2023 on which GST payable was 50,000 has been received in October 2023. What is the date of invoice? Date of invoice. Financial year. Financial year. For financial year 22-23, what is the time limit for availing ITC? 30th November 2023 or date of filing annual return. For financial year 22-23, what is the date of filing annual return? 15 September. So 15/9/2023, whichever is, which is earlier. But right now we are in which month? So we should have availed the ITC by 15/9/2023, but we are in October month. So can we take ITC on this 25,000, 50,000 rupees? No. The time limit for availment of ITC is expired. So we cannot take the ITC. But remaining 1,75,000 we can take ITC. Understood? That is about this. Then one more question, Pa. You please take Mighty 50. Look into question number 14. Mighty 50 questions. Look into question number 14. And those who are watching online, I have given the PDF in the description. You can download the PDF. And for you already booklet I gave. Okay. Look into question number 14. There should be some benefit now for coming to face to face. Correct or not? Some motivation, some benefit should be there. Online live anyone can sit and watch. Face to face means the pain we are taking. Coming morning we are getting bathing, brushing, and then traveling and coming here, sitting, whether you like or not, even though it may be like paining, hip paining, but still you are sitting and you are listening. So some reward should be there now for you, yes or no? That's why, got it. And definitely no, those who attend face to face till the end, definitely you will pass. My blessing is always there with you, okay? Then say this, but till end, you should be attending. ABC Motors, because we are all like, beginning and all, so enthusiasm will be there. Slowly it will go, enough, too much if we learn, no, we will clear, no, like that automatically people will leave. ABC Motors, an authorized dealer of motor vehicle, purchases 5 demo vehicles from XYZ Auto Limited, a manufacturer, on October 1, 2024. These demo vehicles are used for test drives and to showcase features to potential buyers. Each vehicle has a value of rupees 10 lakhs excluding taxes, and ABC Motors receives a tax invoice for the purchase, which includes the following: IGST on demo vehicles 1,80,000, total purchase cost per vehicle 10 lakh plus 1,80,000, 11,80,000. ABC Motors plans to capitalize these vehicles in its books of accounts at rupees 10 lakh per vehicle and intends to use them for test drive for a period of 2 years. At what price they are capitalizing? Including GST component, excluding GST component? Means can they take ITC or they cannot take ITC? They can take ITC before selling them as used vehicles at a written down value. After 2 years of usage, ABC Motors sells one of the demo vehicle for rupees 5 lakh and IGST on the sale is applicable at 18%. Point number 1. Determine whether ABC Motor can claim ITC on the purchase of these demo vehicles. If yes, compute the ITC. So what is the answer that you will write when you get a question like this? Don't tell yes. That yes alone you don't tell. Anything else you tell. Huh. Got it? This is the problem which I was explaining. You don't know where to start. So best is this information where we studied circular as per CBSE circular. As per CBSE circular. See the question, don't see the answer, see the question. As per CBSE circular. This is related to what? Motor vehicles, demo vehicles, correct? As per CBSE circular, motor vehicles which is used for demo or for showcasing to potential buyers will facilitate further supply of motor vehicles. Consequently, ITC is available and it is not a blocked ITC. You got it, pa? In the present case, they have purchased 5 motor vehicles, 5 demo vehicles, and the GST paid is 1,80,000 per vehicle. Therefore, ITC available is rupees 9 lakhs. Also, they have not capitalized the motor vehicle including the GST component. Okay. Next, second, that is the answer you will write. What will be your answer if the motor vehicles are capitalized in the books at 11,80,000 per motor vehicle? So, as per section 16(3), if the capital goods are capitalized including the GST component, such GST component cannot be availed as ITC. In the present case, as they capitalized entire 11,80,000, consequently ITC is not available. Calculate the GST payable at the time of sale of demo vehicles. Suppose if they avail ITC, what will be the case? If they avail ITC on the demo vehicle, what will be the case? Is demo vehicle capital goods? Yes. ITC availed on capital goods. So therefore, we need to apply 18(6). Correct? Just now we learnt here. When 18(6) will come, if it is capital goods on which ITC is availed. Is it capital goods? Yes. On which ITC is availed? Yes. So 18(6) will come. What is that 18(6) says? A. ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale. Like that you should write. Theory you should write. ITC availed minus 5% for every quarter or part thereof. That equals to, what is the ITC availed? 1,80,000 or 9 lakhs? 1,80,000 because they are selling now only one demo vehicle. So 1,80,000 minus 5% into how many quarters? When is it purchased? When is it sold? 2 years. 2 years means how many quarters? 8 quarters. 4 plus 4, 8 quarters. So therefore 5 into 8, 40%. So 1,80,000 minus 40%. What is that? 1,08,000 or GST on transaction value of such demo vehicles. What is the GST on transaction value of such demo vehicles? That equals to 5 lakhs into rate 18%. That equals to 90,000. Whichever is higher is 1,08,000. This 1,08,000 who will pay? Dealer will pay. When dealer pays, can the buyer take ITC? Yes. Buyer of such demo car, if eligible, can avail ITC. When they can take ITC, if they are into the business of transportation of passengers. Mostly demo cars are purchased by travel operators, because these travel operators, they don't mind now whether it is a new car or used car, etc. They will buy it and they will be using it. So therefore, buyer, if eligible, means if they are into business of transportation of passenger, they can avail ITC. Now suppose if they have capitalized the demo vehicle at full value, then if they capitalize the demo vehicle at full value including GST, can they take ITC? That question is not there. I am adding. Can they take ITC? No. In that case, when they sell, what will be the answer? 18(6) will come or 18(6) will not come? 18(6) will not come. Then we need to pay GST only on transaction value. What is the transaction value? 5 lakhs into 18%, that is 90,000. Clear? Somewhere if you can write, you write that line. If ITC not availed on demo vehicle, if ITC not availed on demo vehicle, not availed on demo vehicle, then GST payable upon sale, then GST payable upon sale equals to, how much is the sale value? 5 lakhs into 18%, that equals to rupees 90,000. Clear here? We'll take a break for 15 minutes and relax yourself and come back. We will complete input tax credit chapter. Okay. Whatever doubts you have, I will be sitting there. Just come and ask. Okay. Okay, we'll start. Look into one more circular. In the previous session, we completed up to this demo vehicles related circular. So please look into page number 106. This is related to availability of ITZ on the maintenance, that is repair and maintenance services provided by garage or workshop to the insurance company. So already I told you, sometimes when the insurance company insures a vehicle and that vehicle is meeting with an accident, then the repair bill will not be raised to the insured, but the repair bill will be raised to the insurance company. Whether ITZ is available to the insurance company on the expenses incurred for repair of a motor vehicle. Now we need to see what type of the reimbursement mode it is. That is, like, is it a reimbursement mode or cashless? There are two models in insurance. Cashless means there will be some authorized network of garages. You go there, you give your vehicle, they will only do the repair. You don't have to pay 1 rupee also out of your pocket. The insurance company will make the payment to the garage and the garage will give the vehicle to you. This is cashless model. Second model is there, reimbursement model. In reimbursement model, what they will tell, you pay the money first. To the workshop or garage, you pay the money first, and thereafter the insurance company will give you the reimbursement. That is second model, okay. But second model is highly risky, because what happens, we will think that we will get full amount. No, they will not give full amount. They will give 50%, 60% like that. But cashless is always better, because we will not pay anything, everything insurance company will only make the payment, okay. Fine. Suppose if it is a reimbursement mode of claim settlement, insurance company is making the payment or insured is making payment to the workshop. Insurance company is paying, insured is paying. Who is insured? The owner of the vehicle. Whether insured is paying or insurance company is paying to the garage or workshop. Insurance? No, insured is paying. Insured is paying. Insured is paying and insured get the reimbursement from insurance company. Is it clear? So insurance company can avail ITZ even though expenses initially incurred by insured. However, the invoice should be in whose name? However, the invoice for repair should be in the name of the insurance company. Now, suppose if the bill is for 1,50,000, suppose the bill is for 1,50,000, but the insurance company paid only 1,00,000 to insured, then how much ITZ insurance company can take? Again I am repeating, insurance company paid 1,00,000 only, but the invoice in the name of insurance company is how much? 1,50,000. I told you, in reimbursement model, they will not pay fully, they will pay less only. So if they pay less, then what should be taken as the ITZ to insurance company? 1,50,000, 1,00,000, 1,00,000 only they can take ITZ, on 1,00,000 only they can take. Repair cost beyond the approved claim, ITZ to the extent of amount reimbursed by the insurance company, but not on the entire repair cost. What if the invoice is in the name of the insured, not in the name of insurance company, that is in the name of the insured, that is owner of the motor vehicle? Then, can they take ITZ or they cannot take ITZ? They can take ITZ provided the motor vehicle purchased is eligible for ITZ. Insurance services, ITZ available if the motor vehicle purchased is eligible for ITZ, correct? Don't write ITZ not available. Write this if statement. What is that? If motor vehicle purchased is eligible for ITZ, then the insured can avail ITZ on the repair and maintenance expenses. Is it clear? Or insurance, etc. Repair and maintenance the insured can take when? If the motor vehicle is eligible for ITZ. That is this. If the invoice in the name of insured, ITZ not available to insurance company as the conditions are not satisfied. But can the insured take ITZ? Yes. However, insured may take ITZ. However, insured may take ITZ if motor vehicle purchased is eligible for ITC. If motor vehicle purchased is eligible for ITC. If motor vehicle purchased is eligible for ITC, definitely insured can take ITC on this. Okay. Related to this, there is one question in Mighty 50. Have a look into that. Question number 16. Question number 16. ABC Insurance Limited provides general insurance services for motor vehicles. A customer, Mr. Sharma, has a policy with ABC Insurance. His car was damaged and he chose a non-network garage for repairs. Non-network garage for repairs means which mode? Reimbursement mode. And incurring a total repair cost of 1 lakh. Who incurred this 1 lakh pa? Insurance company ya Mr. A? That Mr. Sharma. Mr. Sharma has incurred, correct? The insurance policy approved a claim of 80,000. How much Mr. Sharma paid? 1 lakh. But how much approved by insurance company? 80,000. Which ABC Insurance later reimbursed to Mr. Sharma. Scenario 1. The garage issued two separate invoices, one for 80,000 to ABC Insurance and another 20,000 to Mr. Sharma. Now tell me, can ABC Insurance avail ITC? Yes. But sir, they have not made payment to the garage. It's okay. Even if they have not made payment to garage, they can definitely take ITC. Reason being that 180 days condition is not applicable. That 180 days condition is there na. I have to make payment to supplier within 180 days. Otherwise, I cannot take ITC, or ITC avail needs to be reversed. Like that is not applicable in this case. Is it clear? Then, what about Mr. Sharma can take ITC on the piece 20,000? Provided if the motor vehicle purchase is eligible for ITC. But the question here is only about ABC Insurance. See the question below. You are required to determine the extent of ITC available to ABC Insurance Limited in scenario 1 and explain the conditions under which ITC can be claimed. So ABC Insurance has received an invoice for 80,000. So definitely they can take ITC on this 80,000 rupees. Correct? Then second scenario you see. The garage issued a single invoice for rupees 1 lakh to ABC Insurance. Full value 1 lakh. But ABC Insurance only reimbursed 80,000 to Sharma. How much ITC can ABC Insurance take? GST pertaining to 80,000. Even though invoice is for 1 lakh plus GST. Then next. Scenario 3. The garage issued an invoice for 1 lakh directly to Mr. Sharma, who later got 80,000 reimbursed from ABC Insurance. Then no ITC. Why no ITC? Because the invoice is in the name of the insured. So can insurance company take ITC? No. So that is the answer for first 3 questions. Fourth question. Explain how the provisions of 16(2) of CGST Act apply to these scenarios and the implications for claiming ITC. So even if payment is not made by ABC Insurance Limited to garage, they can avail ITC, and the proviso to section 16(2), that is payment to supplier within 180 days condition, is not applicable in this case. Okay. Then one more question which is related to that time limit, revocation, etc. we discussed now, related to that. Question number 13. TechPro Solutions Private Limited, a registered person under GST, had its registration cancelled by the proper officer on June 1st, 2024 under section 29 of the CGST Act due to non-compliance with filing returns. The company had received input services for which it was eligible for ITC during financial year 23-24. But ITC has not been availed before the date of cancellation. You got it? They could not avail. On August 25th, 2024, TechPro Solution applied for revocation of cancellation and the registration was revoked by proper officer on September 5. From when per registration is cancelled? June 1. June 1. but the time limit to avail ITC is not expired as on June 1. But when the revocation is withdrawn, the revocation is withdrawn as on September 5, 2024, allowing TechPro to continue its business operations. However, during the period of cancellation, TechPro Solution received several invoice and debit notes for supply made between June 1 and August 25. Sir, here in this case, still the time limit to avail ITC is there, correct? So 30 days from revocation is what? September 5 plus 30 days. October 5 or November 30, whichever is later is November 30. Time limit is there, they can still take the ITC, correct? The regular time limit is there. That's why they said whichever is later. Are you understanding? They did not tell 30 days from the date of revocation alone. 30 days from revocation or the regular time limit, whichever is later. So in this case, what is the financial year? Invoice pertains to which financial year? 23-24. For 23-24, what is the time limit for availment of ITC? Time limit for availment of ITC for 23-24, 30/11/2024 or the date of annual return, whichever is earlier. And as the regular time limit is not expired, so regular time limit or 30 days from revocation order, whichever is later, the regular time limit itself is there, that is 30 November 2024. Now, what about the invoices during the period June 1 to August 25? June 1 to August 25. This is for the previous financial year. Between June 1 to August 25, 2024 means which financial year? 24-25. For 24-25, what is the time limit? 30th November 2025 or 30 days from revocation, whichever is later. Whichever is later is what? 30/11/2020. No, financial year 24-25, Financial year 24-25. Regular time limit itself is there, na? What is the regular time limit? 30th November or date of filing annual return, whichever is earlier, that is 30/11/2025. The regular time limit itself is there. For which case I told you whichever is later? For which case I told you whichever is later? For the previous year for which the ITC is pending as on the date of cancellation, not for the period of cancellation. Is it clear? For the period of cancellation from 1st June to August 25, anyhow the regular time limit is there for availment of ITC, that will only be applicable. So you go through this question at your end, you will understand this. Now coming back to the second blocked credit. The second block credit is construction related blocked credit. In construction related block credit, we have three inward supplies which are blocked ITC: any service, works contract, service and goods. Any service, works contract, service and goods purchased or received in relation to construction of an immobile property. ITC is not available on those inward supplies. What are the block credits here? Any service. Any service means interior decoration service or construction service or even this painting service, any kind of service. Works contract service. What is works contract service? One person only will do entirely. They will only supply the material required for construction and they will only do the construction in relation to immobile property. Then any goods. What are the goods purchased for construction? Bricks, cement, building material, then that metal pipes, sheets, etc. All these purchased or received in relation to construction of immobile property, ITC not available on those inward supplies. This is a blocked credit. But we have some exceptions. What is the meaning of works contract? Works contract involves transfer of property in goods as well as provision of services for a single consideration. And what are the three exceptions? Generally, any goods or service or works contract service purchased or received for construction of immobile property is blocked credit. However, we have three exceptions. Exception number one, the restriction is not applicable to the builder. The restriction is only to the owner of the property. For example, I am the builder, you are the owner of the property. If I buy the building material, can I take ITC? Yes. But if you buy the building material, you will not be able to take ITC. Are you understanding this? Read the first exception. The above discussion is not applicable to supplier. That is, If a works contractor receives construction service for construction of an immobile property, then ITZ can be availed on construction service. Understood? Then second exception, construction of plant and machinery even though it is immobile. For example, for constructing lift, for constructing escalator, I am purchasing the building material, cement, etc. Can I take ITZ? Yes, because plant and machinery is an exception. However, plant and machinery excludes telecommunication towers and pipeline laid outside factory. Means for construction of telecommunication towers or for construction of pipelines, if I receive any inward supply, I cannot take ITZ with respect to that. Understood? However, other plant and machinery, can I take ITZ? Yes. Third exception, if the construction expenditure is charged to P&L, then also ITZ can be availed. So, if the construction expenditure is capitalized, no ITZ. If the construction expenditure is charged to P&L, I can take ITZ. Understood? Three exceptions. Respond, pa. What are the three blocked credits? Any service received, any goods purchased, or works contract service in relation to construction of an immobile property is blocked ITZ. However, three exceptions are there. Exception number one, the restriction is only to the owner of the property, not to the builder. If the builder receives these services or goods, they can take ITZ. Number two, if the construction expenditure is charged to P&L, or if the construction expenditure is in relation to plant and machinery, excluding telecommunication towers and pipelines laid outside factory gate. Okay. Now, sir, builder you are telling they can take ITZ, but is there any restriction to the builder? Yes. If the builder's outward supply is taxable at 1.5% or 7.5%, they cannot take ITZ. Generally, builder will be constructing properties. Some of the properties will be taxable at 1.5 or 7.5, then they cannot take ITZ even though that inward supplies are not blocked ITZ. But if the outward supplies are taxable at 12% or 18%, then they can take ITZ. Now you may get a doubt, sir, when sir 1.5, 7.5, when it is 12 or 18? Residential constructions and all 1.5, 7.5. Commercial construction will be 12 or 8. Okay, this is for your information. Then, whether ITZ available on ducts and manholes used in network of optical fiber cables. What is this ducts and manholes? Generally, in order to put the optical fiber cable, what they will do is that they will put a manhole and they will dig something deep and they will lay down the pipelines. Okay. So, this is for the purpose of sending the optical fiber cables. Today we are using the Ethernet or fiber net, etc. and all na. All these things are using this OFCs, optical fiber cable networks, OFC network. Now, for doing this, whether there is some construction material required? Napa. Correct? Cement they need to buy, and TMT bars they need to buy, and they need to make the structure, etc. Can they take ITZ on that construction expenditure? Yes, because it will come under plant and machinery. But plant and machinery excludes telecommunication towers now. Who will lay down this? Telecom companies only. They said plant and machinery excludes telecom towers. They did not say plant and machinery excludes anything required for telecom companies. They said plant and machinery excludes telecom towers. So, definitely they will be able to take ITZ. Whether ITZ available on ducts and manholes used in network of optical fiber cables. Ducts and manholes which are integral part of optical fiber cables qualify as plant and machinery and can avail ITZ on the same even though used by telecom companies, as only telecommunication towers are excluded from the meaning of plant and machinery. Even they do not fall under pipelines laid outside the factory gate. Only pipelines laid outside the factory gate. This is not a factory gate, correct? Next, see some special points. Only hiring, renting and leasing of motor vehicle is block credit. However, leasing of other items is not block credit. For example, we are taking computer on rent, furniture on rent, etc. and all. On that, can we take ITZ? Yes. The restriction is only renting of motor vehicles. Works contract is confined only to immobile property. When we see works contract definition, that is in relation to a immobile property. Got it? Then next, ITC available on construction of pipelines inside the factory, because plant and machinery excludes what? Respond here. Plant and machinery excludes telecommunication towers and pipelines laid outside factory gate. But inside factory gate, can they take ITC? Yes. ITC available on rail, 2 or 3 wheelers with capacity up to 25 cc. Why like that, sir? Because they are not motor vehicles. What is given in motor vehicles? Motor vehicles, vessels and aircrafts. Is rail given in motor vehicle there? No. Means on rail purchase, can we take ITC? Yes. Sir, why we will buy rail, sir? That's what in mall and all, we put one rail throughout the mall. Kids and all will be traveling. That train, can they take ITC? Yes. And if you see some exhibitions or MGM, etc., VGP, they will buy one train for the purpose of surrounding, correct? One ride we will go. Can they take ITC? Yes. Indian Railways also purchase the train from ICF. Can they take ITC? Yes. Because train is not in the list of motor vehicles. Then what about motor vehicles up to 25 cc? That is not at all a motor vehicle as per the definition. What is up to 25 cc? Any bike you take, any moped you take, minimum 100 cc, correct? This scooty, Axis, Jupiter, etc. and all, 100 cc, 125 cc, 150 cc. Definitely less than 25 cc means bicycle with one motor fixed to it. You understood? Then definitely they can take ITC on that. Yes, because in Bangalore, one software company purchased bicycles with some motor and given it to employees, because employees were complaining that we are unable to come on time due to traffic. They said, okay, no issue, you bicycle we will give. In that bicycle you come. It will go with 10 kilometer, 20 kilometer speed. Like this VIP movie you would have seen, na? In VIP movie, Dhanush will be using it. That is one. That is less than 25 cc, wherein people can run and go, but the bike will go so slowly. That one. So is it a motor vehicle? No. Can we take ITC on that? Yes. Next. Look into other blocked credits. And even recently also in Agaram event, so one person has invented one bike, okay, EV, electric vehicle. And will that electric vehicle come under motor vehicle on which ITC is available? That is motor vehicle only, sir. That is not 25 cc, etc. Electric vehicle where cc, etc. and all is there. You understood? There is no cc. So due to that reason, electric vehicle is also motor vehicle. And if we buy electric vehicle, can we take ITC? No. Electric vehicles are also motor vehicles. On par with motor vehicles, you need to treat. Then see this invert supply, other blocked credits, invert supply, membership of club, health and fitness center is a blocked credit. Example, lot of celebrities will take fitness center membership to go to gym and keep their body fit, then only they will be getting chances to act in movies. It's a business expenditure or personal expenditure? Business expenditure. For their profession, they do that. Can they take ITC on that? No. Even though it is business expenditure, they cannot take ITC because membership of a club, health and fitness center is blocked credit. However, we have one exception. If it is incurred by employer to employee under a statutory obligation. For example, if the government is telling to the software companies that your employees are becoming obese and they are dying because of heart attack, so therefore ensure that they are all going for gym and get a gym membership like that. Because of that reason, if the employer has taken gym membership, then can they take ITC with respect to that? Yes, provided by employer to employee under a statutory obligation. Then second point, travel benefits to employees on vacation, that is leave travel concession. An employee is going on a vacation, but the vacation expenditure is borne by the employer. Can the employer take ITC with respect to the vacation expenditure? No, it's a blocked credit. It's a blocked credit. What if employee is going on a business visit and that business visit expenditure is borne by employer? Then yes, provided by employer to employee under a statutory obligation available. Even other than vacation also available. What is this statutory obligation? What if government has mandated that they have to provide the travel expenditure to the employee going on a vacation. Because of that reason, if the employer incurs, can they take ITC? Yes. Then inward supply of a NRTP is blocked credit. Non-resident taxable person. Who is a non-resident taxable person? A person who is coming from outside India to India and who is not having any physical place of business in India. Example, cricketers who come to India to play for IPL matches will come under NRTP. And also certain foreigners who come and dance, sing, etc. in the wedding, they will also be coming. Recently happened Nagar, Anant Ambani's wedding, for that big people and all came and danced. So that they will also be coming under NRTP. Or nowadays, pan India over, pan world movie and all will come. For this pan world movie, we will rope in some foreign celebrities, because our Atlee went to Bollywood. And there what he is doing is that, he make a movie with Allu Arjun. See the combination, okay? That is, that guy is from Telugu industry. This guy is from Tamil industry. They both are going and making one Hindi movie there, pan India movie. In that, they are roping in Will Smith from Hollywood as an actor to act in that movie. I don't know, maybe Will Smith has lost his market or what, I don't know. So he is coming and acting here. And whether Will Smith, who is coming to India, will come under NRTP? Yes, non-resident taxable person. And do they have any physical place of business in India? No. And they cannot avail ITC on anything except on import of goods by them, only on import of goods, okay? So we will also make one pan world movie. So using our Vijay Anna, we will make one movie, okay? So this will be a pan world movie wherein he stopped acting, no? After 2026 he will act, don't worry, okay? So he will definitely act, because lot of people said like that only. I will not act, I will not act. Last they have acted. Even after becoming Deputy Chief Minister, people are acting. You understood? Seriously, Andhra Pradesh you take. Andhra Pradesh, Pawan Kalyan has become Deputy Chief Minister. He said, I will not act. But, many movies are coming up. People will tell like that. Money, who will not leave? Everyone wants money. They will do that, okay? So, and Vijay Anna, needless to say, there is no chance that he will become CM and all. So 2026, only they are constructing dreams. He will at most become one MLA for sure. Definitely. He will contest and he will win. But TVK winning and he becoming Chief Minister and all, I really doubt that much. Just like that means, then everyone will come and become Chief Minister. Chief Minister post is not that easy. And therefore, he will definitely continue acting, and now we will sign up a movie with him. Movie title Ratman, okay? Batman came, Ant-Man came, Ratman no one came, we will make. What will happen as usual? In the childhood, Vijay Anna, so will be sleeping, one rat will come, he will be in a poor family, etc. and all. One rat will come and bite him, because of which he will get lot of powers. So he will become a rat man, got it? And he will be saving all the people in Tamil Nadu from, villains, etc. and all. Now, every good hero need a good villain, correct? So whom we will bring? We will bring Thar as a villain in this universe. Thar is a hero in that universe, but Avengers universe. But in our universe, Thar is a villain. Possible, na? Example, Venom. Venom is a villain in Spider-Man universe. But the same Venom became a hero in Venom's universe, correct or not? Then we can, anything we can do. When people who are listening are idiots means anything we can tell, got it? So therefore, Thor we will bring him. Chris Hemsworth, the actor name is Chris Hemsworth. He is coming from there to here to act. And we will make good fighting sequence, etc. and all. In climax fight, Thor will be taking his hammer and he will be hitting our Ratman. Our Vijay Anna will not have any weapon. Hand is the weapon. He will take like this and he will hit. hammer and all will be broken into pieces. And therefore, what will happen to Vijay Anna? Nothing. Little bit sprain, like this he will do. It will become normal. I also thought it is so easy. After undergoing surgery only I came to know. Not that easy, pa, not that easy. You know, nothing. From this height to down, I just jumped while doing a trekking. Okay. And nothing. I did not consume alcohol, etc. and all. Normal. I was fully active. From there to here. But because of our body, etc. and all, why side chipa, okay. And I just fell down. ACL got torn, cut. And they said, no other go, sir. Surgery needs to be done. I jumped, sir. I did not do anything great and all. Even then gone. And then I remember in Tupaki movie climax and all, you know, how they will hit that much and he will jump 4 times and it will become normal. So why that thing is not happening for me like that? Many times I thought. In movie only it will happen. Fine. Now, this Thar is there na, Chris Hemsworth. He is called as NRTP. What he is bringing? Hammer, hammer. On that alone he can take ITC. You understood? Import of goods by NRTP. Then see the next inward supply. Food and beverages, outdoor catering, beauty treatment including cosmetic, plastic and hair transplantation, life insurance and health insurance. You can remember it in 3 points. Food, beauty, insurance. Food, beauty, insurance. Too much food if you eat, beauty will get spoiled. Insurance is required. Okay, va? Food, beauty, insurance. Related to food, what we have? Food and beverages, outdoor catering. Related to beauty, what we have? Beauty treatment including cosmetic and plastic surgery, hair transplantation. Related to insurance, what we have? Life insurance and health insurance. These inward supplies are blocked credits. However, we have some exceptions. 3 exceptions are there. Exception number 1, inward supply and outward supply are same. What does it mean? That is, I am into the business of food and beverages. I am selling food and beverages. So I will buy food and beverages and I will sell food and beverages. So that is this. Inward supply and outward supply are same. Then inward supply is part of composite or mixed outward supply. I am into the business of transportation of passengers. I will provide food to my passengers. So I purchase the food and beverages. Can I take ITC? Yes, because food and beverages is inward supply, which is a part of taxable or taxable composite or mixed outward supply. Is it clear, pa? First point was, I am into sale of food and beverages, so I purchase food and beverages, I can take ITC. Means inward supply also food and beverages, outward supply also food and beverages, same category, so we can take ITC. Second, inward supply is part of outward supply. So inward supply is what? Food and beverages. Outward supply is what? Transportation of passengers. In that transportation of passengers, even food and beverages is also there. So due to that reason, I can take ITC. Third point, statutory obligation by employer to employee. As per Factories Act, they have to mandatorily provide food facility to the workers who are working. Because of that reason, employer purchases food and beverages. Can they take ITC? Yes, because it is under a statutory obligation. Is it clear? I'll give you one example, answer this. Airlines spent money for the beauty treatment of the air hostess. Air hostess beauty treatment bill is paid by the airlines. Now can airlines take ITC on this beauty treatment expenditure? Why? Why? Correct. They are not supplied along with transportation of passengers. Am I right? Napa. Inward supply and outward supply same category. Is airline into the business of sale of air hostess? No. And whether airlines is in the business of providing transportation of passengers and air hostess is part of the outward supply? No. But people are not paying money for air hostess, but they are paying money for the transportation. Okay, it's not part of outward supply. Then how can they take ITC? They cannot take ITC on that. Is it clear? Is it statutory obligation? Which law will tell you that your air hostess should look good, therefore spend money like that? No law will tell. This is not under a statutory obligation, therefore ITC not available. Then see the other inward supplies. From a person opting for composition scheme, I told you already, generally whenever you are purchasing from a person opting for composition scheme, he should not charge GST to you. If he charges GST also, you should not be able to take ITC. And for personal consumption, this point already we discussed in section 16. So we have blocked credits, wherein again it is given that any goods purchased for personal purpose we cannot take ITC. Then for use in relation to obligation under CSR obligation. Under CSR obligation, if we buy anything, we cannot take ITC. Means every company has to spend some money towards the corporate social responsibility. As a part of that spending, they will buy some material. For example, they are doing cleaning of roads. For cleaning of roads, they will buy broomstick, etc. and all. Can they take ITC on the broomstick purchase? No. That is this. For use in relation to obligation under CSR. If the goods are lost, stolen, written off or destroyed or disposed of by way of gifts or free samples, then also it is blocked credit. That is, I am purchasing some goods, destroyed in a fire accident, someone has stolen it, or I have written off, or I distributed it as gifts or free samples. In all these cases, it is blocked credit. Goods lost, stolen, destroyed, written off or disposed of by way of gifts or free samples. What if that gift or free sample becomes supply? Can I take ITC? Yes. Example, Kinder Joy. Carefully listen. Kinder Joy purchases toy, which they are giving it as free gift along with the chocolate. Correct? Generally, any goods purchased and given as gifts or free samples, they should not take ITC. But this chocolate and toy will become composite supply. Correct? What is composite supply? Two or more supplies naturally bundled in the ordinary course of business. These two are joined together. Correct? They are supplied together. Therefore, it is a composite supply. Can Kinder Joy take ITC on the toy purchased? Yes. If gifts or free samples treated as supply under 7(1)(c), then ITC not required to be reversed on the inward supplies. One more example also I will give you. There is an employer who is purchasing a smartphone worth 80,000 rupees and gifting it to the employee. Whether employer gifting 80,000 rupees worth of smartphone to employee is supply or not a supply? Supply. We have one point, employer to employee, where the value of gift exceeds 50,000 per annum per employee is covered under supply. Now, on that 80,000 rupees worth of mobile purchase, can the employer take ITC? On the 80,000 rupees worth of mobile purchase, can the employer take ITC? Yes. Generally, gifts or free samples, they cannot take ITC. But if it becomes supply, they can take ITC. No, you are not listening properly, pa. Again, I am repeating, employer giving a gift to employee more than 50,000 rupees in a financial year is supply. Is it clear? Now, employer purchased a smartphone for 80,000 and gave it to the employee. Is that gift of smartphone supply or not a supply? Supply. Supply. Now, can the employer take ITC on the smartphone purchase? Yes. Because generally gifts or free samples is block credit, but if it becomes supply, then ITC is not required to be reversed. One more case. Suppose if the employer purchased a mobile worth 40,000 and given it to the employee, is it supply or not a supply? Not a supply, because value of gift exceeding 50,000 is only supply. Here it is just 40,000. So therefore it is not a supply. Now the employer purchases the mobile. Can he take ITC with respect to that? No, he will not, because it is not a supply. So ITC not available on the product purchase. Understood? Simple pa. When you are giving it as gift or free sample, if it becomes supply, then you can take ITC on the inward supply. If that giving as gift or free sample is not a supply, you cannot take ITC on the inward supply. Is that clear? Then this point, so this is not applicable for you, so just leave it. And the 73, 74, 129, 120, all these sections are of at CA final level. So therefore clearly in study material they said that it is not applicable for intermediate. So therefore this you don't have to read, this point you don't have to read, just leave it. Then look into one clarification, whether ITC available on goods purchased for free replacement during warranty period. What is this goods purchased for free replacement during warranty period? Carefully listen, carefully listen. I am a seller who is selling electronic items. You came to my shop and you purchased a rechargeable torch. You purchased a rechargeable torch. I sold the rechargeable torch to you. In my shop it is working, but the moment I gave it to you, you took it to home and you did the charge. Next day it is not working. What you will do? You will come to my shop and return it, correct? Now I will give you a new one. Am I right? I will give you a new one. When I am giving you a new one, means I am buying that new one and I am giving you the new one. Can I take ITC on that? Yes, yes. Even though I am not going to charge anything on the new one, but already on the old one I have collected. That's the reason why ITC is not required to be reversed and they can enjoy the ITC. You understood the situation or you want me to explain again? That is, whenever we purchase the goods for replacement during warranty period, on that goods purchase can we take ITC? Yes, we can take ITC. Whether a part or entire product is replaced during warranty, ITC can be availed on goods purchased for warranty irrespective of whether any consideration is charged or not with respect to such warranty repairs. So what is the one point that you need to remember? Any part or any goods purchased for replacement during warranty period, can they take ITC? Yes, happily they can take ITC. Where distributor uses his stock for replacement, manufacturer replenishes the stock on which manufacturer can avail ITC. What is this? For now, I am a dealer of that rechargeable torch. What I will do, in my stock something will be there, new one I will give. Now I will ask my manufacturer, sir, you sold me 100, in that 100 one is defective, so you send me another one. Why? Because one became defective, you send me another one. Now who is buying? Manufacturer is buying, correct? Dealer got it free from manufacturer, but who is buying? Manufacturer is buying. Can manufacturer take ITC? Yes. Where distributor uses his stock for replacement, manufacturer replenishes. Replenishes means refills or restores, etc. the stock on which manufacturer can avail ITC. Understood these 2 points? Then next point. Generally, when we buy any electronic product, there is a standard warranty. Sometimes, if you pay extra amount, you will get an additional warranty. Have you observed? Mostly Apple products, all Apple products, they will be telling, you know, if you buy Apple phone, Apple Care Plus, like that one scheme is there. That is for extended warranty. You pay some 15,000, you will get a extended warranty. Anyhow, standard warranty will be for 1 year. Now they will give 1 more year extended warranty. In that 1 more year, anything happens to the mobile, like broken, etc. and all, you will get the warranty coverage. Is it clear? Almost every electronic, TV also it is there, washing machine, fridge, everything they give the additional warranty, extended warranty. Free or they will collect some money for extended warranty. They will collect some money for extended warranty. What is the treatment of that money collected for extended warranty? Simple. If the warranty charges, additional warranty charges is paid at the same time of purchase of the product to the same supplier, then the product rate will be applicable on warranty charges. For example, you are buying a MI TV. MI TV rate is 28%. TV GST rate is 28%. Now you pay some 5,000 rupees for extended warranty. Now what is the treatment of this 5,000? Whether you paid at the same time or later point of time? Same time. To the same supplier or different supplier? Same supplier. Then that 5,000 also will be taxable at what rate? 28%. If you pay the additional warranty at a different time or at the same time to a different supplier or to a different time different supplier, then the rate will be 18%. That is the rate applicable to services, that is 18% will be applicable. Is it clear? You read it again, here you will understand. Amount paid for extended warranty taxable at the same rate applicable to goods if the warranty is taken from the same supplier at the time of purchase of goods. If the amount for extended warranty is paid to another supplier, then what? It will be treated as a separate supply. Then, if the amount paid for extended warranty after purchase of goods, then it is treated as a different supply, whether purchased from the same supplier or different supplier. So, total 4 possibilities, correct? Same supplier, same time. Next. Same supplier, different time. Next. Different supplier, same time. Next. Different supplier, different time. Correct? First case alone, same rate applicable to the product. Correct? Next 3 cases, 18%. It is treated as a different transaction. So, normal rate applicable to the services will be taken. That is with respect to this clarification. Now, look into mighty 50 questions. We have a question related to this. Question number 15. Question number 15. Samsung Electronics sells a smartphone to a customer with 1 year manufacturer warranty. During the warranty period, the customer experiences a defect and visits an authorized distributor who replaces the defective smartphone with a new one. Are you concentrating? Samsung Electronics sells a smartphone to a customer with 1 year manufacturing warranty. During the warranty period, the customer experiences a defect and visits an authorized distributor who replaces the defective smartphone with a new one from their own stock. Now, Samsung, that is company, later replenishes the distributor stock without charging any additional amount. Additionally, at the time of purchase, the customer buys an extended 2-year warranty from a third-party service provider, Warranty Plus, which begins after manufacturer's 1-year warranty expires. You are required to determine the GST liability for Samsung on the replacement of defective smartphone under manufacturer warranty. Carefully listen. So, Samsung is sending the product, correct? So, is it for the replenishing? No, it is the dealer. Samsung replaced the defective smartphone under manufacturer warranty. The dealer has replaced. Can the dealer take ITC on the product purchased? Yes. Correct. Whether the dealer is required to pay any GST on replacement of that smartphone? No. As per CBSE circular, when a dealer replaces a part or whole goods, GST not payable even though it is without consideration, as GST is already paid for the defective parts or goods. Also, dealer is required to reverse any ITC or no need to reverse any ITC? No need to reverse ITC. So, 2 points. First, they don't have to pay GST. Second, they don't have to reverse any ITC. Then, second point. Explain the GST implication for Samsung when it replenishes the distributor stock with a new smartphone. With a new smartphone. Who is sending? Manufacturer to the dealer. Is it supply in the hands of the manufacturer? No. They are replenishing. Replenishing means what? Refilling. That is not a supply. Also, can manufacturer avail ITC? Yes. See the answer for the second part. As per CBSE circular, when manufacturer replenishes defective goods, that is smartphone to the dealer, GST not payable by the manufacturer. Also, such manufacturer not required to reverse any ITC. Then, third point. Discuss the GST treatment for extended warranty provided by Warranty Plus, considering it was purchased at the time of original sale but from a different supplier. Same time different supplier means Separate supplier or the rate applicable to the product? Separate supply. If extended warranty charges is paid to different supplier at the time of purchase of product or later time, it is treated as a separate supply and chargeable to GST at the applicable rate to extended warranty services. Analyze how the GST liability would change if the extended warranty was purchased from Samsung directly at the time of original purchase. Then the rate applicable to smartphone. See the answer. If extended warranty is purchased from the same supplier at the same time of purchase of goods, it is a part of composite supply and GST payable at the rate applicable to such goods being principal supply. Then look into question number 17. So whichever questions we discuss, just put a tick pa. Question number 13 we discussed now. 13, 14, even 15 we completed now. 16 we completed. Look into 17. XYZ Telecom Limited is engaged in providing telecommunication services and is expanding its network by laying new optical fiber cables across various regions. The OFCs are housed within PVC ducts and service or connectivity manholes are installed as nodes in the network to facilitate maintenance and connectivity. The company has incurred significant expenses on purchasing these ducts and manholes. You are required to determine whether XYZ Telecom can claim ITC on the purchase of ducts and manholes used in its OFC network according to the provisions of CGST Act. Come on, can they take ITC on ducts and manholes purchased? Yes, because it is coming under, it is used for construction of plant and machinery, correct? And this will not come under telecom towers or pipelines laid outside factory. Second, explain the rationale behind eligibility of ITC on these items referring to the relevant sections of the CGST Act and a clarification provided in the circular. Generally, blocked credits will come only if it is specifically given or not used in the course or furtherance of business. In the present case, these optical fiber cables are nowhere in the blocked credit and it is used in the course or furtherance of business. That's why ITC is available. That is the rationale. Got it? Discuss whether there are any specific restrictions under 17(5) of CGST Act that would prevent XYZ Telecom Limited from claiming ITC on these purchases. Yes. What are those restrictions? If it is used for telecommunication towers, then ITC not available. Analyze the impact on XYZ Telecom Limited GST liability if these components were instead classified as excluded. If it is excluded from plant and machinery, then it is used for construction of immobile property and ITC is not available. Okay. Next, there is one latest amendment for September 25, which I have not given in the book, but you can make note of it now. That is related to section 16. You write down this in page number 107, some space is there, na? You write down there. Okay, listen. Let me give you the background of this amendment, then I will write and you can make note. Listen. Have you heard of X works price? X works price. That is X factory price. What is X factory price means? The goods are delivered at the factory gate. That is called as X factory price. X showroom price, X factory price, like that you would have seen now. Means the goods are delivered at their place. That is called as X factory price. Okay. Then FOR, like that one price is there. Free on road. Free on road means they will only incur the cost of delivering the goods to your place. That is called as free on road price. These two are two opposite terms. X factory price means the price prevailing at the factory gate. Then who should arrange transportation? Recipient or supplier? Recipient. Very good. Carefully listen. I am the supplier, manufacturer, you are the wholesaler, buyer. Okay. Now, I will tell X factory price means you should arrange for the transportation. Please listen, are you concentrating? So, you should arrange the transportation. So, you send your lorry to my place. You send your lorry to my place. And I loaded the goods in my place. Got it? And the date on which I handed over the goods to the transporter is deemed that you have received the goods and you can take ITC. The concept of deemed delivery is extended in this case. What is the concept of deemed delivery, pa? When the goods are received by the third person on the instructions of the registered person, the day on which the third person has received the goods or services, the registered person also have received the goods or service and they can take ITC, correct? Huh? In this case, who is the third person? Transporter. Transporter. Who is the registered person? Recipient. The day when I hand over the goods to the transporter, it is deemed that you have received the goods and can you take ITC with respect to that? Yes. On which date? When the goods are actually delivered in your place, or the date on which I handed it over to the transporter, the date on which the supplier handed over to the transporter, ITC can be availed. Is it clear? Understood. So write down availment of ITC in case of availment of ITC in case of X works price. X works price, also called as X factory price. Availment of ITC in case of X works price or X factory price. There is a manufacturer. There is a manufacturer and a wholesaler and manufacturer entered into contract with the wholesaler to sell goods on what basis? X factory price. Now, there will be one lorry in the manufacturer's place. Okay. And as on 10/8/2025, as on 10/8/2025, the manufacturer has loaded the goods. The manufacturer has loaded the goods. As on 10/8/2025, the manufacturer has loaded the goods in the lorry of ABC transporters. In the lorry of ABC transporters. Got it? But this lorry reached the wholesaler place, and the goods were unloaded. The goods were unloaded. The goods were actually received. The goods were actually received on 5/9/2025. The goods were actually received on 5/9/2025. Now, tell me when wholesaler can avail ITC? Can avail ITC? Can avail ITC on 10/8/2025 under which concept? Under deemed delivery. under deemed delivery. What is a deemed delivery? The date on which goods are handed over to ABC is deemed that the wholesaler has received the goods. So they can avail ITC as on which date? 10/8/2025, even though the goods are actually received on 5/9. Means 1 month prior itself they will be able to take ITC. Clear? Understood? Now what happened? Say during this journey, okay, during this journey to this person, that is to the wholesaler, during this journey to the wholesaler, the vehicle met with an accident. If goods are lost, during transit, then possible na? If goods are lost during transit, then ITC availed should be reversed. Very good. ITC already availed on 10/8/2025 needs to be reversed. Clear pa? So this is a September 25 amendment. ITC already availed on 10/8/2025 needs to be reversed. Clear? Related to this, they gave one question in RTP, and I have also given one question in the Mighty 50 similar to that, same. So let's do that question. Did you finish making note of this? But it's an amendment for September 25. It was not an amendment for May. It's an amendment for September 25. Look into this. Question number 28. Question number 28. This is actually your RTP question. This is your September 25 RTP question. Ditto. Copy paste. Muscat Motors Private Limited, hereinafter referred to as MMPL, a dealer of motor vehicles. And for your information, we are going to cover entire RTP. All RTP questions I have included in Mighty 50. So therefore, beyond this, you don't have to refer to RTP, etc. Maybe MTPs, if you want to try, you try. But this is minimum bare minimum, these questions you need to. I gave comprehensive questions also, I gave case scenario MCQs also in this. Okay, not just the question and answers. Even the comprehensive questions, last few questions if you see now, like consolidated questions I have given, full big question, the 10-mark questions. The 10-mark questions also I gave, and 5 questions I have given, 10-mark questions. And then 5 MCQs, case scenario MCQs also I have given. That also we are going to solve. And apart from that, in that I have included RTP questions. Then apart from that, 40 questions will be like this 5 marks based questions. I gave entire coverage, all types of questions. Minimum to minimum, this you need to solve and go. Because of the available time, I told you this. So read this question. Muscat Motors Private Limited, hereinafter referred to as MMPL, a dealer of motor vehicles, registered in Udaipur, Rajasthan, has given an ex-work contract to Messrs. Ganesh Traders, registered in Ahmedabad, Gujarat, for manufacturing 10 units of pickup vans. Messrs. Ganesh Traders manufactured the vans and handed them over to transporter on behalf of MMPL. On which date? 29th April. The 29th April is the crucial date. What happened on 29th April, pa? Manufacturer handed over the vans to the transporter and delivery on its part is complete at its factory gate in Ahmedabad. Further, it raised the invoice for all 10 pickup vans on the same day. MMPL has recorded the invoice in its books on the same day. Price of the vans ex factory was 10 lakh each excluding GST 28%. However, the vans were physically delivered by MMPL at its showroom in Udaipur, Rajasthan on 2nd May. What is 2nd May? The date on which they are actually receiving the goods. And the payment was also made on the same day. After the payment, 2 vans got damaged completely in a fire in the showroom in first week of May. And therefore, they were written off in the books in the month of receipt by MMPL. Discuss the availability of ITC on pickup vans to MMPL with reference to the provisions of GST law. In which month MMPL is eligible to avail ITC on purchase of vans and how much ITC is available in respect of the vans. First you need to write about that 16 subsection 2. As per 16 subsection 2, if the goods are delivered to a third person on behalf of the registered person, the date on which the third person has received the goods are deemed to be received by the registered person and the registered person can avail ITC. In the present case, in case of X works contract, when the goods are delivered to the transporter on 29th April, it is deemed that Muscat Motors Private Limited has received the goods and accordingly they can avail ITC in the month of April. However, in the month of May, when the cars got destroyed in the factory, as per section 17 subsection 5, the goods which are destroyed, purchased goods which are destroyed needs to be reversed. ITC needs to be reversed. Is it clear? That is what we need to write here. Please go through the answer once. First you need to write about 16(2)(b). No registered person shall be entitled to the credit of any input tax in respect of any supply of goods or service or both to him unless he has received such goods or service or both. Correct? Condition pa condition. Only when you receive the goods you can take ITC. But there is an explanation. What is that explanation? It shall be deemed that the registered person has received the goods or as the case may be services where the goods are delivered by supplier to a recipient or any other person on the direction of such registered person, whether acting as an agent or otherwise, before or during movement of goods, either by way of transfer of documents of title or otherwise. Further, it has been clarified by the circular that in case of X works contract, the property in the goods can be considered to have been passed to the dealer by the OEM, original equipment manufacturer. Who is the original equipment manufacturer in this example? That Ganesh Traders, correct? Ganesh Traders, upon handing over the said goods to the transporter at his factory gate, meaning thereby the goods can be considered to have been delivered to the registered person through the transporter by the supplier at his factory gate, and the supply of the said goods can be considered to have fructified at the factory gate of the manufacturer, even though the goods may be physically received by the registered person after the transit period. In the given case, the contract between Ganesh Traders and MMPL is X works. Pickup vans are considered to be received by MMPL on which date? 29th April. What is that date? That is the date on which vans are handed over to the transporter, even though they were physically received in the month of May. So initially on 29th April, they can take ITC. What is the price of the van purchase? 10 lakhs into 28%, that is 2,80,000 rupees they can take while filing return for the month of April. Subsequently, after receipt of vans in the showroom, 2 vans were destroyed due to fire and written off in the books. So ITC in respect of the 2 vans needs to be reversed. Total how many vans they purchased? 10 vans. Now 2 vans related ITC means 10 lakhs into 2 into 28%, they need to reverse because of 17.5 blocked credit. Is it clear? See the way in which they have given the explanation. You know what you will do? You will write this alone. Seriously, you will write this only. This paragraph alone you will write. and you will make a complaint that I have written, sir, but they did not give marks, sir. It's a 5 marks question. If at all it is coming, definitely it will come here. September 25 RTP, either for September or Jan, it has to come, no other go, okay. So they will be definitely giving a question like this. But what we all do is that we will write this, but we will miss to write this paragraph related to the law, because of which only we will be losing the marks. We will get 2 marks or 3 marks. When you write fully, then only you can expect the marks also fully. That's why I made you read here, okay. So that is about this particular amendment. Then come back. Take page number 109. Take page number 109. We are left with the last one section, section 18. In that section 18 also 18 subsection 6 already we discussed. So only few subsections are there in 18. Let's complete it quickly, concentrate. 18 subsection 1 talks about availment of ITC on closing stock. In this we have total 4 clauses, 18.1a, 18.1b, 18.1c and 18.1d. I gave it in a chart form, have a look into that. 18.1a, when 18.1a is applicable, a person commenced business on 8/8/2024 and he crossed the threshold limit, he is liable to get registered on 1/10/2024. But when he is liable to get registered? 1/10/2024. Once a person is liable to get registered, what is the time limit within which they need to make application for registration? Within 30 days. So therefore, within 30 days they make an application for registration, that is on 25/10/2024, and the registration is granted on 3/11/2024. Now tell me, logically, from which date they need to pay GST on their outward supplies? 110 na, 25/10 na, 3/11 na? 110. Because 110 itself they are liable to get registered na. So therefore, from 110 they need to pay GST on outward supplies. But how they will be able to make outward supplies? Based on the closing stock as on 39, correct? Sir, today I am making sales means, how I can make sales, sir? Suddenly if I do meditation will come, then I will be having some closing stock yesterday. Using that yesterday's closing stock only today I will be able to make sales. Am I right? But yesterday's closing stock, I would not have taken ITC. Why I would not have taken ITC on yesterday's closing stock? Because I was a unregistered person. Today I am in 110. From today only I will become a registered person. Am I right? So therefore, as on 39, whatever closing stock is there, on that closing stock, GST paid can be taken as ITC now. Got it? What is the closing stock? See the closing stock analysis. Either it will be in the form of raw material or in the form of WIP and or in the form of FG. In that WIP you see how much is the raw material present. In that FG you see how much is the raw material present. So 3 raw materials. What are the 3 raw materials? Raw material as such. Raw material in the form of WIP. How to identify raw material in WIP? Using process costing. Using process costing we will identify, process accounts we will identify how much is the raw material introduced in the process, okay. And raw material in FG, how we will identify? Using bill of material, input output ratio. For every unit of output, how much of raw material is required, like that we will have a bill of material using that, okay. So 3 raw materials we will take ITC. What are the 3 raw materials? Raw material as such in stock, raw material in WIP, raw material in FG. But all these 3 should have been purchased within 1 year prior to the closing stock date. What is the closing stock date? 39. So prior to the 39/2024, within 1 year it should have been purchased. What if it is purchased long back? Can we take ITC on that? No, on obsolete stock and all we cannot take. Only 1 year backwards. What is the intention behind giving this input tax credit? Come on, respond. What is the intention behind giving this input tax credit? For one reason. From today I am paying GST. Then there is a liability. Then using closing stock only I am doing now. Then on the closing stock I should get the ITC, because outward supply is chargeable to GST, so I should take ITC on my inward supply. Are you understanding this? Pa, 20 minutes only, pa. Please focus. We will complete. Okay. Please concentrate. So you sat from the morning. So why in the last half an hour we need to leave that? Just 20 minutes only. Okay. Please come on. Come on. With good energy you listen. So why they are giving the ITC? Because we are going to pay GST from 1st October. Is it clear? And how to avail this ITC? Using 3B? No. We need to file one form. What is that form we need to file? Form GST ITC 1. When we need to file that form GST ITC 1? Within 30 days from the grant of registration. When you got the registration certificate, 311. So within 30 days, or it can be extended for a further period. By filing ITC 1, you can take ITC. Whether this ITC 1, someone should certify. Yes. If the ITC does not exceed 2 lakhs, self-declaration. If the ITC exceeds 2 lakhs, CAR, CMA certificate. Is it clear? And sir, any matching is required? No, because at the time when you purchase, you were an unregistered person. So the supplier will not be able to report it in GSTR 1. So it will not come in 2B. Even though it is not coming in 2B, can we take credit? Yes. Matching is not required in this case. Is it clear? Now tell me, pa, when 18(1)(a) is applicable? Based on this chart, a person is liable to get registered and he made application for registration within 30 days. He can avail ITC on. What is that? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, as on or before the date he is liable to get registered, and that stock should have been purchased within 1 year prior, and this ITC can be availed by filing form GST ITC 1 within 30 days from the date of certificate of registration, and this form should be certified by CACMA if the ITC claim exceeds 2 lakhs. And is matching required or not required in this case? Not required. I want you to go to 18(1)(b), next chart, 18(1)(b), and read and tell me what is the difference between 18(1)(a) and 18(1)(b). 18(1)(a), you are liable to get registered and you made application for registration, but 18(1)(a), liable to get registered, made application within 30 days. 18(1)(b), voluntarily you made application, but rest of the information is same, no change. Here also closing stock before the date of registration, correct? There closing stock before the date you are liable to get registered. Here closing stock before the date you got registered, registration certificate, same, within 1 year prior, raw material as such, raw material in WIP, raw material in FG, we will be able to take ITC within 30 days after registration, matching not required, GST paid availed as ITC, if it does not exceed 2 lakhs self-declaration, exceed 2 lakhs CACMA certificate, okay. Then go to 18(1)(c), tell me what is the difference you can find here, 18(1)(c), from where to where? Composition scheme to normal scheme. Previously you were under composition scheme and now you are going into regular scheme, okay. And when you were under composition scheme, can you take ITC on inward supplies? No. Now when you are going into regular scheme, you have the closing stock, correct? On that closing stock, whatever GST paid can be taken as ITC. But what is the speciality here compared to previous two? Capital goods also we are able to take credit, see there. So 110/2024, a person migrated from composition scheme to regular scheme, and before that date, that is 39/2024, we need to see the closing stock, and that date closing stock, what should be taken? Raw material as such, raw material in WIP, raw material in FG, as well as capital goods. But capital goods full credit they cannot take. For capital goods, what they need to do? They need to reduce 5% for every quarter or part thereof. From which date to which date? From the date of purchase till the date of conversion. So GST paid minus. This is the second place where we are learning minus 5%. Already we learnt in 18(6), correct? So GST paid minus 5% for every quarter or part thereof. From which date to which date? From the date of purchase till the date of conversion. And how to take this credit? Same form, ITC1. And when that ITC1 should be filed? Within 30 days from the date you are migrating to regular scheme. Again, that form also should be certified by CACMA if the ITC exceeds 2 lakhs. Yes. Okay. And one very, very important point, matching is required. Matching is required. How, sir? We are under composition scheme, na, sir, at that time. Correct. But you are a registered person only, na. Even though you are under composition scheme, but you are a registered person. So give your GST and details and ask the supplier to report in GSTR1. So it should come in 2B. For 18(1A), 1B, matching not required. But for 1C, matching is required. What is the difference that you can find in 18(1C) compared to 18(1A), 1B? Point number 1. Capital goods we can take credit after reducing 5%. Point number 2. Matching is required here. There matching not required. Point number 3. There unregistered person now only getting registered. Here already that person is a registered person. Clear? Go to 18(1D). What is 18(1D)? Difference between 18(1C) and 18(1D). 18(1C) is composition scheme to normal scheme. 18(1D) exempted supplies to taxable supplies, but rest of the information is same. Copy paste, correct? Here, can we take ITC on capital goods also? Yes. Matching required. ITC 1 within 30 days after exempted became taxable. So now, what is the difference between 18(1A), 1B, 1C and 1D? Situation difference is there, correct? 18(1A) when applicable, you are liable to get registered and made application for registration within 30 days. 18(1B), voluntarily you got registered. 18(1C), migrated, registered person migrated from where to where? Composition scheme to normal scheme. 18(1D), registered person exempted supplies became taxable. And what is the meaning of closing stock on which they will take ITC? In case of 18(1A), 1B, inputs as such in WIP, in FG, matching here, input in stock, input in WIP, input contained in FG, capital goods, but matching is, but for capital goods how much can be taken? After reducing 5% for number of quarters or part thereof from the date of purchase till the date of migration or conversion, correct? On which date closing stock should be taken? In case of 18(1A), before the date you are liable to get registered. 18(1B), before the date you got the registration certificate. 18(1C), immediately before the date of migration. And 18(1D), immediately before the date of such conversion. 18 subsection 2 time limit. What is the time limit within which this closing stock should have been purchased? Respond. 1 year prior to the closing stock date, the inputs and capital goods should have been purchased. Is it common for capital goods and inputs also? Yes. The above closing stock, including capital goods, should have been purchased within 1 year. ITC with respect to GST paid on inputs can be availed as ITC, but for capital goods only we need to reduce. And all these ITC how we will take? Using GST ITC 1. And how many days? Within how many days it should be filed? Within 30 days or such extended time by the commissioner. This declaration shall be certified by a practicing CRCMA if the claim of ITC exceeds 2 lakhs. So we completed 18(1) and 18(2). The next section is 18(3). When 18(3) will be applicable? Whenever there is a transfer of business, whenever there is a transfer of business with transfer of liabilities, means the transfer of business should be as a going concern. When I am transferring my business to you, in my business, whatever ITC is there, that ITC also gets transferred to you. Is it clear, pa? Read there. When there is a change in constitution of a registered person on account of sale, merger, demerger, amalgamation, lease or transfer of business. But all these things should be with specific provision for transfer of liabilities. Then the said registered person shall be allowed to transfer the ITC which remains unutilized in his electronic rate ledger. I am transferor, you are transferee. In my electronic credit ledger, some ITC is there na, that can be transferred to your electronic credit ledger. Understood? So, which remains unutilized in the electronic credit ledger to such sold, merged, demerged, amalgamated, leased or transferred business. But for doing it, I need to file one form. What is that form? ITC 2. And whether it should be certified by CACMA? Yes, always, whatever may be the amount. ITC 1 will be certified by CACMA only if the amount exceeds 2 lakhs. But this ITC 2 always. Transferor furnishes details of such transaction on sale of business in ITC 2 electronically in the common portal with a request to transfer unutilized ITC in credit ledger of transferee. And there is one certificate also required. What is that certificate? CACMA certificate to be furnished and the transfer details to be accepted. Why that certificate is required? That this business is really transferred. It's not just a book entry. Is it clear? Not just a book entry, really the business has been transferred. Sir, in case of demerger, what will happen, sir? One business, say for example, AB Limited is there. AB Limited got demerged into A Limited and B Limited. Okay. Then, how the ITC will be transferred? We need a base, correct? See, if one company is only there, then full amount we can transfer. But there are two entities. Some base is required. What is that base? Net assets. So, we need the assets of A Limited and assets of B Limited. In that assets ratio, for example, 100 crores is the assets of A Limited, 50 crores is the assets of B Limited. In 10:5 or 2:1 ratio, the ITC will be transferred. Is it clear? Read that. In case of demerger, credit shall be transferred to the new entities in the ratio of net assets, whether ITC availed or not on such assets, post demerger. Sir, in case when there is a death of sole proprietor died, his son has taken over the business. Now, can the son continue with the same GSTIN? No, because GSTIN is connected to permanent account number. As the father expired and son is taking over, son will have a different permanent account number. So, therefore, son has to obtain a new registration. And he only should log in with the GSTIN of his father and transfer the ITC. So, whether 18(3) is applicable in case of death of sole proprietor? Yes. Transfer or change in ownership will include transfer or change in ownership due to death of sole proprietor. And next, one more important condition is that transferor and transferee should be in the same state. Okay. And next point, listen carefully. So far, I have a single registration. Now that single registration is converted to multiple registrations. That is, within the state, if I have more than one place of business, I can either go for single registration by showing one place as my principal place of business and other place as my additional place of business, correct? Or I can get separate registration for each place. Example, in Tamil Nadu, I have Chennai, Madurai, Coimbatore and Trichy as the place of business. Now I can show Chennai as my principal place of business and others as my additional place of business and get only single registration. Suppose if I have to go for separate registrations, is it possible? Yes. For each and every place of business, I can go for a separate registration. Is it clear? And separate registration is allowed with respect to multiple places of business. But so far I have been under single registration. Now I am going into separate registration. Means all ITCs accumulate in one registration. Can I transfer it to separate registrations? Yes. For that the form will be ITC 2A. Read it. When a single registration gets converted into multiple registrations within the state, then also ITC against the single registration can be distributed to multiple registrations by filing form GST ITC 2A. In what ratio pa I need to transfer? Again, like demerger only na. What ratio? Assets ratio on the date of new registration. Whether this ITC 2A to be certified by CACMA? No. Only ITC 2 should be certified by CACMA. ITC to be certified by CACMA irrespective of the amount of ITC. However, 2A is not required to be certified by CACMA. In case of demerger, we need to see the balance in ITC as on the date of transfer, and we need to see the ratio of assets on the date of demerger. Carefully listen. Today I am transferring. So today ITC balance I will see. Demerger happened 6 months before. So before 6 months, what was the assets ratio that I will take, and today I will transfer the ITC. Is it clear? Then next section, section 18.4, read with section 29 subsection 5, reversal of ITC on closing stock. Here what will happen? In 18.1C1D we avail the ITC on closing stock. This is exactly opposite of 18.1C1D. What is 18.1C? Composition scheme to normal scheme. 18.1D, exempt supplies to taxable. Now reverse. Normal scheme to composition scheme. Taxable supplies to, very good. Then in that case what we will do? We will reverse the ITC, avail the ITC. Reverse the ITC. What is the ITC that we need to reverse? On inputs as such held in stock, on inputs in WIP, on inputs in finished goods. Clear? Even on capital goods also. Why? Because while availing ITC, you availed on capital goods also, na? For 18.1C1D. Here you reverse for capital goods. How much ITC you need to reverse for capital goods? Remember? ITC avail divided by 60. What is the logic of 60? The life of the capital goods is 5 years. So divided by 60 months into balance useful life. Tell me when this reversal of ITC in closing stock will be applicable. 3 places pa. Normal scheme to composition scheme. Taxable supplies to exempted supplies. Then cancellation of registration. In these 3 cases, we need to see the closing stock date. As on the closing stock date, whatever is the inputs in WIP, inputs in FG, how much ever ITC you avail, that much you need to reverse. But capital goods, how much you need to reverse? ITC avail divided by 60 months into balance life, that you need to reverse. Sir, what if I purchased it before 1 year? Even then should I reverse? Yes. While availing the ITC, it should be purchased within 1 year prior. But here even if you purchase it 3 years before, 4 years before, also reverse. Is it clear? What if I don't have invoice? Oh, you don't have invoice. You take a market value. Today's market value you take and reverse. Are you getting this? Matching required or not required here? No. While availing only matching. While reversal, no matching. See this. Inputs and capital goods can be purchased any time on which ITC is availed. If ITC is not availed, such inputs and capital goods, then reversal shall not arise. Correct? Sir, first of all, on these inputs, if the ITC is availed, then only you will reverse, sir. If you have not availed ITC, you will not do any reversal. What if capital goods are purchased before 5 years? Then there is no balance life now. ITC availed divided by 60 months into balance life. What if it is purchased 5 years before? Then there is no balance life, nothing to be reversed. Is it clear? So if capital goods are purchased before 5 years on which ITC is availed, then reversal shall not arise. If invoice is not available, tell me, if invoice is not available, what we should do? Then market value can be considered. Whenever you take market value, you need to get a CACMA certificate. And for reversal of ITC, what is the form that is required? ITC 3. ITC 3. For availment of ITC, ITC 1. For transfer of ITC, 2. For single registration to multiple registration, 2A. For reversal of ITC, ITC 3. And whether this ITC 3 is required to be certified by CACMA? Yes. When? If the market value is substituted with invoice value. What will happen if there is any balance in ITC? Okay, I have 1,50,000 as balance in ITC. These inputs, capital goods, everything I reversed. Still I have 50,000 balance. What will happen to that 50,000? Lapsed. Gone. And suppose I have to reverse 1 lakh, but the balance is only 80,000. Then the 20,000 I have to pay. Stupidity. See this. If there is any balance in ITC after reversal, that will be lapsed. If there is any shortfall for reversal, then the shortfall shall be payable using cash ledger. And we need to make this computation separately for CGST, SGST and IGST. With this, we completed input tax credit, except for one circular related to warranty parts, etc. But that also we discussed already. This is just the illustration which we are having, and that we will see in the next class, no issue. And literally we completed full input tax credit today. Today we completed 2 chapters. Happily clap, we completed. So introduction and input tax credit. Now what is your work today? You need to go home, rest for some time, and then don't revise but solve the problems. While solving the problems, when you are unable to recollect, you check the provision. Is it clear? Don't revise, because if you revise now, you will get sleep. Seriously, you will get sleep. But you take a question and you see the answer, work out the answer. While working out the answer, you will not get. Then check the provision in this book. Okay. So we have made this as a very, very small compact book. Seriously, everything is there in this book. And lot of efforts I have made in preparing this book. And this book really sufficient. Don't have any doubt. Is this sufficient or what? Usually you see lot of big books. And after seeing big books, you feel like, whether it will be working out for me or not, like that. Many students have followed this book and they were successful in the last attempt. If you want, you can just check with them. And at this moment, for revision purpose, this book is really sufficient. Beyond this, nothing is required. Is it clear? Thank you. We'll meet tomorrow. Tomorrow timing will be, wait. Tomorrow timing will be 9 o'clock to 6 o'clock, same timing, no change. The agenda for tomorrow is that, tomorrow we will complete this balance portion, just small portion, half an hour it will take, not more than that. And then we are going to cover payment process, returns, TDS, TCS, accounts and records. This is the agenda for tomorrow, okay. So please come prepared. Thank you.